We're committed to supporting our communities, teaming up with businesses large and small, improving our roads and schools, investing in law enforcement and our environment. Together, we're funding a better quality of life. We're the California State Board of Equalization. The BOE was created in 1879 to equalize property tax assessment practices throughout California. Our responsibility has grown quite a bit since then. Today, the BOE administers more than 30 taxes and fees that provide 1/3 of all the revenue generated in our great state. And we're efficient. More than 99% of the money you contribute supports services and programs that benefit all of us in California. When you drive down our many highways, see a police officer helping someone in need, or enjoy a walk along a pristine beach, think about what makes it possible. Whether you're a business owner, making a purchase, or just filling up your gas tank, your contributions are important to our state's economic health. And the greatest part, we're doing it together. We're ready to work with you. Take advantage of our free seminars, helpful classes, instructional videos, and mobile applications. Also, use our online services. It's easy to do business with us from anywhere, at any time. Our partnership equals success. Learn more at boe.ca.gov. Together, we're supporting our communities and funding a better quality of life.
Are you planning on traveling out of the country soon? Finally taking that dream vacation? Or is your company sending you overseas on business? When traveling, a lot of us like to bring something home. Maybe a lot of things. But there is something you should know about your foreign purchases. You may owe use tax. Hand-carried items or purchases you ship into California could be subject to use tax. Use tax is similar to the sales tax you pay when making purchases in California. Typically, use tax is owed when you buy from out-of-state or online sellers where sales tax is not charged. Or when taking a trip abroad. It's easy to pay use tax. Just report and pay it on your state income tax return. The revenue collected from use tax helps pay for California services like public safety, healthcare, and schools. So, have a great time, but don't forget to keep track of what you buy because you may owe use tax. Now you're ready for that next big adventure. To learn more, visit boe.ca.gov. Paying your use tax. Good for you, good for California.
It's easy to buy things online these days, but did you know you may need to pay tax on those items?
Really?
It's called use tax. And just like sales tax, the use tax you pay to California will help fund important services like public safety, healthcare, and schools. But how do you know if you owe use tax? When you buy things online, look to see if you were charged tax when you checked out. If you weren't, you may owe use tax. It's easy to figure out how little you may owe. For most purchases, you don't even have to save your receipts. Just use this convenient use tax table, available in your income tax instructions. Find your adjusted gross income to see how much you may owe, and enter that amount when preparing your state income taxes. It's that simple. No looking through files and no hassles. You've paid your use tax for the whole year.
That was easy.
Paying your use tax. Good for you. Good for California.
We're committed to supporting our communities, teaming up with businesses large and small, improving our roads and schools, investing in law enforcement and our environment. Together, we're funding a better quality of life. We're the California State Board of Equalization. The BOE was created in 1879 to equalize property tax assessment practices throughout California. Our responsibility has grown quite a bit since then. Today, the BOE administers more than 30 taxes and fees that provide 1/3 of all the revenue generated in our great state. And we're efficient. More than 99% of the money you contribute supports services and programs that benefit all of us in California. When you drive down our many highways, see a police officer helping someone in need, or enjoy a walk along a pristine beach, think about what makes it possible. Whether you're a business owner, making a purchase, or just filling up your gas tank, your contributions are important to our state's economic health. And the greatest part, we're doing it together. We're ready to work with you. Take advantage of our free seminars, helpful classes, instructional videos, and mobile applications. Also, use our online services. It's easy to do business with us from anywhere, at any time. Our partnership equals success. Learn more at boe.ca.gov. Together, we're supporting our communities and funding a better quality of life.
Are you planning on traveling out of the country soon? Finally taking that dream vacation? Or is your company sending you overseas on business? When traveling, a lot of us like to bring something home. Maybe a lot of things. But there is something you should know about your foreign purchases. You may owe use tax. Hand-carried items or purchases you ship into California could be subject to use tax. Use tax is similar to the sales tax you pay when making purchases in California. Typically, use tax is owed when you buy from out-of-state or online sellers where sales tax is not charged. Or when taking a trip abroad. It's easy to pay use tax. Just report and pay it on your state income tax return. The revenue collected from use tax helps pay for California services like public safety, healthcare, and schools. So, have a great time, but don't forget to keep track of what you buy because you may owe use tax. Now you're ready for that next big adventure. To learn more, visit boe.ca.gov. Paying your use tax. Good for you, good for California.
It's easy to buy things online these days, but did you know you may need to pay tax on those items?
Really?
It's called use tax. And just like sales tax, the use tax you pay to California will help fund important services like public safety, healthcare, and schools. But how do you know if you owe use tax? When you buy things online, look to see if you were charged tax when you checked out. If you weren't, you may owe use tax. It's easy to figure out how little you may owe. For most purchases, you don't even have to save your receipts. Just use this convenient use tax table, available in your income tax instructions. Find your adjusted gross income to see how much you may owe, and enter that amount when preparing your state income taxes. It's that simple. No looking through files and no hassles. You've paid your use tax for the whole year.
That was easy.
Paying your use tax. Good for you. Good for California.
Are you planning on traveling out of the country soon? Finally taking that dream vacation? Or is your company sending you overseas on business? When traveling, a lot of us like to bring something home. Maybe a lot of things. But there is something you should know about your foreign purchases. You may owe use tax. Hand-carried items or purchases you ship into California could be subject to use tax. Use tax is similar to the sales tax you pay when making purchases in California. Typically, use tax is owed when you buy from out-of-state or online sellers where sales tax is not charged. Or when taking a trip abroad. It's easy to pay use tax. Just report and pay it on your state income tax return. The revenue collected from use tax helps pay for California services like public safety, healthcare, and schools. So, have a great time, but don't forget to keep track of what you buy because you may owe use tax. Now you're ready for that next big adventure. To learn more, visit boe.ca.gov. Paying your use tax. Good for you, good for California.
Good morning. We are ready to begin State Board of Equalization meeting. Today, June 20th. It is my birthday, and I want you all to cheer. 66, Social Security come my way. Anyway, thought I'd start out with a little lightheartedness and also to let you all know how much I've appreciated working with you. I'm really sorry that we're being split apart. I'm just going to say it up front. I've enjoyed the professionalism. I've met a lot of great people. I hope we continue to remain in contact. I wish you all the very best, the absolute very best. You know, I've met a lot of really wonderful professional people. And I'm sure going on with my new adventure, I will get more acquainted with some of those that we are now working with, and just want to wish you all the best and thank you very much for the opportunities we've had, and let's hope we all do fare well in the future. So thank you very much. Ms. Richmond, will you please call the roll to determine that quorum is present?
Chairwoman Harkey.
Here.
Mr. Runner.
Here.
Mr. Horton.
Here.
Ms. Ma.
Here.
Ms. Stowers.
Here.
Okay. We are now hereby called to order, and we have a Pledge of Allegiance, and we do not have anyone to say it, and so I would like to get our head CPA, if you wouldn't mind coming forward. Yes. Come on forth, Julia. Julia.
Finley. Miss Finley.
Yes, Miss Finley. The last name I was missing. I haven't talked
Miss
to you in a
Finley.
while, but Miss Finley, come forward and lead us in the pledge. We really appreciate all you've been able to do. Thank you.
I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Yeah, Julia got thrown into the fire, and she's done a great job. And she keeps very quiet, as you know, because I really couldn't, the last name wasn't coming to me. Okay. Now, Ms. Richmond, please introduce our first item.
Our first item on today's agenda is item B, corporate franchise and personal income tax appeals hearings. Item B1, they are still signing in, so we will start with item B2. Charles Harper, please come forward. Board Proceedings has received contribution disclosure forms for today's hearings from the parties, participants, and agents. All forms were properly completed and signed, and no disqualifying contributions were disclosed. All parties, participants, and agents are on the alpha listings provided to your office. Each person sitting at the table will be asked to introduce themselves, and if necessary, the affiliation with the taxpayer for the record. 10 minutes is allocated for the taxpayer's opening presentation, followed by 10 minutes for the franchise tax board presentation, and 5 minutes is allocated to the taxpayer for rebuttal. Chairwoman Harkey.
Thank you. I'll let them get situated here. It seems like we had to pull up some extra chairs. Perhaps we could keep one of the staff over here. It might make it a little less crowded, unless you have your data right there handy. Okay, you're good?
We're good.
Mr. Harper can't get his chair out.
Good morning.
Good morning. Okay. Welcome to the State Board of Equalization. Please introduce yourselves for the record, each one of you, and then proceed with your part of the 10 minutes for your case. Thank you.
My name is Charles Harper.
My name is Roy Crawford, the law firm of Dermott, Will, and Emery, representing Mr. Harper.
I'm Dennis Rutosky, and I'm representing Mr. Harper. I'm an attorney at my own firm, the Rutosky firm in Orange County.
Thank you. Okay, Mr. Harper and team, will you begin?
This is actually a a single issue case. The issue is whether the stock that Mr. Harper sold was qualified small business stock and therefore eligible for the partial capital gain exclusion. I think there's no dispute that each of the elements that are necessary to qualify for qualified small business stock treatment is present, with the question of when his stock was originally issued. The company, Sierra Monolithics, at the time of its reorganization in 2000, was really a small company. It had just a few employees. It had under the 50 million threshold for assets, and all of its activities were in California, so there's no question about whether there's 80%, whether substantial, where the activities are in California or in other states. And the real, as I said, the real issue is what was the nature of this reorganization in 2000, and why it is that we contend that the stock that was sold was issued in the reorganization in 2000. I'm going to have Mr. Harper speak to that because he's the guy that went through it, and he's the most authoritative person of all on this. And Dennis Tosky here will be available to comment and answer questions on the audits of the two other shareholders of the company that were whose audits that he handled, Dr. Lau and Dr. Lau's son. And so first, I just turn it over to Mr. Harper.
Okay, thank you. My name is Charles Harper. I was the CEO and originally the CEO and founder of Sierra Monolithics. As we know, the Qualified Small Business Statute was meant to encourage investment in small businesses. Sierra Monolithics was incorporated in 1986, and it was acquired in 2009 for $180 million. What we have here is kind of a tale of two companies. The 1986, what I call the founder startup, and then the 2000, which was the venture-backed. In 1986, my Dr. Lau and I, we founded Sierra, and we had left major aerospace companies, and we started up, spent 2 years in our garage, just starting a business. And then 1988, we got our first contract for about $50,000. But at that time, we had essentially mortgaged our homes. I mean, as a startup, you mortgage homes, maxed out the credit cards. Luckily, we didn't go through any divorces at the time, but we were quite fortunate there. But for the next 10 years is this 1986 company. So what we ended up doing, our max revenue is about $4 million. So we could barely get past $4 million. So we said, how do we increase our sales? We were roughly less than 20 people through a 10-year time frame. And so we applied to the 8A program, the Minority Small Business Program. We got certified in '89. We were there for 9 years through, but the revenue still didn't change. We actually wrote a bunch of SBIR, Small Business Innovator Research projects, trying to get our revenue to grow. Revenue still didn't change past $4 million. So we were doing what we call design for hire. So we did some design services, and we were doing design. So we designed for, probably most of you know, the unmanned air vehicle for General Atomics. We designed, this is one of the modules for the Predator. Every Predator that flown, this is created for the Predator, General Atomics, $1 billion business. But every Predator that's flown today, we designed this. This little company with less than 20 employees. Raytheon is another one for an F-18. This is a compressive video detection used on the radar warning receiver. So this, again, that's a $100 million aircraft. this is probably, it's created several hundred millions of dollars for Raytheon, as well as the number of people that it employed. But we were also doing what's called design services, and this is a John Deere tractor. It's a GPS receiver that we designed for John Deere tractor as services. Now, John Deere has created a billion-dollar industry out of this, but for us, we were still at $4 million in revenue, 20 people, through 10 years. So for businesses have to grow. If you don't grow, you'll die. So it's kind of, at least you can have a mama papa shop and just continue to grow, but what we wanted to do is grow. So the change happened as we were looking at how do you grow a business, and one of the things, we looked at acquisitions of companies, acquisition of small businesses, and they were all venture-backed, because one of the things that they ended up doing is they were what we call the fabless semiconductor companies. And so we went out and went out to the venture capital community and raised some money. But one of the things that came with it is the investment of, I think we ended up with $27 million over a 3-year period. One of the things came the establishment of a fabless chip company to do design, development, manufacture of integrated circuits. Now, if I look at what's called an integrated circuit, this is a wafer. So it went from what we look at this thing or this, and we go to a wafer. There's thousands. It goes to this little chip. You can see this little thing. But this is what you design. They saw these up, and it's probably about 1,000 of those small chips on here. You could actually end up creating one of these today out of this. So we became what's considered a fabless chip company. And by taking that little chip here and putting it in the package, what we've created, went into Cisco, Juniper, for all the 40 gig. It was the first generation of 40 gig products. But with the VCs, the problem with it, you take money, there are consequences, and that was the restructuring and recapitalization of the company. One of the things, they issued 2 types of stock, preferred stock, as well as common stock. So we went from an organization in 1986, 300 shares, to 41 million. And in 2000, there was complete restructuring, and that included 32 million common stock and 10 million of preferred, as well as stock options. But the issue really became one of the term sheet that we had to sign. And first of all, there were liquidation preferences. So liquidation preferences meant that the VCs would receive 3x before we got a thing. So let's say, for instance, we sold the company for $75 million. 3x times the $25 million that they put in, they would actually, the shareholders, a common stock shareholder would get 0, basically. So, I mean, you start up a company from 1 million when we started in 2000, and then fortunately we were able to grow up to roughly about 45 million. Another item, dividend rights. You have to pay dividend rights. They got 8%. And third, redemption rights. Now, the redemption rights was something that you understand. The redemption rights meant that they could, at any time, recall their money, meaning that we had already raised 25 million, so they could easily have come in and requested their 25 million back. If they had done that, there was no business anymore. And they had within our termship, that was March 2004. Voting rights, anti-dilution, more critically, the board of directors. When we started in the 1986 company, we had a 5-person board, 3 founders and 2 independents. When the venture capitalists came in with investment, we went to 7 board, 3 from the VCs, 3 from the common, 1 CEO that was appointed by the VCs. And what happened then, the founders essentially were relegated to employee roles. We were not necessarily founders. I mean, you had common stock, but you really were relegated to an employee. So what had happened, so they hired a new CEO. I became chairman of the board with no operational responsibility. So the CEO was told first to cancel all of these programs. Cancel all of these. We don't want to do any business with defense. We only want to focus on the commercial. So you got to build up an executive VP team, including operations, engineering, manufacturing, purchasing, sales. So the first year, the CEO spent the $15 million that we raised. And we had no control, so the investors could have shut down the company at that time. They decided, okay, Charles, we'll give it one more shot. We put in another $13 million, which came up to be $27.2 million. But the anti-dilution provision kicked in, which meant that if you raise money at a lower valuation, we raised initially at $30 million, we raised the second amount at 22, that meant we gave them 21 million shares. So here's a company that started out with 96%. We ended up with 50% at the end of the second round, the Series B. We were at 21% as founders, with the venture capitalists over 50. So we hired a second CEO was hired in roughly 2003. This CEO went through 8 out of the 10 million. So we were in really bad shape at that time. We only had $2 million in the bank. And so all the time and the investments that we had made as a company was going out the window. And so the VCs told us to start laying off people. We laid off about 30% of our people. And we got to a point that we weren't spending any money. But luckily at that time, the SBIR program that we were involved in, we got a phase 3. And that phase 3 actually gave us, when they invaded Iraq, that phase 3 here was this module that we had a $15 million phase 3 out of Special Operations Command. That was the lifesaver. And this one actually, it was used all over in Iraq, but this actually caught a bullet. This is kind of, they use this, call this American Express, because an AC-130 gunship identifies that particular individual on the ground, identification friend or foe. So all of the special ops guys would carry this around. But that actually ended up saving us, because then this marketplace for 40 gig optical took off. So that created for Cisco, for Juniper, for AT&T, Verizon, very high speed. This is this chip. We were sole source around the world. We created a $1 billion business. This one chip created a $1 billion business for Cisco, for Juniper, AT&T, Verizon, NTT. So this technology company, we started to really significantly grow. Then they brought in a third and a fourth CEO. So I had 4 CEOs over a period of time. But luckily, we were fortunate enough for the business to grow. We didn't have control over the board, but the business actually ended up growing. We were actually scheduled to go public. So in 2008, we had filed our S-1 to go public. So this is kind of from the investment, I mean, the qualified small business stock, from the investment in small businesses, this is kind of what we consider, a success story. But it did not go with its own set of perils. I mean, we were dependent, but the investment made sense. So we were scheduled to go public, and as you know, in 2009, Goldman Sachs was going to take us out. The market was not favorable at that time, and so we offered the company up for sale. We got 8 term sheets, and we selected a California. We actually down-selected the 2 companies in California. One was called Interseal in Northern California, and Simtech, and we sold to Simtech for $180 million. So in closing, the gain from the sale of Sierra Monolithics did allow startup to proceed. We grew from less than $1 million in 2000 to over $45 million. And then we actually even grew, when it got acquired, we were up to $150 million in revenue, quite substantial. So that actually allowed me, I'm CEO of another startup that we're working on what's called 5G, which is going to create the next generation of 4G. We are one of the smallest companies in the world that's really doing this today, and that's going to create, again, we consider thousands of jobs and $1 billion of revenue for companies. So this gain from the sale of the startup, now we're not doing venture capital anymore. This is my company. So this is just from the result of the 23 years of hard labor and that we had with Sierra Monolithic. So that's kind of, I wanted to at least to present this as kind of the story on where we started and where we ended up. Sorry, I probably exceeded my 10 minutes.
I'll take another 30 seconds. We filed an opening brief, and the opening brief has all the basic documents attached to it. You'll see that the shares that they got in 2000 were part of this reorganization. There's an amended and restated articles of incorporation, and there's a host of agreements that all are in exhibit, and they show that reorganization was at the beginning of the new entity. Their shares that came out of the reorganization were exchanged for really what was the going concern value of the workforce. That's what, and that's the reason they got shares. The venture capitalists put in money, and they got more shares. But the key is that it was a new adventure. It was, the investment was super much at risk, as the file shows. At any time during the first several years after the investment, their interest was totally wiped out. Thank you.
Thank you. Thank you very much. Okay, now we'll go to the department. Please introduce yourself. For the record, you have 10 minutes. Thank you.
Good morning, Madam Chair and members of the board. My name is Richard Tay, and this is Chiro Immordino for the Franchise Tax Board. The issue in this appeal is whether Mr. Charles Harper, the appellant, is entitled to exclude 50% of his gains from the sale of stock in 2009. The appellant was one of the founders of Sierra Monolithics, Inc., which I'll refer to as SMI. In 2009, the appellant sold SMI stock, and on his 2009 tax return, the appellant reported his gain from his sale of SMI stock in the amount of $10 million. It took an exclusion of $5 million pursuant to the federal statute regarding qualified small business stock, or QSBS. On his California income tax return, the appellant took the same exclusion. Although the California Revenue and Taxation Code does not conform to the federal QSBS statute, in 2009, California had a statute with similar provisions. The QSBS statute allowed taxpayers to exclude 50% of their gain from the sale of QSBS. To take the exclusion, taxpayers had to show that the stock they sold met the requirements set forth in the QSBS statute. So in this case, for the appellant to exclude 50% of his gain from the sale of SMI stock, the appellant must show that the SMI stock met the requirements of the QSBS statute. The appellant has failed to do so. Although there are many QSBS requirements, the ones pertinent to this appeal are the following. The stock had to have been acquired at its original issuance after August 10, 1993, and the company that issued the stock must have been a C corporation for substantially all of the taxpayer's holding period. Now, these two requirements are separate and independent requirements, and the failure to satisfy any one of them would disqualify stock from QSBS status. The appellant's SMI stock did not meet either of these two requirements in 2009. It is uncontroverted that SMI issued 100 shares to the appellant in 1986, which is well before the required date in 1993. And based on this fact alone, the appellant's SMI stock failed to meet the QSBS requirements. Additionally, the appellant's SMI stock also was not a C corporation for substantially all the taxpayer's holding period. It is uncontroverted that SMI was an S corporation from January 1st, 1989 until it filed as a C corporation on October 20th, 2000. Since the appellant sold his SMI stock in 2009, SMI was a C corporation for about 49% of the appellant's holding period, which is far less than the substantially all requirement in the statute. The appellant's argument is that his SMI stock was QSBS because it should be treated as if the appellant originally acquired the stock in 2000. In 2000, SMI conducted a corporate restructuring and authorized a stock split. The appellant contends that the corporate changes it implemented were so significant that the stock generated from the stock split should be treated as originally issued stock that the appellant acquired in 2000. However, the appellant's position is contrary to well-established law. The law with regard to stock splits is clear. The stock acquired in the stock split retains the same holding period, including the acquisition date, as the original stock. A stock split is a non-taxable event because there's no realization of gain, a legal conclusion that harkens back to Eisner v. Macomber. A Essentially, a taxpayer has not made any new investment or received any accretion of wealth. There's a continuation of the same investment, and so it makes sense for the taxpayer stock from the stock split to have the same holding period as the original stock. And so the appellant's SMI stock, although most of it was acquired via stock split in 2000, would have been treated for tax purposes as acquired on the same day the appellant acquired his original 100 shares in 1986. But also, the QSBS statute shows that the appellant's SMI stock should be treated as having been acquired by the appellant in 1986. Subsection F of the statute states that stock acquired from the conversion of other stock would be treated as being held for the same period that the original stock was held. Thus, all of the appellant's SMI stock would have been treated as if it were held the whole time the appellant held the original stock, which starts in 1986. Also, subsection H states that stock received in exchange for other stock is treated as if it had been acquired on the same date as the original stock. Thus, based on the QSBS statute and the well-settled law on stock splits, the appellant's SMI stock should be treated as having been acquired in 1986, and so it's not QSBS. Now, the appellant relies on Legal Ruling 428, a withdrawn legal ruling that applied to a repealed statute. Legal Ruling 428 does not apply because the ruling analyzes a repealed statute that is very different than the applicable statute in this case. Although both statutes address QSBS, the language of the statutes are very different. The old statute, which was repealed in 1987, did not contain the requirements that QSBS needed to be acquired at original issuance and did not address stock conversions. However, the new statute, which applies in this case, has language that directly addresses those situations and supports the respondent's position. Thus, the new statute that applied in 2009 rendered Legal Ruling 428 irrelevant and does not apply to this case. So the appellant's position is unsupported and contrary to good legal authority. But even if your board finds that the appellant's acquisition date was in 2000, the appellant's stock is still not QSBS because of an additional requirement in the QSBS statute that the stock had to have been acquired in exchange for money or property, which doesn't include stock or as compensation. A stock split is not an event that involves the acquisition of stock in exchange for money or as compensation for services, and so the appellant's stock failed the QSBS requirement. Finally, the appellant argues that the respondent should accept his position because it accepted QSBS treatment for another founder of SMI. The respondent is aware of only two other SMI founders. For one founder, the respondent has examined the QSBS issue and disputed the founder's position. This dispute is also currently on appeal before your board. The appellant recently provided information about the other founder, Mr. Bineg Lau. Mr. Lau gifted some of his SMI stock in 2007 to his son, Richard Lau, and both he and his son sold their SMI stock in 2009. The respondent's auditor examined the QSBS issue for Mr. Bineg Lau's 2009 tax return, but accepted Bineg Lau's misrepresentations at audit and on his 2009 income tax return that the stock was originally acquired in 2000. The auditor for Mr. Richard Lau relied on that finding and did not examine the QSBS issue further. Although the auditors accepted these misrepresentations, the respondent and your board are not bound by a prior mistaken conclusion by one of the respondent's auditors. As stated in the hearing summary, each case stands alone, wholly on its own merit. And in this case, the law and the facts show that the respondent's assessment should be sustained. For these reasons, the appellant's SMI stock was not QSBS based on well-settled law. The appellant does not have good legal authority to support his position, and the appellant's position is contrary to the legislative intent of the statute. As such, the appellant's exclusion of $5 million of gain from the sale of SMI stock in 2009 should be denied. Thank you. I'm available for any questions you might have.
You have 5 minutes.
Dennis, why don't you respond to that?
Attorney Tay mentions misrepresentations in the original audit. There were no misrepresentations. Dr. Lau was audited for this exact issue, and the questions in the audit were exactly what we've been talking about today. When was this stock issued? I met with the auditor. She asked us to provide when the stock was issued. The shares were issued in 2000. We showed her that. We showed her the documentation that the shares were issued in 2000, and she believed that the events in the reorganization were so substantial and so significant that she was okay with that being the time that the shares were issued. Attorney Tay is correct. There is no dispute that the original 100 shares were issued in 1986. But the reorganization, which was essentially became a new company in 2000, was the original issuance. This issue, I have the IDRs, which was the information document request of the original audit, asked specifically this question. The auditor addressed this issue and found there were no misrepresentations. We provided stock certificates. We provided when the sale was, and they accepted that under audit. I understand that Attorney Tay has a different analysis, and that's why we're here today for Mr. Harper. When Mr. Harper was subsequently audited, we provided all the same documentation to the Franchise Tax Board field auditor, and that auditor came up with a different conclusion. It is also true that Dr. Lau's son, Richard, who had been gifted some shares, was audited out of another office for the Franchise Tax Board in Oakland. We provided the same documentation regarding, he was aware of the other audits as well, from what I could tell, but he wanted to see what Dr. Lau, Richard's father, audit results were, and proof that the shares were gifted to his son. We provided all documentation. It's an open book. It's just a matter of two FTB auditors and attorneys having a different conclusion under the same facts.
Thank you. Members?
Madam Chair.
Yes, Mr. Horton.
Question of the department. How would you define substantially all?
Substantially all is not specifically defined in the statute. However, it's our position that substantially all is approximately 85%, given the way that substantially all is defined in other parts of revenue taxation code, as well as some parts of the IRC as well.
And so, let me ask again, percentage-wise, what percentage would you deem to be substantially all?
85.
In this case? Pardon?
85%.
85%? All right.
Madam Chair,
Yes.
to the Franchise Tax Board, when you say 85%, are you relying on a statute, case history? How do you get to the 85%?
I'm relying on other statutes that define substantially all to be around 85%.
Okay. My other question is with respect to comparing the statute before us, 18152.5, subdivision F and H, as opposed to the old statute. Did the old statute have any similar provisions defining the acquisition date, reorganization, holding periods, and/or acquiring the stock for cash or other properties?
No, and I think that represents the fundamental difference between the old statute and the new statute. The old statute did not clearly define any of those things, but the new statute lays out clearly the requirements for when the taxpayer had to acquire, the timing and the manner of that acquisition. Represents really the fundamental difference between the two, which is why Legal Ruling 428, which it clarifies the old statute, simply does not apply to the new statute.
Okay. To appellants, you described your operations and how you had to make changes in order to grow the business. But you did not indicate that you established a new corporation. It seems to me that you just changed your method of operating in order to be successful. Am I misunderstanding you there?
Our position is that there was a transaction where the old company ceased to exist and the new company existed. They had it's through the amended and restated Articles of Incorporation, where they completely changed the rights and obligations among the various shareholders of the company. That his 100 shares became hundreds of thousands of shares, junior shares, and that capitalization or recapitalization was the beginning of the new company. Now, for convenience, it was done through amending the corporate structure of the original corporation, but it was a complete brand new reorganization. And we think that the analysis in Legal Ruling 428 addresses just this. Where there's a change in operation, is that like a new issuance? And they look to see if there's a fundamental change in shareholders' rights. Well, we think that, and the purpose of making that analysis under the old statute is not different from the new statute. The concept is to encourage people to make risk investments in a new adventure. They had an old entity, but they now have a new entity, and all they have is a new risk investment of these shares, and it's done through the reorganization mechanism of the new entity and all of the associated agreements that they had to make with.
Okay, I understand what you're saying. 2 appeals.
I'd like to add one thing, if
Go
I
right
may.
ahead, sir.
The respondent keeps referring to a stock split, and technically a stock split is a simple additional shares multiplied by how many other shares you're going to get. 2 for 1. If you have 1 share, you now have 2. But your ownership in the company doesn't change. In this case, despite the wording of a stock split, Mr. Harper and the founders were substantially diluted, as he explained in his presentation to the board. They went from a 96% ownership down to 27% ownership. So in our opinion, and we have proffered this to the respondent, that this really technically did not meet the definition of a stock split given the substantial dilution. And the substance of this transaction was a new company. While the form was still in Sierra Monolithics and the name, there was a whole new set of shares, a whole new set of investors, and a whole new business model that was impressed upon the original founders to operate their business quite a bit differently and under the control of the VC, the venture capitalists and their board.
Okay, thank you.
Thank you.
2 appeals. Can you walk me through the statute and kind of focus on what it requires in order to have qualified small business stock for the stock at issue here?
Yes, it must be acquired at original issuance, and it can't be acquired for other stock, I believe, relevant here. And as relevant here, for substantially all the holding period, the stock must have been C Corporation.
Okay. Can you give me just a quick little high-level lesson about reorganizations?
Generally, we would view a reorganization as a a continuation of the original investment. Even though new investors may be involved and there may be amendments to rights, it's not a taxable event that's akin to a new purchase as a general rule.
Okay, thank you. Thank you, Madam Chair.
Yes, Member Renner.
Yeah, just a couple of clarifying questions here. Let me start with the issue of stock split. It seems to me that stock split is pretty clear that the ability to, in a stock split, your numbers of shares may have changed, but your proportion of ownership remains consistent. Do you disagree with that as a definition of stock split?
That's correct. I do not disagree.
Okay. So in one sense, this really did not qualify because it was a stock split.
I think it did not qualify for a couple reasons.
Okay.
But I think the fact that it was a stock split means that it retained the same holding period and the same acquisition.
But it wasn't a stock split.
Well, the appellants are,
Well, yeah, go ahead and get the mic, because you guys are they're having a hard time hearing you guys.
Why
so-
don't you each take one?
Yeah.
You don't have to
You got two. Why don't you
sit so
scoot over there and
close
get to that
one's
one?
not
This one's
working.
broken.
Okay, well, maybe you can scoot over there and kind of get to the,
oh, that one.
yeah, and speak
Well-
right into the mics.
The using two separate transactions. The stock split is a separate transaction from the issuance of new stock to other shareholders, especially preferred stock and other types of stock. And so, in this case, a stock split occurred, and in addition, they subsequently issued other stock to other shareholders, but a stock split did occur.
But is it, okay, I guess I'm having a hard time understanding the definition of stock split then, because didn't their ownership portion change?
When their stock split occurred, it had no impact on their equity ownership in the corporation. When they issued new stock to other shareholders, that changed their equity ownership in the corporation.
Okay.
So there's two separate transactions, and they're being merged here, but they have to be looked at separately. And even if the reorganization did occur, under the new statute, it still makes it very clear that you look at the original issuance of stock from before the reorganization, and the new statute in subsection F also specifically states the holding period for the new stock after the reorg starts at the time of the original issuance. And
Okay.
so here it doesn't make a difference.
Okay, let me go back to appeals just for clarification, because I think you guys actually touched on it, but I want to hear it again. The issue of the corporate change that took place and the significance of that.
We would see that as a continuation of the original investment, even though there was some change in terms. Just as you might exchange voting stock for non-voting stock, and you may have new investors coming in, it would still be a continuation, not a taxable event. And under the statute, it wouldn't be an acquisition of stock for property other than stock, right? Because you're giving up stock and you're getting stock.
But no, but the issue, didn't the corporate structure change?
It sounds like it changed in connection with the transactions.
Yeah.
I'm actually not clear on exactly when the timing, but I don't think it's going to change the legal analysis in our view. In other words, whether the new money
Go
came
from an
in-
LLC to, or did it go to an LLC or became an LLC?
It wasn't an LLC, it was a S Corp, wasn't it, I believe?
And that's corporate.
Did it change?
It was an S corp, and then in 2000 it became a C corporation. It filed as a C corporation.
And does that change the application of the law?
No, it does
Okay,
not.
okay, thanks.
Okay, I have some questions for the appellant, and I will let whoever is most articulate on these issues, please respond, because Mr. Harper made great display as to how the company changed and the model changed, but what is the triggering event? Is it the actual sale of the stock when you split, or is it actually the stock split, or is it the reorg that occurred when? When did the reorg occur?
The reorganization was one transaction. It was accomplished by changing the number of common shares and adding preferred shares.
And when did that happen?
That was in the year 2000.
In the year 2000, at the same time as the stock split or after the stock split?
The stock split was part of the reorganization. It was all done simultaneously. There's an amended articles of incorporation.
So the new preferred stock was issued simultaneous to the split?
Yes.
They were done concurrently as part of one transaction.
Okay, was there any time lag between those?
No, they just in sort of common sense terms, they went out and they found the new investors, and they agreed to the terms of what the new investors would demand. And there's a whole series of things because
Yeah, I read through the file, but what I'm trying to get from you is the dates and the times.
That was all accomplished in one set of changing of corporate documents.
Okay, so the initial a stock split is truly not a reorg. It just isn't. By any definition that I've read, it's not a reorg because it's 1 for 1 or 10 for 1 or 1,000 for 1, whatever, and the equity stays the same. So stock split was not your triggering event. From my mind, the triggering event was actually the reorg, and did that take place on the same day, the same time, or was the split, and then the other investors left, and then the other guys came in? At what point was Mr. Harper on his own?
All of these occurred simultaneously, concurrently. Well, the day before the transaction, there were a few shareholders. The day after the transaction, there were 2 classes of stock. He had common, the investors had preferred.
Yeah, see, that's the one point that I'm kind of hinging on, is the preferred stock and the changes of classes of stock. If that is actually the triggering event rather than just splitting the stock. So appeals, what would constitute a reorg?
I think, well, in the appellant's view, as I understood it, the acquisition date was actually the acquisition of the new shares, whether you call it a stock split or not. I would worry about setting up a standard where someone could hold on to precisely the same shares and have changes in the organizational structure, and we could somehow deem acquisition of new shares to have occurred. So that would concern me about finding that the reorganization itself was a triggering event of some type.
What about if a company doesn't issue new stock, but actually issues in different categories and brings in new investors? Is that a reorg? It is under a definition in legal analysis, but does that constitute a reorg for us?
Well, I think you could view that as a reorg, but I don't think it would constitute an acquisition of new stock.
Okay.
Madam Chair.
Yes, Mr. Horton.
Question of the taxpayer. It sort of seems to me that in reviewing the law, that you could have intentionally arranged this in such a way to continue to qualify as of 2000 had you simply, sold off the business and transferred it over, sold off, and somehow created a whole new entity, which would have triggered a taxable event, which would have meant that you would have had to recognize some level of capital gain at that point, if in fact that existed. So it makes me sort of ponder whether or not, Mr. Harper, whether or not you received legal counsel or advice. Is there some document somewhere that establishes the legal criteria in which you believe that you're entitled to the qualifying small business exemption? I mean, I have yet to hear, the legal argument as to why 2000, the reorganization that occurred in 2000 establishes a change in entity that would have triggered a taxable event, which would have caused, which would have set you in motion from that point to be the holding period starting at that point going forward.
Well, the purpose of the qualified small business stock provisions, as they've changed from year to year, has been to encourage these risk investment. In trying to decide whether a combination transaction or other reorganization type transaction consists of a continuation of the holding of the old stock or treated as a new issuance, that was what the old legal ruling addressed, and we think that analysis is appropriate here for purposes only of this qualified small business stock classification. When is that for that one purpose, which later means a partial reduction in capital gain? When is for that purpose was the stock considered to be issued? We have a common problem of having the same word have different meanings, different contexts, and we're only using it in the context of what's intended as an issuance stock for purpose of the qualified small business stock provision.
Does it?
I could add something.
Yeah, yeah. I mean,
The old adage here is form over substance or substance over form that I think we're talking about. Frequently, the tax authorities will argue that a transaction, if it's set up in a certain way and the form is perfect, but if you structured this form for pure tax advantages, the tax authorities will argue that the substance of the transaction is really something else. And I suppose at this point, this is what we're arguing, that if the form, as you had asked, whether Mr. Harper received legal counsel to change the name or change put the shares in another company or done some form, the stock would have then been considered to be issued in 2000. We're saying that the form didn't matter. It's the substance here of what really happened, that he took a company out of a garage and worked with two other founding members to create. He's a rocket scientist. None of us are. You heard what he's doing. And then in the need to grow his company, essentially brought in the venture capital funding and gave up complete control of his company. The substance of this transaction is qualified small business stock. It meets the spirit of the legal ruling 428. If you read that carefully, they talk about, if you just afford me a moment here, the legislature specifically declared that the purpose of the small business provisions was to create jobs by encouraging investors to take risks in starting and expanding small companies. He expanded his small company by giving up control, taking in venture capital money.
now, you're referring to Rule 428?
Yes, sir.
Wasn't that repealed?
It was indeed, but the wording and the spirit of this applies to these facts as well. We're not relying on this ruling for legal authority other than the arguments that were made and the reasoning still applies in these cases.
So under the substance argument or the equitable argument, sounds like you're making, what substantive change took place to trigger, that would have triggered a new operation of some sort? And particularly when the department did, if I heard him correctly, didn't treat that as a tax triggering event. And had they treated it as a tax triggering event where there was a significant change in the substance form of the operation as an S corp transferring into a C corp, that probably would have created a taxable event at that occurrence. So the argument seems to be a little counterintuitive in that the argument is there's you qualify for the qualified small business tax exemption, and yet still maintain the tax exemption of not recognizing the gain in 2000. So I need some help in understanding or distinguishing, if you will, those arguments from a legal perspective. I'm very, very respectful of the work that Mr. Harper has done and want to do everything we can. California historically wants to encourage his type of ingenuity that leads to the creation of job opportunities and so forth. But the tax code is so, the tax code have various different elements to it that, and benefits. As a S corporation, there's certain benefits in recognizing your investment tax credits and things of that nature. And as a C corporation, the liquidity and being able to move the transaction around is a good thing. But I don't see where those changes took place, and maybe you can help me
Actually,
help the board better understand.
The organization was a reorganization. That was not a taxable event.
Okay.
They're just different. The different standards for different purposes. It wasn't taxable then. There's a
Now,
reorg.
under 428, even though it was repealed, is there an argument that the provisions in 428 remains to be contained in the law subsequent to the reform of the law and the repeal of Rule 428?
I think it's our position that it does.
And where in the existing law would you cite that that's the case?
Well, I think the legislative history is really not in question. The purpose
Okay.
of the small business stock as it's been treated in its various iteration, were just to encourage this sort of activity. I don't think there's any question of that.
Okay, well, with that statement, I have no further questions, Madam Chair. Thank you.
Thank you. Any more questions, members? Is there a motion?
Sustain the franchise tax board.
Second.
I have a motion and a second. Is there any objection? No. Sorry, such will be the order.
What was the motion?
Okay, the franchise tax board was sustained. The appeal was denied. We think on the legal merits. Thank you.
Yeah.
Think to the structure.
I don't know which one. I mean, you could argue there was no gain.
Ms. Richmond, will you please announce the next item, please?
Our next item is B3. David Chan and Suzanne Nagy-Chan, please come forward.
Good morning. Good morning.
Good morning. Let everybody get situated and comfortable first. Okay, welcome to the State Board of Equalization. Please introduce yourself for the record. Each of you will have 10 minutes total, then the department will have 10 minutes, and then you will have 5 minutes on rebuttal.
Excuse me, Madam Chair.
Yes.
We need appeals to introduce the case.
Oh, I'm sorry. I didn't mean to get you out of the process. Yeah, thank you. The items.
Good morning, Joan Harkey, Anthony Uplight of the Appeals Division. There are 2 items before the board in this appeal. First, whether appellants have shown that their Schedule C gross receipts were overstated for 2004 and 2005. And second, whether appellants have shown error in the Franchise Tax Board's disallowance of Schedule C business expenses for 2004 and 2005. And I would note that there have been some adjustments for the 3 tax years. First, for 2004, the tax for 2004 has been reduced to $32,034, and the penalty has been reduced to $2,530. For the 2005 tax year, the tax has been reduced to $10,640, and penalties have been reduced to $4,866. For the 2006 year, tax has been reduced to $1,633, and penalties have been reduced to $361, and appellants have conceded the tax and penalties for the 2006 year.
Okay, thank you very much, Mr. Eppolite. Now, to the appellants, you have, like I said, please introduce yourself to the record, and you have 10 minutes.
Hi, my name is Suzanne Nagy-Chan.
And I'm David Chan.
You need to speak up to the microphone.
David Chan.
Thank you.
So when we first were receiving the audit, I had hired an attorney. And I went to his office and I brought all my information. And it was determined at that time that we had not only a construction business, but we were also building 2 residences from the ground up. So we purchased raw land, and we got several construction loans, or actually one construction loan that bought up the first. So now we have a construction loan. And my attorney at that time told me that I should have kept things separate. And in the meantime, well, not meantime, but we had put everything into our business, the construction loans and the expenses for the building of that 2 houses. They were side by side. So he had advised me to, well, first of all, that wasn't even an issue until down the road, but I had to gather a lot of information, and expenses at that time were barely even asked for until it came out later. So then we were compiling the expenses, and based on what my lawyer told me at that time, he wanted me to separate what was for the building of the property and what was strictly for the income of the business, and any other deposits that were made in terms of loans, like personal loans that we would put into the business. So I separated everything out. And I also separated all the expenses. So I had items, line items for the business. I provided that to the tax board. So there was like a section where it was legal and accounting. It would match what was reported on the tax. So the front and back of each check, or a credit card statement, or a cash receipt was provided and broken down to specifically show the line item. I thought it'd be easier to show all proof of the payments. And I don't feel that we received full credit in each of those items, or many of the items. It's very hard for me to distinguish for the letter that we have received, or several letters that we have received. It'll just say amounts that was not allowed or allowed, but it doesn't give me specific items as to what was disallowed. It's just a big number put together, and so that's why I put everything, and this was given to the board about a few years ago. It was broken out for each year, each expense item. The income side, I had provided each bank deposit, each month of the bank deposits, each statement. I had provided also the deposit ticket, where the money came from, and put it with that specific month to show where the money had come from, where it was. So that is my problem, is that I'm not understanding what's disallowed and what specific is being disallowed. It's just one number put together, and I don't know where. And I've been trying to. So I've been seeking help from different. I have a tax person that's trying to help me put all this together and find out how we can reduce the amount.
Thank you. Is there anything else?
Maybe a little bit later. I mean, well, it was also from a conversation I had that it would be in our best interest that, well, it was never offered to me from any of my my additional help or the lawyers, that I would meet with the auditor and present my information, and I feel that would have been a huge help if I do have a meeting with the auditor, so that I can show him or her what items they're missing or they don't think they have. I'm pretty sure that I have most expenses. So I would like to have an audit with the auditor so that we can come to a resolution.
Okay, thank you. To the department, you please introduce yourself for the record, and you have 10 minutes.
Good morning, Chairwoman Harkey and members of the board. My name is Ciro Imordino with Teresa Wignall for the Franchise Tax Board. The issue in this appeal is whether appellants have met their burden of substantiating 3 issues. The first issue is appellants' contention that the gross receipts they reported on their tax returns and company books were overstated. The second issue is whether appellants substantiated certain expenses. The third issue is whether appellants substantiated entitlement to a flow-through loss. First, regarding appellants reporting more gross receipts than they actually received. Gross receipts represent the money a company receives in its trade or business. The over $2 million of gross receipts reported on appellants' tax returns exactly matches the gross receipts reported on their company books. I note that the FTB auditor, without confirming the accuracy of the appellant's assertions, has already reduced the appellant's gross receipts based on their assertions that their gross receipts included loans from family. Appellants assert that their gross receipts should be further reduced. The FTB and your board's attorneys requested that appellants provide substantiating information, but the appellants did not provide this information. Instead, the appellants have provided several schedules which are inconsistent with each other and the facts in this appeal. These schedules are off by hundreds of thousands of dollars for 2004 and almost $1 million for 2005. Further, none of the schedules appellants created appear to have any connection with the gross receipts reported on either their tax returns or their company books. A company's general ledger is what we generally are referring to when we talk about a company's books. Appellants assert that they could not retrieve their general ledger information since their tax preparer's office was closed due to his illness and subsequent passing. However, the FTB's inquiries revealed that during the time the FTB requested the general ledger, not only was the tax preparer's office open, but appellant wife was an employee at the tax preparer's office. Further, the tax preparer's office was not closed due to his illness until 2 years after the FTB began asking for the general ledger information. Therefore, appellant wife was an employee at the tax preparer's office and could have provided the general ledger information at any time during this 2-year period, but did not. The appellants also assert that after their tax preparer's passing, the tax preparer's son just allowed appellants limited access to a computer once. However, on the contrary, a federal lawsuit filed by the tax preparer's son against appellants assert that the appellant wife was in possession of the computer and would not return it. Despite appellants' claims that they cannot access the general ledger, the appellants continue to generate printouts of select portions of the general ledger for purposes of substantiating expenses. In fact, appellants have generated general ledger printouts on several dates during this appeal. Therefore, the facts demonstrate that the appellants have the general ledger information, gross receipts, but have not provided it to the Franchise Tax Board. Similarly, appellants assert that they cannot retrieve checking account information requested by the FTB and your board, but appellants were able to produce extensive checking account records to support expenses. At a pre-hearing conference in 2015, your board had appellants agree to provide items to substantiate gross receipts. The appellants agreed to provide this information. However, as the hearing summary notes, the appellants did not provide the information that they agreed to provide. Your board's attorneys re-requested that the information be provided in August of 2015, but the appellants did not provide the information again. And so appellants have not provided any evidence which would support that the gross receipts reported on both the company's books and their tax returns were overstated. The second issue is in regard to certain expenses. The FTB auditor asked appellants to substantiate business expenses. I know that the FTB has allowed most of the expenses in dispute, reducing the tax at issue from almost $250,000 to approximately $45,000. During this appeal, the appellants provided thousands of pages of unorganized documents, many of which are for the wrong tax years or not relevant. Generally, the appellants simply provided these hundreds or thousands of pages of documents with no explanation. The FTB went through all these documents, and to clearly let the appellants know what items needed substantiation, the FTB marked an X next to the items in appellant's expense general ledgers. And this goes back to the appellant's comment a few moments ago. We went through their general ledgers, and our exhibit CC, we marked an X next to every single item which needed to be substantiated. And so we're very specific with what was needed. I also note that when I spoke to the appellant wife 3 months ago, I provided the same information to her, and I offered to assist with any questions that she may have. And I did not hear back from her until yesterday. And again, the appellants did not provide the requested information, but they continued to produce the same unorganized documents, many of which are for the wrong taxes or irrelevant or had flawed substantiation. For example, the appellants provided payroll tax returns as evidence that the amounts on the returns have been paid without submitting actual evidence of payment. The FTB requested evidence of payment. The appellants asserted that the FTB should accept these returns as substantiation. Upon further review, the FTB found that, contrary to the appellant's assertions, the amounts on the payroll tax returns had not been paid, and in some cases, federal liens have been issued. As the hearing summary notes, the appellants agreed but failed to provide substantiation, which your board's attorneys requested multiple times. The appellants have not met the burden of showing that they are entitled to business expenses at issue in this appeal. Finally, the third issue is that appellants were asked to substantiate entitlement to flow-through losses. Since this information was first requested in 2007, appellants have not provided any documentation to support entitlement to these losses. In conclusion, the FTB has requested information from appellants numerous times since 2007. During audit and protest, the FTB repeatedly requested information. Appellants would request numerous extensions and did not provide the information. Even during the 5 years of this appeal, your board's attorneys have requested such information on multiple occasions, including in 5 separate requests for additional briefing, numerous extensions, and numerous hearing postponements, during which appellants continue to fail to provide the requested information. Instead, appellants have provided information that was not relevant, incorrect, or contradictory. Appellants have not substantiated entitlement to any issues or to any amounts at issue. Thank you very much for your time.
Thank you. You have 5 minutes to rebut.
Thank
or
you.
add information.
So there was a lot of information, so I hope I can respond. Okay, so in terms of the extended amounts of time, so back in around 2009, 2010, I suffered a major herniation in my back. And I was under doctor's care I'm still under doctor's care. I was going to the doctor and a chiropractor 3 times a week. At times I didn't walk. In addition to, I had to have surgery, which took about 6 months for me to even recover, let alone lift the box. And that was pretty recent, maybe a year and a half, 2 years ago, that's when I had my surgery. And then I had eye surgery, and after my back surgery, I broke my foot. So I was not in good shape. Now, in addition to the information that I was providing, I provided information as they requested. The deposits, the bank deposits were all provided to them, each and every slip along with all the bank statements. I did provide all the title. I did provide loan statements, 1098 or 1099 statements for all the interest that was paid for the construction loan for the building of the two houses. All that was provided. So it was also shown and broken down as to what the lender was providing and where the lender, the name of the lender, where it came from, but it was put into the business income. So when I originally did the taxes, and I did work for a tax preparer, he told me, make sure you put everything, you declare everything, and I did that. But unfortunately, he didn't advise me the right way either. I should have had separate bank accounts for those properties that we were building under construction. So it turns out that we put everything into the main account. I accounted for everything, and then, like I said before, my past lawyer had told me that I should separate everything because it was not technically income, and those expenses were not part of our business. But in the meantime, they were asking for deposits, copies front and back of the deposits from the bank. But the bank only held the records for 7 years. And so when that was asked of me, most recently, I called the bank, and the bank was not able to provide that because the time had elapsed. And I don't remember being asked that prior to that time. I did provide all the deposit slips to substantiate all the business deposits. And all the like I said, all the business income and each category of business, like the rent, was each categorized, and it was given a total which matched the total that was stated on the tax returns. Front and back copies were provided. It was organized. It was pretty easy to read because you could just go into each category. It had the year of what, this is a 2005. It was, each year was categorized. So, and we did get some credit for it, but like I said, I don't have a specific as to, why are we not getting the full benefit when every check was provided, every receipt was given. So I'm not understanding why that was. Now, also, I don't understand why, and I guess it was a fault of my lawyer, that we never met with the auditor to sit down and figure out what they may need, how they may want the information. So unfortunately, I wasn't given the right guidance as to provide the information. Now, going back to my boss, I was his secretary. I was not a tax preparer in any shape or form. He was sick, and he did pass away in 2010. Since, unfortunately, his estate was not put in any trust, he didn't have a will, it was, his estate went into probate. And his wife, it was his third wife, and there was a, I guess not a hatred, but a fighting between the children and the wife's new son. So they all wanted the business, they all wanted the property, so there's a lot of fighting. The court did close down the office, and we were not allowed to go in the office. In the meantime, Eric was supposed to disclose the preparation of taxes that he was continuing for his business, and the court found out that he was not reporting that. They shut him down, and he opened up a new office. Eventually, they worked things out, and he bought the office. He got his computer back. I didn't take it from him. So I never said that I didn't have all the information. I had most of the information. I said I may not have everything, is what I was saying. I'd never.
Okay, thank you. Members, do we have any questions?
Madam Chair.
Yes.
Thank you, Madam Chair. Question of the respondent. I don't want to put words into the taxpayers, but it seemed to be implying that the taxpayer themselves have never had an opportunity to meet with the respondent. And the respondent indicated that they met with someone and pointed out the exact items that you were questioning. Who was that someone? Did you ever meet with the taxpayer themselves?
So 3 months ago, when our hearing scheduled for March was postponed, I contacted Mrs. Nagy-Chan on, I think it was March, I got it right here, on March 23rd. And I talked to her and I provided her with copies of all the information that needed to be provided. And I offered to talk with her and to meet and to go over any questions that she had. And I sent follow-ups to her on April 11th. I tried to call her, but I couldn't get through. On April 12th, I mailed her a letter, including with all the substantiation of what's needed. On May 15th, I sent her another follow-up letter, and I did not hear back from her until yesterday.
Sounds like the department has exercised due diligence in an attempt to reach out to provide you an opportunity to share with them the additional evidence. Is there a reason why you didn't respond?
I was actually looking for a new representative and found somebody that was able to help me out, but he had just a really busy season, and we were trying to get together. I've been in his office a few times to organize and try to get a meeting together. So I was working on getting information to the new person so that we could meet with the auditor. That was my goal.
The additional information that
Yes.
you're referring to, has that been provided to the agency?
It would be provided during the audit so that we can go over it at the same time and not have any more confusion.
Has that been provided to appeals?
yet.
And has it been provided to the agency?
Not yet.
And it's your belief this additional information would result in additional adjustments to the audit?
I believe so.
Appeals, you seem to be ready to.
Well, I would note that back in February of 2015 and then in August of 2015, at the time of the pre-hearing conference and subsequent to the pre-hearing conference, when we were communicating with appellant's representative, appellants were CC'd on that correspondence, so they were aware of what was being requested of the representative. So they were aware of the documents that were being requested of them.
Yeah,
But I don't have
gather
that representative anymore. I have somebody completely new, and that was a person, a company that's far away, and this is somebody local that I can get back and forth and present information.
So
It
can
was
you
a
give
logistical problem that I
Can you
had.
give us a general description of what this additional evidence?
I believe that they're looking for some general ledgers, the yearly general ledgers. I think I provided, without fully knowing, I think a quarter only.
No, yeah, I
and then-
appreciate that, but the specific items that you would be entitled to that hasn't been taken into consideration thus far, can you give us some indication that there are documents to support
Yes, there
further
is.
reductions? What are those documents and what do they say?
They're checks, and it has, I just coded it reimbursements. I was a lack of time, and I had to hurry and get the taxes prepared.
So these
I
are
just-
checks that my apologies for interrupting, but these are checks that the respondent has not seen?
Probably
That
true,
reflects
yes. That's correct.
expenses that
Yes,
you've
they have not
taken.
seen them. Mhm. I just had a hard time finding all my information. There's a lot of boxes, and it was just scattered, and I was trying to also put together information and make copies and get things ready for the new person to look at as well. So it's just a lot of work.
Thank you, Madam Chair.
Madam Chair?
Yes.
I want to follow up what Mr. Chairman Member Horton was saying. You said there are probably new documents. Have you had an opportunity to sort these documents? This new information? Have you, I'm sorry, to the appellant, have you compared what you have now to what you already provided to the Board of Equalization Appeals attorneys are to the Franchise Tax Board?
I'm not sure what you mean by compared. I have them.
You have them?
And I do have them ready to submit. I was trying to coordinate the meeting with the new person representing me and the auditor.
Okay.
And that's where the confusion came in, as I've been working with the new person, trying to, and he's in a tax season too, or he was, and he had a lot of work till now, so it was kind of hard.
Here's my concern is that we've had pre-hearing conference and postponements throughout in order to prepare. And the briefing is extensive as far as the documentation that has been submitted. And the documentation, a lot of the documentations that we have had are duplicates of the same items. And my concern is that we may be looking at allowing you additional time just to receive the same documentation that we already have.
These are not the same. They're 100% different. In fact, I believe they're the checked marked items that the auditor's looking for.
Okay.
Those are the items that I did find.
To the Franchise Tax Board, I just want to say something else. I mean, you said something about meet with the auditor. Do you have in your record how this started? Was this an initial audit done in the field where you can go out and look at the books and records? Or was this a correspondence audit where you just ask for stuff and it comes back to you in mail?
Yeah, I believe it was a correspondence audit. I'm not certain though, but I know that, I believe it was a correspondence audit, but we've, during the audit, it was the same situation. I have all the printouts of the auditors and the protest officers, numerous requests for information, extensions, and ultimately not providing information. I note that during the initial audit, the auditor ultimately issued multiple demand penalties or demand letters, one of which ultimately resulted in a demand penalty. Also, for another point, I was contacted by the tax preparer yesterday. He informed me that the appellants had contacted him for the first time about 2 weeks ago, and that he had received unorganized documents for one tax year and no documents for another tax year.
Thank you. Thank you, Madam
I
Chair.
remember providing him the paperwork that he did.
This is one of those ex partes that I think the department would be very happy that we ex parte'd if we are ex parteing. We did call this taxpayer probably 10 times over the last 2 years to try to arrange appointments, get her in with her documents. That did not happen, obviously. And so I have, I know my office has worked this tremendously to try to get some back and forth. I think that the consideration given is considerable, meaning that some documents were put forth, but I've got here that they tried to contact her over the last 2 years 10 times to try to get her to meet with you. So this is something that's been going on and on and on.
I don't remember.
The taxpayers.
Sorry, getting a direct call from the auditor.
We probably would have some record of that in our files. But so, we try very, very hard in my office to be sure that everybody gets all their data in before hearing, that they understand the process. And I think it's a good thing that we do. Unfortunately, there's only so much we can do. So, thank you very much. Any more questions? Have a motion? Yes. Oh.
I concur, Madam Chair, and it seems, as well as my other colleagues, as to the delay in the process. However, I am sensitive to the fact that, and having changing accountants and having to hire folks and so forth and so on in order to accumulate the data. So what I would encourage the respondent and the appeals to do is I would imagine that I kind of have a pretty good idea where the ruling is going to go. And I would encourage them to share with the taxpayer the process of requesting a new, what do you call it? Rehearing. And submitting the evidence to the respondent subsequent to this decision, and providing them with some guidance on as to whether or not you believe that is additional and new information and kind of communicate to this board, if in fact they decide to go that route.
Thank you.
I agree. Madam Chair,
Yes.
I have a motion.
Motion, please.
Motion, moved with the notice of concessions made by the parties in the footnote 3 in our hearing summary, the motion is to sustain the franchise tax board.
Is there a second? Second by Member Ma. Is there any objection? No, such will be the order. We have denied your appeal. If you have further information you wish to present, you will need to work with the department for a potential for filing for a rehearing.
Okay.
But at this point, this appeal is denied.
Okay.
Thank you. Okay. I need a 5-minute break. Would that be okay for everyone? Okay, we'll recess, be back in 5 minutes. Thank you very much. Welcome to the State Board of Equalization. To the appellants, you have 10 minutes. Please introduce yourself for the record. Oh, actually, Mr. Eppolite, I keep forgetting you. Sorry. Mr. Eppolite, will you please introduce the item?
Thank you. Good morning. The issue in this appeal is whether appellant has shown that the notice and demand penalty should be abated. Thank you.
Thank you. Okay. Welcome to the Board of Equalization. You have 10 minutes. Introduce yourself for the record, please, and then the department will have 10 minutes. You will have 5 more minutes on rebuttal.
Thank you. I'm Ron Cohen. I'm a California certified public accountant. Practice in Fremont, California. My client here is Mr. Peter Magnusson, who's the taxpayer. I was the tax return preparer for the return at issue. So I know you've all seen the briefs, and I'll just quickly outline it. So this is about the tax year 2013. There's no dispute about the items on the return or the calculation of taxable income. This is all about the demand penalty that was assessed by the Franchise Tax Board. In that 2013 return, the tax that was computed and paid was $125,000 approximately. The return was filed after the due date. The taxes paid were paid in timely, and on that tax return, when it was filed, showed a final liability due to the Franchise Tax Board of $784,000. $784 out of a $125,000 liability. That comes out to about 0.6% of the total liability. Again, he had paid the liability timely. He'd simply not filed the return. After filing the return, we received a penalty notice for approximately $31,500. You can imagine our response in that, again, the amount due with the return was $784. Receiving a penalty notice for almost $31,500 under Section 1933 was 40 times the amount due with the return. So we filed this appeal. First, we filed with the Franchise Tax Board asking for a waiver of the penalty, again, because while the return was filed late, the tax was paid in. Franchise Tax Board and State of California had their money, except for the final $784, which was paid. My client was not aware of the notices, and when he filed, we filed completely voluntarily and did so, and then became aware that other notices had been sent. So with the penalty of 40 times the amount due, we filed this appeal. As you read in the appeal writing, I made the comment that it was beyond all moral comprehension as to why $31,500 would be due on an amount due of $784. So the Franchise Tax Board denied our appeal, and then we appealed with the board here. In making that appeal, as in addition to going through just our arguments of what was going on in Mr. Magnusson's life, which he will address here in a few moments, we talked about the fact that the Eighth Amendment in the Bill of Rights, the U.S. Constitution, talks about cruel and unusual punishment, which we all know of, but the later part of that is a prohibition against excessive fines. And to our way of thinking, given the numbers involved and the lack of any willful intent, in our way of thinking, we thought this ran into that, right into that protection. The Franchise Tax Board replied in their brief that this board can't consider those arguments under Article 3, Section 3.5 of the California Constitution. So I'm a CPA, not making a grand legal argument, but at least in our way of thinking, I deal a lot. I'm in Fremont. I deal with the Fremont police, always in a positive manner. I deal with city hall members on political items. I deal with the register of voters. And all of them, I assure you, take into account the U.S. Constitution on a daily basis. So we are at least confused as to why that protection shouldn't extend to this matter. Chairman Harkey's office gave us a call, and we talked a bit about some understanding about how the statute number 19333 actually worked and how well the term was defined as to how the penalty should be computed. I'll leave that for you to consider. Further, in the legislature, AB 449 is in committee with the under the Revenue and Taxation Code, which is right on point and changed the statute to be, rather than 25% of the tax liability, the total tax on the return, to being 25% of the final tax due, which in my client's case would have been 25% of $784, which would be, we are more than happy to say, completely appropriate. That bill, I just checked it this morning, is in committee. I can't get any more information on its status or its likelihood of passage, but I think it's interesting to note that others have thought that this circumstance my client finds himself in is unjust. Mr. Magnusson, as he'll go into in a moment, I met him back in the late 2000s. He came here from Sweden. He has been involved intimately in the development of some great high-tech companies that you all would know of if I mention the names. And I will just say here that routinely he pays many, many hundreds of thousands of dollars of California state tax on time and continues to do so. As a final point, in this process of getting ready for this hearing, I was contacted by Pro Systems, which is our software service provider. I am a CPA. We prepare returns. We send them in. They go through the e-file process, as I'm sure you're all familiar. The call from the Pro Systems representative said, Mr. Cohen, I've gotten a call on behalf of your client, Mr. Magnusson. The Franchise Tax Board has called us directly and asked us for information about whether your client had made earlier attempts to file his tax returns than when we actually filed the final one. Well, I'll leave that up to you to consider. I talked to my senior partners and to lawyers in San Francisco about the situation. I will just express here, pretty much separate from this argument, but connected to it, my outrage in that I had a power of attorney on this case. I was the representative, and I've never heard of, nor have other of my partners who've been around since the 1960s, of ever the Franchise Tax Board going through our privately contracted software provider to get information on a taxpayer where we indeed had a filed power of attorney, and we would have happily provided any information if they had just given us a call. They had our name, our phone number, everything in the power of attorney. So separate from the case in that regard, I thought that was worthy of bringing to your attention. Mr. Magnusson here, as I mentioned, feels, and as do I, that the amount of dollars involved for the unpaid liability of $700 is significant, and we intend to, if we're held against here in this hearing, we certainly intend to go to the next level of court. We were advised we have to certainly, for your consideration, take the case here first. So we did. Thank you. Am I out of time? Is that what the bell meant?
No.
Oh, okay. Mr. Magnusson would like to say a few words if we have some time.
I'll just be very brief. My name is Peter Magnusson. Thank you for taking the time to hear the appeal. So I'm from Sweden originally, so we like paying taxes, so it's not about not paying taxes. And I'm accustomed to living with high taxes as well. But this isn't the tax issue, right? So at this period of time, I'm not going to, and we don't assert that these correspondence to me wasn't happening, but it was a insanely busy period professionally for me. I was going in that 9-month period between 3 pretty separate demanding jobs. And I don't mean that as a sort of an excuse for not keeping your paperwork in place, but I do know that I was very clear, make sure that, okay, taxes have been paid, but I might be missing paperwork. So I certainly expected that if I had miscalculated by, which we did by 0.6%, that there would be some follow-up and some fees on that. But if we miscalculate by less than $800, it didn't seem to me reasonable as a hardworking taxpaying citizen to then be fined a total of over $30,000. And that's basically what I felt it came down to.
Thank you. Okay, Department, you have 10 minutes. Please introduce yourself for the record. Whoop.
Good morning, Chairwoman Harkey and members of the board. My name is Meera Patel. Sitting to my right is Marguerite Monnier, and together we represent Respondent, the Franchise Tax Board. I would first just wanted to note that the correct amount at issue is $31,476.25, as noted in footnote 2 of your hearing summary. Respondent properly imposed the demand penalty for the 2013 tax year, and appellant has not established reasonable cause to abate that penalty. When Respondent did not receive a timely 2013 return from appellant, Respondent issued a demand for tax return based on income information indicating appellant made about income of $1.2 million and therefore had a filing requirement. The demand contained clear language that Respondent would impose a demand penalty if appellant did not respond to the demand notice. And when he didn't respond to the demand notice, Respondent issued a Notice of Proposed Assessment, or an NPA. On the NPA, Respondent imposed a filing enforcement fee, a delinquent filing penalty, and the demand penalty. Appellant did not protest the NPA, and the proposed tax and penalties became final liabilities before he filed his return. Appellant then filed his return, and Respondent processed it and adjusted his account, which included decreasing the demand penalty according to the amount that he reported on his return. The demand penalty was properly imposed under California law because appellant failed to respond timely to the demand notice, and there is no reasonable cause established to abate that penalty. Furthermore, as your board staff noted in the hearing summary, appellant never explains or substantiates why he had reasonable cause not to respond to that notice. Appellant's statement that he was an extremely busy executive in 2014 does not establish reasonable cause because the demand was issued in 2015, and his response was also required in 2015. Furthermore, appellant's history of not responding to demand notices and filing his California returns late does not support appellant's argument for reasonable cause. In short, appellant has not explained why he was unable to respond to the demand between January 13th, 2015, the date the notice was mailed, and February 18th, 2015, the response deadline. Additionally, even if appellant were extremely busy during the time period to respond to the demand, that would not constitute reasonable cause. Your board has never held that the press of business constitutes reasonable cause. Rather, your board's decisions are clear, that a taxpayer must show he was prevented from responding to the demand in order to establish reasonable cause, and appellant simply has not done so. Appellant also argues that the demand penalty violates the United States Constitution. However, again, as stated in your board's hearing summary, the board doesn't determine the constitutional validity of California statutes. Such arguments should be made in court or to the California legislature. With regards to the proposed bill currently standing, it is simply proposed, and even if it were to be passed, it's only going to be effective and operative after tax years starting January 2018. So therefore, it's not relevant to this appeal. Finally, with regards to the appellant's argument about him being contacted by his tax software, respondent ordinarily and regularly verifies with the tax vendor to see whether appellant made prior attempts to file his return. And we do this for the benefit of the taxpayer in order to ensure that the penalty was correctly imposed. On the facts and evidence before your board, respondent respectfully requests that you sustain its position. I'm happy to answer any questions. Thank you.
You have 5 minutes on rebuttal if you wish.
Oh, I want to comment real quick before Ron. I want to reiterate at least from my personal perspective, I'm not making a particular excuse about, I think you spent 90% of your commentary iterating on the definition of reasonable cause. I'm not disputing that. What I'm stating is that was more for the sort of personal benefit that it was busy, and then digging into whether I was late in other circumstances or not. It's not the point. The point is, regardless of whatever administrative twists and turns of documents that you invent as part of your process, shouldn't have as an end result that missing by 0.6% and underpaying by $800, then being fined with over $30,000. That is an unreasonable end result no matter what. That's basically what I'm contending.
Yeah, I don't have any further comments. Thank you.
Okay, thank you. I just want to lead this off just quickly. Mr. Epelite, appeals. Is the statute permissive? Does the FTB have to issue the penalty, or may they?
It's permissive. However, the FTB promulgated a regulation, and the regulation provides that if within the prior 4 years an appellant previously was issued a demand or request for return, failed to respond to that demand or request, and an MPA was issued, then a demand penalty will occur, and that criteria occurred in this situation.
Okay, so I guess my next question is the FTB willing to pursue this in court? I'm just asking. This seems like this could have been resolved. And I apologize for saying that if I'm speaking out of turn, but I do think it could have been resolved. So, with that, members?
Madam Chair?
Yes.
To the, I don't know who, to appeals. You said that it is permissive, they may impose, but they have a regulation
So
that.
the criteria was established.
The criteria was established that they will impose.
Correct.
To your knowledge, do you know why that regulation was implemented? Or let me ask the Franchise Tax Board, since it's their regulation. To the Franchise Tax Board, actually, it's a two-point question. What's the purpose of this demand penalty, and why do you have this regulation established?
Thank you. We have the regulation to interpret and implement Section 19133, which is the demand penalty. The statute itself says FTB may impose a demand penalty, and the regulation sets out the circumstances pursuant to which it will be imposed. And as your board counsel just noted, those circumstances have been met in this case. To respond to your second question, the purpose of the demand penalty is to encourage taxpayers to fulfill their tax obligations and either to file returns, explain to FTB that they've already filed them, or explain why they don't have a filing requirement. It is not a penalty related to the amount of the tax liability. If Mr. Magnusson's liability had been fully paid when he filed his return, the penalty would have been imposed. It is unlike the delinquent filing penalty in that way, because as you would note, the notice of proposed assessment, both a delinquent filing penalty and a demand penalty were imposed, and after the return was filed and FTB processed it, it abated the delinquent filing penalty, which is based on the amount by which tax was underpaid as of the original due date of the return. However, because the demand penalty is not tied to how much tax was paid when, it was not abated and was properly imposed.
Okay, thank you. So, it's my understanding, this is more commentary, it's my understanding that before the regulation was adopted, there was some inconsistency on when this demand penalty was being imposed. And because of the inconsistency, the Franchise Tax Board, 3-member board, adopted the regulation that set forth the criteria on when that penalty would be imposed against individuals. It's also my understanding that, well, that's pretty much my understanding. That's it, thank you.
Madam Chair.
Yes.
I always have a concern when there seems to be a misunderstanding of the law, and for this matter to go to court, I think it would be important that the taxpayer understands conditions under which the respondent would actually waive the penalty as it relates to reasonable cause. And for the purpose of the taxpayer understanding what those issues are to determine if they existed in his case. I appreciate the argument about the personal challenges that were faced. But, so I'm going to ask the respondent to clarify what would be considered reasonable cause and would provide for some relief to the taxpayer if in fact that existed.
So reasonable cause is basically the taxpayer has the burden of showing that an ordinarily intelligent and prudent business person would have acted similarly in the same circumstances. Your board has held in many cases that this is a pretty high standard, and the press of business has never been held to be reasonable cause. The board has held in certain cases that significant medical or family problems might constitute reasonable cause, and one showing of that is a U.S. tax court case. The facts were very unique. In that case, the taxpayer established he had reasonable cause when his children, both his children had pneumonia, his wife had a ruptured appendix. He suffered from mental and physical collapse, and this all occurred within the 5 to 6 month period of the original tax due date. In addition to all of that, all of his personal records were located in Maine while him and his family were recovering in California. And in those limited circumstances, the tax court found that there was reasonable cause.
Okay. To the taxpayer, any of that exists?
Not at that level, sir, no.
Okay, all right. Appreciate your honesty. To the appeals unit, the legislation that currently exists, if in fact that was law, is that legislation, I hate to ask this question because I don't know if you know the answer and don't think you should have to know it, but is that prospective or retroactive or prospective?
I'm not aware of the legislation, but I would.
Taxpayer, you indicated the legislation exists. It's in rev and tax. Do you know if it's prospective or retroactive?
I believe it's going to be prospective if it passed.
So it wouldn't apply even if it was to pass?
No, it speaks to the intent.
Intent of the parties.
Any other questions?
May I add?
Yes, sir.
Yeah, I just wanted to say Mr. Magnusson had not to denigrate it at all, but a trivial matter in 2009, and to think that is controlling in their regulation to again impose a $30,000 fine on a $780 balance due is as inappropriate as the law is itself in this matter. So we certainly hope the law is changed and find the result inappropriate.
Yeah, as much as I would disagree with the equity of the current law and believe that it should be changed to apply to at a minimum to the balance, or at a minimum if a significant percentage of the tax has been paid, the state has not been harmed, that should not be a penalty. Unfortunately, without that law being in place, we can't take it under consideration.
I have a question, and any of the legal beagles can answer this. Can a regulation be more restrictive than a statute? Which trumps, the statute or the reg? Mr. Eppolite?
Well, the regulation is the criteria that's been established to effectuate the statute.
Right, but if the regulation is more prohibitive than the statute says may, I guess the reg says the conditions under which may exist, but...
I would not say that the regulation is more restrictive. The regulation is effectuating the statute.
I think it's more restrictive. Yes, Mr. Magnusson.
May I ask a question? Sure. So how am I, as a busy tax person, supposed to know that I'm sort of in this penalty box and risking really, really high fees when it's not even in the law?
I guess through a regulation. I don't know. I'm sorry. You know, members, this is very difficult, I think, because I think it's obvious that there's an inequity, and I think that's obvious by a variety of causes. I understand the FTB's position. I do think, as I said earlier, that this could have been handled and not have to come to the board. I think, you know, I would like to grant the appeal, except for the amount due on the underreported, which I believe is roughly $196. And I will make a motion to that effect, because I think the statute would trump. I think, you know, we're kind of mincing words here. And I don't really want to see this go too much further. So I made a motion to grant the appeal except for except for the amount due on the deficiency of $784. Do I have a second?
We can talk about the motion. Let me give it some input.
Do you wish to second for discussion?
Yeah, I'm going to do some discussion.
Okay.
I struggle with the issue too. I do believe, at least I understand what the role in regards to the fact is that regulation does have the ability to interpret and helps provide guidance for the statute. And so, again, I would have to agree with counsel in this, or appeals in this sense. I don't think it's more restrictive. I think that it provides structure around the statute. And so I don't like it. I don't like that it's as restrictive as it is. I think the interpretation is, I don't think the intent. The intent is to try to motivate people to obviously communicate about their taxes. That's the idea. I get the idea that says, boy, if I would have known the outcome would have been the way it is, I would have communicated better. But that doesn't change what it is. And it's probably to our disadvantage in the state at times that we're not clarifying how harsh that penalty could be. But I guess the fact is, it is what it is. And so that's kind of where I find myself. I don't think the regulation is in conflict. I think.
Well, my motion died for lack of seconds, so go ahead, Ms. Mock.
So I'm also struggling with this as well. Obviously, it's extremely punitive given this situation, but like Mr. Runner said, we really are trying to encourage people to file their taxes. It appears Mr. Magnusson received the notice of proposed assessment on March 16, 2015, which lists both the delinquent filing penalty and the demand to file penalty on it. So it may not be explained how it was calculated, but clearly it shows the two penalties on here. And so, I hope the legislation does pass, because I think obviously, in a situation like this, it is clearly extremely high, the penalty, given that Mr. Magnusson has been paying and did try to pay, all his taxes due. But the law is the law, and so, if we make excuses or, don't follow the law for Mr. Magnusson, then all the other people who also, ignore notices that are sent to the taxpayer, they're all going to come here, right, and say, well, Mr. Magnusson, you ruled in favor of him, so, we did the same thing. We didn't respond and didn't file on time, even though we paid our taxes. So I think we're kind of stuck in this situation at this moment, given, I hope the law does change and the legislature does change the law, because clearly, for situations like this where we have good, taxpayers, who want to do the right thing and pay their taxes on time, it is still, the requirement, or the state encouraging people to file on time and pay their taxes on time. So
I think the point I was making is the law is permissive, so the law probably doesn't need to change. What probably needs to change is the reg. And, you know, so 449 passing or not doesn't change my mind. I think the reg is too prohibitive, and I think it's stricter than the statute.
Madam Chair?
Thank you. Yes.
Who's first? You want to go first?
Yeah. Thank you, Madam Chair. Just for the record, let me share that I don't know what the intent of the parties who established the regulation was in 1988, 1987, or somewhere around that period of time, if my memory serves me right. But I would question if the intent was actually to fit this exact situation, which would sort of cause a pause, even though I don't believe we have the authority. The board has the authority to not take the existing regulation under consideration, given that the legislature has provided the FTB the authority to interpret the law and the term may to establish that criteria in which it could be. But the courts may be able to do it by virtue that the regulation is not necessarily the intent of the legislation, by virtue that the legislation is permissive and does say that they may, if there was an argument that the intent of the legislation was not to say that this was the specific, under these circumstances, that it was their intent that it to be interpreted that way, but that would have to coincide with a potential change in regulation or a change in that process. So maybe the FTB will take that under consideration and look at changing the regulation to address this specific situation. In the absence of that, we're bound by what's before us, unfortunately.
Madam Chair?
Yes.
I have just two quick comments. It's a harsh penalty, I understand that, and I understand the concern about the penalty. I have done some research on this because when that new bill was introduced, it was like, well, this is just a big change. And my research is indicating that why we have the statute in the first place is that the legislature was concerned that taxpayers will not be filing their tax returns if there was sufficient withholdings and payments made. And this was a way to have the taxpayers to actually file the return. The agency needs to have the return filed in order to make sure it's filed accurately, and just not having payments on the books. In respect to the concern regarding the demand penalty being permissive, I agree that the law does says that it's a permissive penalty, but my research indicates, and appeals, you can correct me on this, that the authority of this board during an appeal process is to determine whether or not it was properly imposed under the law as written. And the FTB is charged with administering the personal and corporate income tax, including its penalty. And that's why that board established the regulation on saying when the penalty will be imposed, basically saying it will only be imposed when there has been a previous request or a demand for a return that's obviously already late, and the taxpayer failed to respond to that request and demand, and the Franchise Tax Board had to issue a notice of proposed assessment. So although permissive, that board has established the policies on when it will be imposed. And I do not believe that this board can override their policy. We are bound by following the law as written.
Interpretations may vary. Okay, do I have a motion? We've had a lot of talk.
Move to sustain the Franchise Tax Board.
Second.
Okay, there's a motion and a second. I object. Please call the roll.
Ms. Harkey?
No.
Mr. Runner?
Aye.
Mr. Horton?
Aye.
Ms. Ma?
Aye.
Ms. Dowers?
Aye.
Motion carries.
Motion carries 4-0. Sorry, but such will be the order.
Thank you.
Mm-hmm. Okay, let me see.
Thank you.
Ms. Richmond, what is our next item?
Our first taxpayer still has not shown up. We have called the taxpayer twice and left messages. So we will be going to our next item, F, public hearing. Our next item is F1, timber harvest values.
Mr. Harris?
Good morning.
Good morning. Please introduce yourself to the record. Thank you so much.
My name is Mike Harris. I'm a manager of the State Assessed Properties Division, and I'm before you today to ask for your consideration and approval of the timber harvest schedules for timber that will be harvested between July 1st and December 31st, 2017. The suggested values were developed by board staff in consultation with the Timber Advisory Committee. Thank you.
Move to approve staff recommendation.
Second.
There's a motion and a second. Any objection? Without objection, such will be the order. Thank you.
Thank you.
Okay, Ms. Richmond, please introduce our next item.
Our next item is the Business Taxes Committee. Ms. Harkey is the chair of that committee. Ms. Harkey?
Thank you.
And we do have several speakers for this.
Okay, thank you. Members, the Business Taxes Committee is hereby called to order. Let's let everybody get up to the... Thank you. Ms. Gonzalez, Mr. Heller, please introduce your item and yourselves.
Good morning. I am Trista Gonzalez with the Business Tax and Fee Department. With me is Mr. Bradley Heller from our legal department. We have one agenda item for your consideration today. Staff requests your approval and authorization to publish proposed amendments to Sales and Use Tax Regulation 1616 federal areas. We have two action items, one concurred item and one which has alternate recommendations. Action item 1, which represents those areas agreed upon by staff and interested parties, clarifies that federal law preempts the imposition of California's sales and use tax on the sales and purchases of meals, food, and beverages by and from a non-Indian retailer, provided that the non-Indian retailer's business is an eating or drinking establishment, such as a restaurant or bar. The non-Indian retailer's business is operated on an Indian reservation under a federally authorized lease or sublease. A tribal tax is imposed on the sales and purchases of meals, food, and beverages. And the meals, food, and beverages are sold or purchased for consumption within the boundaries of the Indian reservation. In addition, the proposed amendments also clarify the definition of reservation and clarify that use tax does not apply to meals, food, and beverages purchased from an on-reservation Indian retailer for consumption on the Indian reservation. In action item 2, we ask that the board approve and authorize for publication one of the following alternatives. Staff's recommendation, which is noted in the issue paper as alternative 2, establishes a rebuttable presumption that meals, food, and beverages sold or purchased on a reservation in a form suitable for immediate consumption are sold or purchased for consumption on the reservation. This presumption is also found in alternative 1. However, staff's recommendation also includes a sentence stating, meals, food, and beverages sold or purchased from a drive-through window or delivered off of a reservation are presumed to be sold or purchased for consumption off an Indian reservation. Staff added this provision following the last interested parties meeting, as staff realized the alternative 1 language without this additional statement may put retailers at a disadvantage. Unfortunately, we were unable to hold another interested parties meeting before today to discuss the addition. However, staff believes the statement mitigates the possibility of additional sales and use tax owed in the event of an audit and is therefore in the best interest of the retailer. Without the additional statement, we may inadvertently be encouraging non-Indian retailers to not collect tax on those sales nor keep appropriate records supporting the exempt sales. If an audit determines those meals were sold for consumption off the reservation, the retailer may be responsible for tax which was not collected from their customers. Or you may approve alternative 1, which establishes the same rebuttable presumption as staff's recommendation, but without the statement referencing meals, food, and beverages sold or purchased through a drive-through window or delivered off a reservation. We do have speakers on this agenda item and would be happy to answer any questions you may have following their presentations.
Thank you. Okay, we do have public speakers. Let me see, Barry Brokaw and Ms. Treat, Paula Treat, and Margaret Rosenfeld. Thank you very much. Mr. Brokaw, would you please introduce yourself and for the record?
Yes, Madam Chair and members. Barry Brokaw on behalf of the Agua Caliente Band of Cahuilla Indians in Palm Springs, Rancho Mirage, and Cathedral City. It's a pleasure to be here. It's a pleasure to see some of you again and in this venue. I am here on behalf of Agua Caliente to say that we are agreeable to Alternative 1. That was the subject of considerable discussion and a June 13th meeting, and we support that effort. We have just seen proposed Alternative 2, and that gives us great concern. It's not been a subject to any meetings, discussion of stakeholder groups, and yet is before you. So we support the effort in rulemaking to amend Regulation 1616 so that it does more accurately reflect federal and tribal interests at stake. But we do strongly disagree with Alternative 2. As I said, this has not been presented and discussed with stakeholders. And we note that in the situations described in Alternative 2, the value-added component, which is very important, the value-added component occurs on the reservation with the food preparation utilizing tribal resources, unlike prepackaged food, which would be subject to a state tax. We also don't agree that food purchased through a drive-through should be presumed to be for off-reservation consumption. We know that from personal experience. Again, Agua Caliente's reservation is 32,000 square acres. Many of our folks consume in the cities, and they buy the food and they consume on reservation. So we don't think that's a presumption that's appropriate nor accurate. So for these reasons, we hope that you will approve Alternative 1. It was thoroughly discussed and vetted, and reject the proposed Alternative 2. Thank you.
Madam Chair, members of the board, Paula Treat on behalf of the Pechanga Band of Luiseño Indians, the Calusa Indian community, and we've also brought with us the Tassin letter for the Tassin tribes. Without repeating what Mr. Brokaw had to say, we have major concerns with Alternative 2. We came to agreement after many meetings on the rebuttable presumption language within 1616 that was recommended, and we can accept Alternative 1, and that's what we would hope that this board would pass. Thank you.
Thank you.
Good morning, Madam Chair. Margaret Rosenfeld from Foreman and Associates on behalf of Morongo Band, Saboba Band, Bear River Band of Ronerville Rancheria. Becomes more challenging. It's the third speaker to not repeat and support what the previous speakers have said. I think our clients were very pleased with the responsiveness of staff during the interested parties process, their responsiveness to comment letters. Certainly our comment letters on behalf of our clients went into detail about the unworkability of any kind of analysis of where people eat food they buy at a drive-through window. And so we moved into the territory of a rebuttable presumption that food prepared and available for consumption on the reservation is rebuttably presumed to be consumed there. The staff's concern about whether a retailer might subsequently find themselves in an audit position is obvious under a rebuttable presumption also. They understand that were an analysis or a sting operation to be undertaken to do some kind of analysis about where food were actually consumed, there might be a tax liability. And down the road, that is an acceptable risk for our clients to work with their non-Indian lessees to take. But here, to flip that assumption is not acceptable, inhibits economic development. Uncertainty inhibits economic development and makes non-Indian lessees less amenable to the imposition and collection of tribal tax. That's all. Thank you.
Thank you. Member Ma.
Yeah, so I strongly support alternative one, clearly because it's been vetted. Secondly, a lot of these reservations are far. Mm-hmm. They're not right, right there in the center of town, but they are off the beaten path. And I think when you talk about a drive-through, how do you know these aren't employees that are going to be working, going on shift at, at a casino, delivery? I mean, it's to me a little bit nitpicky. I understand, the equity argument for retailers, but these reservations, I've been to many of them, they are kind of off the beaten path, and I do agree that, the assumption is that they are prepared on the reservation by people, sometimes maybe tribal members who live on the reservation. I do feel that we should do what we can to, support reservations and tribal members. So I'm supporting alternative one.
Member Brenner.
Yeah, just a couple. I find myself kind of in that same position, but I've got a question of staff, and that is, what prohibited us from having another meeting?
Basically, the timing of trying to keep it on the agenda for today's meeting.
I guess.
Okay,
I'm a bit puzzled by that, in the fact that as a board member, I just as soon make sure that something was fully vetted before it comes before us, especially then when we have people who thought they bought into something and then it changed. I guess I would much rather be delayed a month to make sure everybody was on the same page.
Well, let
me just that's a concern that I'm at that way. So again, I would have wished at that point, once the staff had discovered that it came up with some other issues that needed to be dealt with, that it had, I think, the courtesy to include then another follow-up meeting in order to hear, again, the whole purpose of interested parties meetings is to discuss the implications of that. What is it? How does it affect those businesses? Because we're not experts at that, but we know these other folks are, and so that's why we would say, hey, we thought about something, we'd like to hear what you think about this now. So I guess I'm disappointed that we didn't at least follow through and have something fully vetted before it would come to us.
Okay, no, I wish to comment right here. I want to break down this fog. Okay, we had, the language was prepared by staff, went through several interested parties meetings. The tribes got together for over a year. It took them a year to reach agreement on this language. There were a variety of reasons. There were a variety of tribes up and down the state. They all coalesced around one language, and it was not an easy process. We got informed 2 days before the PAN was due that staff wanted to pull the item because they had a change in language that they wanted to insert. So we got together with Mr. Gao, as we should, and that's why there are 2 items on the agenda. So they're both here for vetting. But we could have extended it, but I think it would have reopened a can of worms that took a year to resolve. And I think, would you mind speaking to that, either of you?
I think that the tribes would just like this to be resolved today and be done with it.
Yeah, this has been a 2-year process. This has not been easy. This has been through many hearings and many interested parties meetings. And staff did prepare the first language. If staff had a problem sometime within that year, I would have thought they would have brought it forward. Yes, Ms. Stowers.
Oh, yes, I just wanted to say I'm also supportive of alternative one. This is the language that was fully vetted with all the tribes, and everyone came to an agreement. I'm also concerned that alternative two, this added burden, I have a hard time with this one to say just because it's a drive-through, it's not going to be consumed on a reservation. The example that Member Ma is perfect, that they could be going to work. Also, for some of the reservations that the gentleman here, they're on and off the reservation just by crossing the street. So they could be going to the drive-thru to pick up the food, but going to the reservation, going to the hotel to stay, but decide to use the drive-thru. And I'm also concerned that what's the difference between a drive-thru and an item to go? Who's to say that's not going to be used on the reservation? So I think alternative one is the best language at this time, and we're very supportive of it.
Thank you. Yes.
Thank you, Madam Chair. Members, there's existing history as it relates to this, not even on the reservation. I mean, the Board of Equalization has dealt with this issue when it comes down to restaurants that are operating within a mall. And so a restaurant that's operating in the mall as to whether or not the food is consumed at the site, when in fact they can eat it anywhere in the mall. So the logic, the legal logic behind it is consistent with the arguments that have been put forth by the Tribal Alliance. So I'm supportive of alternative one, and question sort of why we went to this drive-through window concept when the board's, the agency's general practice has been, when it's in relation to a mall, is to take into consideration that product purchase that may go outside of the area and where it's purchased, let's say, and then there are tables, there are places where that food can be consumed that is considered exempt.
Okay.
I would make a motion to adopt staff
No,
recommendation.
I just, that was really a question. I mean, I mean, it was a long question, but it was.
Now, reformulate your question, please, Mr. Horton.
Understanding that food sold can actually be consumed within the area, a particular area that's owned and utilized, can be consumed within that area. In this case, the reservation. In the case of traditional operations, the mall. Why didn't we apply the same concept?
Well, I think this is Bradley Heller from the board's legal department. And Mr. Horton, I think, first of all, it's not the same legal issue that we're dealing with. But essentially, to the extent that we were dealing with like a restaurant inside of a mall on an Indian reservation, I think the way that staff's been looking at this is we would treat that as presumed to be sold for consumption on the Indian reservation. And initially, when we were looking at this, we were actually looking at just restaurants and bars that were operated within a casino where the food would be eaten within the casino. So we were never originally started out with this idea of regular or addressing the issue with regard to all potential restaurants and bars on Indian reservations. And we did initially take an approach, I think, that's somewhat similar to what you're thinking, which is, when you sell meals within like a mall, it's probably for consumption somewhere in the mall. It may not be necessarily right at that.
Or somewhere on the reservation.
Feel silly.
I mean, this is.
Absolutely. And then I think, though, at some time we expanded it to discuss, to broaden, well, I shouldn't say we broadened the amendments, but to address the fact that federal preemption is broader than preemption just within an Indian casino. And that created the scenario, though, of restaurants that wouldn't necessarily just have customers that are within a facility that itself is inside a reservation, but that could have customers who are coming onto the reservation solely to visit the restaurant and then leave. And basically, I think staff, for the most part, is still pretty comfortable with the situation where customers are truly coming into the restaurant. We think that still kind of falls into the thinking that you're having, which is, they've got out of the car, they've come into the restaurant. We all know that some people who even order something to go will still sit down right in front and just eat the food there or eat it in their car in the parking lot. So we've really tried to not interfere with that kind of relationship. But when people we have concerns that when a restaurant is located essentially right next to a public street, that the consumers are non-Indians, and they're in their car buying a meal, and many of them, we understand, can take it home. We're really concerned that down the road, that retailer, if they're not collecting tax and they're being pressured to treat that as an exempt sale, And I'm not sure the comments that we're receiving today seem to indicate to me that people are even concerned about the delivery language, which I'm really wonder about.
But given the presumption that there's a rebuttable presumption, it seems to me that the exception should not be the rule. That what you've described is an exception where the restaurant may be in proximity to a public street or public locations, and individuals who live around the reservation may go and then drive off the facility. But typically, when they purchase food to go, I mean, when I go through a drive-through for food, as soon as I drive off, I'm opening it up.
It's on the way.
How many fries do you consume?
Yeah, I'm consuming.
Yeah.
So,
Yep.
so it seems to me that alternative 2 sort of puts the onus on the retailer now to defend an exception to the rule, which also goes contrary to the philosophy used in establishing our regulations. But enough said, I guess. I'm with Walter.
I just want to
Yes, there's a
reiterate,
motion.
this has been a 2-year process. There will not be another BTC committee. We are going away. And I thought it was really important to get this into the public, and I think the last-minute change offended me. I thought we had this all clear after a year of language being put out by staff, that it was out there. So I just thank this board for whatever consideration.
So I'll make a motion. Move to adopt staff staff recommendation on action 1 and adopt alternative 1 for action 2.
Second.
Okay, there's a motion and a second. Such will be the order. I don't see an objection. Thank you very much, and thank you for attending our Business Taxes Committee, our grand finale.
Thank you very much.
Thank you very
Bye-bye.
much.
Thank you. Okay. Ms. Richmond, please introduce our next item.
Our next item is the Property Tax Committee. Mr. Horton is the chair of that committee. Mr. Horton.
Thank you, Madam Chair. Thank you, Ms. Bridges. Property Tax Committee is hereby called to order. We would ask the staff introduce the issues and give a general overview, members. This is basically an effort to bring conformity to the 2006 legislation that was passed relative to wind energy properties. There has been a number of interested parties meetings. Given the last committee discussion, I thought I'd bring that out in front. Also, in addition to interested parties meetings, my compliments to the staff who has worked diligently to engage all the parties subsequent to the meetings. They've had numerous discussions with all of the parties who I understand are in agreement as it relates to the alternative that they are supportive of. Also, members, there are 3 alternatives before us just for the purpose of identifying what those alternatives are. With that, we would ask that staff please introduce the issues before us.
Yes, Chairman Horton, you wish to move with the wind energy first?
Yes.
Thank you. Hello, Property Tax Committee Chairman Horton and committee members of the board. My name is David Young, Chief of the County Assessed Properties Division in the Property Tax Department. With me is Mr. Isaac Cruz.
Okay, he's right next.
Okay. I bring before you today the proposed guidelines for the assessment of wind energy properties to provide county assessors, assessment appeals boards, taxpayers, and other interested in the administration of property tax in California. After receiving inquiries from county assessor staff and industry representatives regarding the assessment of wind energy facilities, the Wind Energy Working Group was formed. The working group consisted of staff from 3 county assessors' offices, representative from 3 energy-related companies, and staff from the board's property tax department. In addition to drafting the proposed guidelines, The working group also drafted the wind energy generation property statement, which was adopted by the board on January 17, 2014. The working group members from the county assessor's offices and from industry also reached out to other county assessors' staff and to other industry representatives, respectively. The guidelines are a product of a collaborative effort by county assessors, industry, and board staff. The guidelines provide definition and discussion on approaches to value and topics relevant to the valuation of wind energy properties, including discussions on different federal tax incentives available, power purchase agreements, and the California Renewable Portfolio Standards. Most importantly, the guidelines prescribe the treatment of the government incentives as they relate to the assessment of wind energy property. As a consequence, we believe there are no unresolved issues remaining. Therefore, staff recommends that the board adopt alternative number 1. I'm available to answer any questions you may have and ask the board to adopt the proposed guidelines for the assessment of wind energy properties.
Thank you.
Yes.
Members, we have several guests here with us. I would ask that they introduce themselves for the record, and then upon subsequent to the introduction, we would have them speak in the order in which they have introduced themselves. We'll start out with Mr. Michaels.
Very well. My name is Peter Michaels, and I'll just defer here to Ms. Breuer.
Hi, I'm Kristen Breuer. I'm Property Tax Manager for Avangard Renewables, and we are a second largest renewable energy or wind developer in the United States and are a leader around the world. We have 4 wind farms in California and another one currently under construction, and we have valued all of the effort that's gone into this collaboration and are supportive of getting guidelines that will help in the evaluation of this complex technology.
Thank you.
Good morning. I'm Madeline Minelski from NextEra Energy Resources. NextEra has a large portfolio of generating facilities in 29 states and Canada, and we are the largest owner and developer of wind and solar projects in the world. We have quite a bit of presence here in California with our solar and our wind, and we're, on behalf of NextEra, here to support the adoption of the wind assessment guidelines.
Thank you.
I'm not sure if this one's on. I'm Cheryl Klammer, and I'm with Berkshire Hathaway Energy Company based in Des Moines, Iowa. We have generation, renewable energy generation and rate-regulated generation across the United States. And I have been heavily involved in the working wind group, and we support the approval of the guidelines.
Thank you, Mr. Michael. I see you moving the mic.
Just very, very briefly, yes. Ms. Breuer is here from Portland, Oregon. She has a colleague with her, Erin Hansen. Ms. Manelski is from Juno Beach, Florida. So we've got folks here from Iowa, Florida, and Portland, Oregon. Probably most of the footprint of renewable productivity here in the state of California. I just want especially also to acknowledge and thank Isaac Cruz, who has worked on this project with us collaboratively for the last probably 3 years. It has been a collaborative effort, and these are 3 of the most prominent renewable and particularly wind energy producers in the state. But there are a number of other companies that collaborated with us who likewise support approval of these guidelines.
Okay. Mr. Cruz, would you like to share anything with the board?
Gosh, I think it would be fair to thank the core working group, the folks that participated from industry and also the assessors. It's been a long effort, and I think we've come up with a really good product, and it will go a long ways to equalizing the values for wind farms in California.
Thank you very much. Let me also thank Saba in my office, who has been intimately involved in this throughout this entire process, and extremely pleased that we have been able to provide this industry some direction after years of collaborating. Discussion, members? Hearing none, is there a motion?
Move to approve alternative 1 staff recommendation.
Member Ma moves to approve staff recommendation. Is there a second, members?
Second.
Second by Member Stowar. Objection, members? Without objection, such would be the order. Thank you very much for appearing before us. We made it.
Thank you for your leadership.
Our second issue, members, Rule 370 and 370.5 changes, which is a little bit shorter, and it just comports with the statute. Staff, would you please introduce the issues for the member?
Hello, Chairman Horton again. With me here is Mr. Bradley Heller from our legal department. I bring before you today the proposed amendment to Property Tax Rule 370, random selection of counties for representative sampling, and language for proposed Property Tax Rule 370.5, random selection of counties for survey or representative sampling for calendar years 2016 through 2020. Effective January 2016, Assembly Bill 681 changed the method in which the board selects counties to be surveyed and sampled. Rule 370 establishes a 5-year cycle in which all counties are to be surveyed and prescribes a method in selecting at least 3 counties per year in which to perform representative sampling of their assessments. The amendment to Rule 370 provides that the selection methodology does not apply for 2016 through 2020. The proposed Rule 370.5 prescribes the new selection methodology to be used for those years, 2016 through 2020. Under the new methodology, the largest 10 counties will be surveyed and sampled as before. However, counties 11 through 20, 1 county will be randomly chosen to be sampled and 1 to be surveyed. And for the remaining counties, 3 counties will be randomly chosen to be surveyed and 2 will be sampled and 2 will be neither. We'll get to basically swim away free. Staff of the Property Tax Department initiated a project to amend Rule 370 and to add new Rule 370.5 to implement, interpret, and make specific the amendments made by AB 681. Board staff worked with the County Assessors, California Assessors Association Ad Hoc Committee on the survey program in drafting the amendments to Rule 370 and the language for Rule 370.5. Interested parties were provided with staff's proposed amendments and draft language for the new rule on December 22nd, 2016, and invited to participate in the rulemaking effort. The only comment received was from Los Angeles County in support of the new proposed rule as written. As a consequence, we believe there are no unresolved issues remaining. Therefore, staff recommends the board adopt alternative 1. I am available to answer any questions you may have and ask for the board to initiate the rulemaking process for Property Tax Rule 370 and 370.5.
Discussion, members? Hearing none, is there a motion, members, to adopt alternative 1 to initiate the rulemaking process?
So move.
Moved by Member Stowar, second by Member Harkey. Without objections, members, such will be the order. Thank you very much. Appreciate the position as well. Thank the county assessors that the ad hoc committee that they established is working.
Yes.
It's a good process. We're engaging through the process. I believe that was established by Board Member Runner. And so it's good to see that it is being effective and good work is coming out of it. Thank you very much.
Thank you.
Madam Chair.
It's at the end. Okay. Ms. Richmond, please introduce our next item.
Our next item is item G, Tax Program Non-Appearance Matters Consent. Item G1, Legal Appeals Matters. These items may be adopted in one vote. Sub-item 2 has been previously pulled.
Thank you.
Move staff recommendation.
Second.
Okay, thank you very much. We have a motion and a second without any objection? Without objection, such will be the order. Next item?
Our next item is G2, Franchise and Income Tax Matters. These items may be adopted in one vote.
A lot of them. Do I have a motion?
Move staff recommendation.
Second.
I have a motion from Member Runner, a second from Ms. Stowell. No objection, such will be the order.
Our next item is G4, Sales and Use Taxes Matters. These items may be adopted in one vote.
Is there any, a motion? Well, I'm going to move the recommended action. Do I have a second?
Second.
Okay. Is there any objection?
Oh, there it is.
No. Okay, such will be the order.
I found my place again.
Okay, I'm sorry, we got lost our
I'm
place.
okay. I'm okay. I'm good now.
Okay. Ms. Richmond, next item.
Our next item is item H, Tax Program Non-Appearance Matters Adjudicatory. Item H1, Legal Appeals Matters. We only have one item.
Mr.
okay.
Mr. Anjija, do you have comment?
Just to tell you that this was Jeff Anjija on behalf of the Appeals Division. This is a proposed Section 40 summary decision. The hearing in this matter occurred on March 28th, and the board voted unanimously to redetermine the liability without further adjustment.
Thank you.
Move adoption of summary decision.
Second.
Okay, we have a motion by Member Runner, a second by Member Horton. Such will be the order. No objection? No, okay. Ms. Richmond.
Our next item is item H2, Franchise and Income Tax Matters. These items may be taken up all together or separately.
Mr. Eppolite?
The first sub-item is a petition for rehearing. Staff recommends be denied.
Move to adopt staff recommendation.
Second.
There's a motion to adopt staff recommendation and a second by Member Horton. Any objection?
Nope.
No, such will be the order. Thank you. Okay.
So now we have H22.
H22. Oh.
The second item is
There
a
it
case that was a oral hearing before the board, that was before the board back in November in Culver City. At the day of the hearing, the board decided 2 of the 3 issues before the board. Appellants that day brought additional documents before you regarding automobile expenses. The Franchise Tax Board reviewed those documents. Appellants agreed to the further adjustments. And before you is the summary decision that staff completed. Appellants have reviewed to the adjustments by the Franchise Tax Board and is the completed summary decision. And as mentioned, appellants agreed to the reduced adjustments by the Franchise Tax Board.
I just want to say I appreciate the working with the taxpayer. I mean, it wasn't the easiest of cases, and I appreciate that the reductions were made and that that staff reached agreement. So, is there a motion to
Move adoption of the summary opinion decision.
Second.
Okay, there's a motion to adopt the summary opinion by Member Runner, second by Member Stowers. No objection? Such will be the order. Thank you. Okay. What have we got here? Anything else? Ms. Richmond.
Chairwoman, while we have appeals here, would you like to take up item B1? This taxpayer has not shown up, or would you prefer to take it up later in the day?
Let's give the taxpayer the maximum amount of time. Let's just not forget about it. Okay. If he doesn't show, he doesn't show. Do we have a next item, or when are we supposed to be breaking?
At lunchtime.
So I don't have any break, funny, I don't have any break at all in my agenda items, so I hope you'll initiate that. It's almost lunchtime, that's why I'm asking. We have, what's our next item?
Our next item is item I, Tax Program Non-Appearance Matters. Item I2, Offer and Compromise Recommendations. These items can be taken in one vote.
Move adoption of all items, staff recommendation.
Second.
There's a motion and a second. No objection? Such would be the order. Okay, then we have Ms. Richmond.
Our next item are Chief Council Matters. Item J, Rulemaking. We have a Section 100 change. For J1, Sales and Use Tax Regulation 1707, Electric Funds Transfer.
Thank you. Mr. Heller.
Good morning, Chairwoman Harkey, members of the board. I'm Bradley Heller from the board's legal department. I'm here to request that the board vote to authorize staff to complete Rule 100 changes to Sales and Use Tax Regulation 1707, Electronic Funds Transfer. The changes incorporate and make the regulation consistent with amendments made to Revenue and Taxation Code Section 6479.3, which permit a person issued a seller's permit for a medical marijuana dispensary to remit amounts due for retail sales at the dispensary by a means other than electronic funds transfer before January 1, 2022.
Members?
Discussion, Madam Chair.
Yes, Member Horton.
Question, given the and I haven't read this, so I could be off, Mr. Heller, Keller, the budget change as it relates to Proposition 64, I thought it shifted the excise tax to the distributor. Is that the case?
I believe, well, let me just say that I'm not totally up to speed on the current amendments, but they don't apply to this particular scenario. That has to do with the specific excise tax on marijuana, and this actually just has to do with payments and prepayments of sales and use tax on sales by a medical marijuana dispensary. So that wouldn't impact these changes, and I'm really not 100% sure whether those have been enacted, but I believe the idea was to have distributors collect from a cultivator, I believe is what you're thinking of?
Okay. Now, well, the reason I ask is because, I mean, I'm supportive of the measure before us, but somewhat believable that distributors should have the same opportunity if in fact they are now required to collect the excise tax on the cultivators pursuant to the change going forward. Just would like maybe the staff get back to us and just share with us, you know, where we are in that regard as well. But one of the concerns as we sort of move through this process, and I do appreciate the parallel movement of making an assessment as to what the potential exposure may be to our employees in accepting cash. So as we sort of move in the direction of authorizing the acceptance of cash in excessive amounts, that we get rid of our little friend flying around here, that we continue to, my apologies, continue to move in the direction of trying to determine the security measures and how we can implement those simultaneously, that we provide this opportunity to this industry.
I have a question.
Yes, Member Ma.
I have a question. So this is relating to 7-member Gibson's bill, right? Where if a dispensary makes their payment by cash, they are not going to be assessed a 10% penalty.
That's correct, for failing to remit by electronic funds transfer.
Okay, so is it clear in the proposed amendments that they are not going to be subject to the 10% penalty? Because I don't see that.
Well, I believe it's clear in the fact that they're not subject to the requirement to even remit by electronic funds transfer for the statutory period. And so if you're not required to remit by electronic funds transfer, you can't get a penalty for failing to remit.
Okay, I just want to put it on the record
Okay.
that that is the understanding, because that was the purpose of the bill. And then number 2, it says a person issued a seller's permit for a place of business that is a dispensary, and you said it was a medical dispensary. What about under Prop 64 now that's going to just be any dispensary? So is this just any dispensary? Retailer, so there's no delineation between a medical or adult use?
Right now, this change is just a Rule 100 change to make the regulation consistent with the statute, and I'm not aware that the legal department has interpreted the statute or tried to apply it to a recreational marijuana or facility that sells recreational marijuana at retail.
So is that going to require another?
I'm not saying it does. I'm just saying I
legislation?
don't think we've, pardon me, I don't mean to speak over you.
Okay, that's
But I don't believe we've actually looked at that issue specifically yet, but it might be the case. I just don't want to say we've looked at it.
I can share Member Ma, if you will. In drafting it, I was the original sponsor of the bill, but in drafting it at the time, we didn't really know that Proposition 64 was going to pass and what the language was going to say and so forth. So there may need to be a revisit of the legislation as it relates to non-medical. Because at the time, the intent in drafting the language was for it to apply to medical because there was concerns about how the legislature was going to interpret Proposition 64 and when it would go into effect. And the thought was to have this measure go into effect expeditiously in order to provide some relief to the individuals who are currently actively involved in the medical marijuana industry.
Okay. So does this need a motion? No. Yes, needs a motion.
Move to
approve
adopt
the
staff recommendation.
Second.
There's a motion by Member Horton, second by Member Ma. No objection, such will be the order. Thank you.
Thank you.
Okay. Do we want to take a break? We have some thank yous to do. Retirees. Or do we want a break?
Whatever you'd like to.
Staff?
Take a break.
I think we want a break. I think it's kind of unanimous up here, at least three. We want a break. Okay, we'll break and be back at 1:30.
Yes.
Thank you. We're in recess. resume. We still have one more member. Mr. Horton. Equalization meeting. Noting Member Horton is still not in the room, we're going to, I'd like to skip the retirement resolutions to allow him time to read for his employee. And so the next item.
Would the board like to take up the cases?
N2.
What about N2? We've got N2, N3, N4. Oh, here he is. Okay. Scratch that comment. Thank you. We were going to take something else so you could read your retirement resolution.
Oh, okay. Well, you can still go ahead and take that.
No, that's okay. Ms. Richmond, I think we're ready to resume under regular order.
Okay. So our first item on this afternoon's agenda is the administrative session. Our first item is N1, retirement resolutions. We have a retirement resolution for Robert T. Kelly, Lorraine Simpson, Gilbert A. Smith, and Susan Sweeney.
Thank you. Ms. Ma?
Thank you. Robert Kelly, Business Taxes Specialist 2 in the Out-of-State New York District Office, retired on May 2nd, 2017 after 30 years of state service. Robert began his career with the State Board of Equalization in December 1986 as a tax auditor in the Out-of-State New York District Office. He advanced to positions of increasing responsibility, first earning an appointment to the position of Associate Tax Auditor in October 1989. Robert was first appointed to the position of Business Taxes Specialist 1 in January 1996 and Business Taxes Specialist 2 in February 2014. Throughout his many years of service, Robert has served the people of the state with fairness and dedication and will be missed by all. Thank you.
Okay, I will read the next one. It's Lorraine Simpson, Business Taxes Specialist 3 in the Taxpayers' Right Advocate Office. She will be retiring on July 1, 2017, after 29 years of state service. Lorraine began her career with the State Board of Equalization on July 18, 1988, as a tax auditor in the San Bernardino District Office and the Rancho Mirage Office. She then advanced her career to Audit Evaluations and Planning section and the Technical Support and Analysis section. As a result of diligent work and demonstrated ability, Lorene advanced to positions of increasing responsibility, earning promotions to the position of Business Tax Specialist 1 and then Business Tax Specialist 2 in the Program Planning Division. Lorene managed projects that served as technical advisor to the manager and then appointment to Supervising Tax Auditor 2 in June of 2000. She's directed the work of the Business Tax Committee unit from that position. Lorene was appointed in August of 2004 to the position of Business Taxes Specialist 2 as the lead technical advisor in the Taxpayer Rights Advocate Office and promoted to Business Tax Specialist 3 as technical advisor to the advocate in October of 2012. Throughout her many years of service, Lorene has earned 3 Superior Accomplishment Awards and is ending her career in the Taxpayers' Right Advocate Office, where she provided excellent counsel and support to taxpayer right advocates and her co-workers while providing many years of compassionate, resourceful, and expert assistance to the taxpayers of California. Thank you so much, Lorene, and have fun. Mr. Runner?
I have Susan Sweeney will retire on August 1st after almost 40 years of state service. Susan began her career at the BOE as an assistant clerk in the Business Taxes and Fee Department in September 1977, rising quickly through the office assistant and word processing series. In 1988, she became a supervising program technician and was quickly promoted to Office Services Supervisor 2. In 2009, she became a staff services analyst and then advanced to an GPA position in the legal department in 2015. Susan will be missed by many colleagues and friends whose lives and careers she has enriched. Congratulations to Susan, and enjoy your time in retirement.
Member Horton.
Thank you, Madam Chair. Members, I would like to acknowledge and congratulate a longtime associate, Mr. Gilbert Smith, who is currently the Assistant Chief of Field with the Board of Equalization in the 3rd District. Gilbert has provided the BOE over 37 years of exceptional services, starting as a tax auditor in the Culver City office in 1980. Don't remember exactly what I was doing in 1980, but he has done an exceptional job, worked his way through the process, and went from a tax auditor to a number of other positions, ultimately becoming the district principal auditor for 11 years. Later served as the Culver City District Administrator, where he managed both the audit and compliance programs. As Assistant Chief of Field, Mr. Smith provided managerial guidance and assistance to the Culver City, Glendale, Ventura, West Covina, and Norwalk offices, and continues to do an exceptional job. He is a very engaging, very caring, very passionate individual. Gilbert has this Southwest mentality. I see David smiling because I think he understands that. The Southwest mentality where the customer is always right, and how do we satisfy the customer and resolve the issues on the plane when they walk in the door, resolve every issue that we can. So he has done an exceptional job. His long and commendable record of service to the Board of Equalization and his philosophy has helped the agency in a number of different ways, especially in his current capacity. He has sought to portray that philosophy up and down the coast and the Board of Equalization. So as their 3rd District member of the Board of Equalization, and on behalf of my fellow colleagues here on the board and all the employees of the Board of Equalization, Gilbert, congratulations. I know you will enjoy your grandchildren, and waking up in the morning and not having an alarm clock might be one of the better things you look forward to. Take care.
Okay, thank you. Ms. Richmond, will you please introduce our next item?
We also have item N2, proposed revisions to compliance policy and procedures manual, chapters 2, registration, 5, returns, 7, collections, and 8, consumer use tax and audit manual, chapter 14, appeals procedures. Item N3, report on time extensions for Del Norte, Inyo, Lake, Lassen, Mendocino, Monterey, Shasta, Sierra, Tehama, and Tuolumne counties to complete and submit fiscal year 2017-18 local assessment roll pursuant to Revenue and Taxation Code Section 155, and item N4, adoption of property tax forms. And these items may be adopted in one vote.
Okay, members, do we have a motion? Anything to be pulled?
Move adoption of all items.
Second.
Any objection? Okay, Ms. Stoward moved adoption of all items. Member Horton, second, and no objection, so such will be the order. Thank you.
Our next item is item P, other administrative matters. Item P1 is the Executive Director's report. Item P11 is the organizational update.
Good afternoon, Chairwoman Harkey and members. David Gao, Executive Director. This afternoon, I just want to highlight some of the provisions of Budget Trailer Bill AB 102 and briefly discuss implementation efforts to date. As you're aware, AB 102 passed both houses of the legislature and is last week and is pending the governor's signature. The act establishes a new department which would be named the California Department of Tax and Fee Administration, or CDTFA, creates an Office of Tax Appeals, and maintains the elected Board of Equalization with its core tax administrative responsibilities as set forth in the California Constitution. The CDTFA would be managed by an executive director, chief deputy director, and chief counsel, all appointed by the governor, and the director would be subject to Senate confirmation. CDTFA is to be established as of July 1st of this year within the Government Operations Agency, and is to be responsible for those duties that are currently administered by the Board of Equalization, except those established in the Constitution. Current state employees of the BOE would be transferred to CDTFA with their current status, position, and rights for those employees involved in the functions to be transferred to CDTFA. The CDTFA would provide the BOE with administrative and personnel services. Onto creating the Office of Tax Appeals, that would be established independently in state government and would be managed by a director, chief deputy, and chief counsel, each appointed by the governor, the director again being subject to Senate confirmation. It would establish 3 panels of administrative law judges, ALJs, who possess certain requirements that are spelled out in the legislation. These panels would conduct appeals hearings as defined in the legislation. The elected board would continue to carry out its constitutionally established duties related to property tax functions as listed in the legislation, as well as those related to the alcohol beverage tax and the tax on insurers programs. The board would continue to conduct appeals through December 31st of this year, and after that date, only those appeals that are related to their constitutional duties. They would maintain civil service employees who keep their current status, again, possess their positions and rights necessary for carrying out the board's constitutional duties. A Sacramento office as well as a district office would be for each member. There, you would be able to employ your personal staff as established by the legislature, again, to carry out member duties. And they would retain, the board retains the authority to appoint an executive director. So in the days, literally in the days since AB 102 was passed by the legislature, the Government Operations Agency, GovOps, headed by Secretary Maribel Badger, has taken the lead on transition efforts. Yesterday, in an afternoon of short informational sessions, were held with staff here in the boardroom and live streamed to our district offices to describe the bill's provisions and give staff assurances related to their civil service status. They've established an email box for staff to send their questions and will provide responses and FAQs to be posted on our intranet site. We are coordinating other meetings on behalf of GovOps in the coming days with our technology team, our budget teams, along with the Department of Finance, and other meetings as requested. So at this time, this is the information I have. We'll continue to work cooperatively with GovOps, you, the board members, and others as we work toward implementing the legislation that was approved by the legislature and is anticipated to be signed by the governor. That concludes my report, and I'd be happy to answer any questions that I'm able to.
Any questions?
Yeah, let me start. I'll start. What are we assuming as an item is up for appeal, and Chief Counsel may want to be a part of this discussion. an item that comes to appeals, say in November, and then is given a 30-30-30. How do we, that's one set. The other set are those who are scheduled. That's while that portion of appeals is still with us, they're still people are being set for hearings in January, February, and March. So they're being set for hearings while we are the hearing board, but in fact, they're going to be being heard then by
The Office of Tax Appeals.
somebody else.
Yes.
There seems to be some language that tries to clarify that in Assemblymember Ting's letter to the legislature. I don't know if you've reviewed that.
I have, but I don't recall it in detail. I mean,
Okay.
I've read it.
Because it talks
briefly.
about somehow items that are in appeal. And it makes it sound like there could be some additional hearings that go on after,
That's not the case.
after that for a subset.
No, the bill is clear. That
Well, no,
after-
the bill is. That's why he was trying to clarify the bill with his letter.
Okay, but the
journal.
provisions in the bill are clear that after January 1st, Board of
So you've reviewed the
Equalization-
letter to the Journal?
No, I'm talking about the bill itself.
But have you reviewed the letter to the Journal?
I've only briefly seen it.
Well, letter to the
Okay.
journal probably needs to be reviewed.
Yeah, I think you need to review the letter to the Journal. Because again, it seems to me he was trying to solve a problem. Because if it was that clear, he wouldn't need to write the letter to the Journal. And so there just seems to be some question in regards to that particular issue. So if you could review the letter to the Journal
Okay.
to see exactly what he was dealing with, that would be helpful. But how about the issue, again, the 30-30-30? Somebody who's in appeal process, and one board says, okay, come back, and so we have basically an open hearing. And we have not concluded the hearing.
Mhm.
How does that work for that particular taxpayer?
My understanding at this time is that the matter would then go to Office of Tax Appeals, develop.
But that hearing wasn't ever opened by that group,
That doesn't.
right? I mean, because we basically have heard the hearing, right? And we haven't closed the hearing yet.
Mhm.
So they'd be going to somewhere else where the
So-
hearing hasn't even been opened yet?
That's right. So after January 1st, the Board of Equalization will not be hearing appeals. And appeals is defined to include petition for redetermination, a claim for refund, administrative protest, et cetera. So those matters after January 1st, regardless of where they are in the process.
You know,
will be heard by the board.
I know what the bill says. I'm just trying to think about if everybody thought about all the consequences of some of the specifics.
I think we can
You know,
recommend some cleanup.
And so I think that's my concern, because I know what it says. But legally, you believe that is a correct way to do it, that you would have somebody, we would have a hearing, we would then hear the, and then we would say, oh, we're not going to close this hearing, we're going to continue this hearing. But yet we have no ability to then have that hearing again. You think there's a legal way to actually take that hearing and give it to somebody else while it's a hearing that we opened?
I haven't thought about the details in that particular circumstance, how that would play out. I'm just interpreting the bill as it's written.
You think that's questionable?
How the bill is.
Right. I mean, how that would work for somebody if they had a continued hearing and and the people who had continued the hearing no longer was,
So there's going to be workload because this is a flow.
uh-huh.
So to the extent that the board hasn't completed hearings, which it never will because it's a flow, it's a
Uh-huh.
workflow, at one point, the work is going to be cut off, and it's
Okay.
then going to go, according to the bill, whether it goes to the Office of Tax Appeals or whether it goes to the department as an administrative matter. It'll be resolved in either one of those two either the office or the department.
So you don't think there's a questionable issue there?
No, but
Okay,
again,
okay.
I haven't looked into the detail of exactly administratively how that would be handled.
Okay, I think we need to get an answer on it. I think it'd be good for us to know if something if the hearing is not closed, what happens to that? Or if that person, if we just at that point could not do that, and the person, we'd have to fine for them, and then they'd have to then basically ask for a rehearing with the new organization. Right, that would be the other path to do it.
Exactly.
Right, okay. That's one of my questions.
We could give them 30. It's after 30:30.
A 222 day.
222. No, I know that there's cleanup language taking place, actually quite a bit of it, because there's a lot of unanswered questions. And so if members have specific issues, we might want to write those down, because I think there are plenty of members over in the legislature, in the Senate in particular, and I know also in the Assembly, that did not particularly care for the bill. And, were it not for the governor's office, it probably would be still tossing around, but it did go through. So I think they were promised, I know for a fact, a couple of them were promised that they'd be doing some cleanup. And so they were pretty insistent on that and casting their vote. So I think if you have any issues, I just rather, defray them for now, or, defer them for now. Any specific issues, I think it's pretty obvious that the bill has been studied, but not necessarily whatever might have to go into the cleanup. So I'd appreciate any and all suggestions. We'll coordinate them and we'll get them out. We can do that before the next board hearing, if we want. Just coalesce the questions. Okay, anybody else have comments?
Yes, Madam Chair. I mean, I would concur that, and thank you guys for establishing a process by which not only the members, but as well as the staff, and we can come up with a complete plan. The framework is in the legislation, but the guts, there are still some issues that they're trying to work out, and I certainly want to be cooperative and do what we can in order to assist with this transition to the intent of the governor in that regard. So I'm just going to share some of the concerns I have, but my concerns go to the employees and the taxpayers more than anything else. Want to make sure in the transition that we sort of consider some of those things. When the governor had, not this governor, but previous governor, I believe it was Governor Schwarzenegger, had requested that the board take a 10% cut in salaries and a furlough, that we furlough our employees. The board took a position that they were constitutional officers, therefore we would not have to, and so we didn't take the furloughs, we didn't take the pay cuts while other state agencies did. The distinction there was that we were constitutional officers and therefore we can make that decision. And so I'm just curious if in fact, if it's true that we're headed towards somewhat of a recession and we're anticipating if in fact there is that situation reoccurs itself, then are the members, this is just a question for you guys to kind of get the answer to, would the members be allowed to continue to advocate? I would imagine we wouldn't have any authority and that the director would have the authority, but I don't think the director would have the constitutional position to do other thing than to conform. But I'd like to know where the members' advocacy can start, or if it can start as a relay, because in our last professional development, I personally made a couple of commitments that I was going to work on staff parity, pay parity, which was progressing well, to have pay parity with outside private entities, as well as differential pay for employees who lived in areas where the cost of living was relatively high, and so forth. So I'd like to know if we continue to have a role in that. I would imagine as private citizens we may, I'm not quite sure. So, and the members also served as a conduit to some extent. Certainly all of these issues are championed by the various unions, and I think they do an exceptional job. But the members have served as a conduit between the administration and the employees when it came down to disputes of nature. For example, the most recent request to stay on the implementation of CROS, even though it was a misunderstanding. In those environments, what role does the members play in does the advocacy now fall solely on the union, or can members assist the unions in advocating on their behalf for our employees? The same thing with our investigators. I had made a commitment to work on the public safety status for those employees, and I know that we are currently in the mix of trying to sort of figure that out. But that advocacy, does that go away come 7/1? And whether or not someone assumes those roles, or whether or not that's something that out of, in cooperation with the process, that the process would be for us just to make recommendations, I guess, to the new executive director over that agency. The other question falls along the lines of the Taxpayers' Bill of Rights, 1704 through 17408, I believe. Some further understanding of whether or not the Taxpayer Bill of Rights applies to the new BOE with regards to the taxpayer's advocate, and to what extent are we required to do a level of education. And lastly, but not least, is that in establishing the Southern California Settlement Division, in that objective was I don't know if they're currently limited terms or not.
They're permanent.
We got them permanent. Okay, well then that worry goes away. I was a little worried about them because we went through that whole process of trying to get them permanent. So it's good to know that they are permanent, and so we look forward to this new adventure, and being of whatever assistance we can to try to make it work. But again, my primary concern, this dispute or debate, I guess, over tax court versus the elected body, it's been around for years. I myself have opposed it on a number of different occasions, primarily because of the concern for staff and concern for the taxpayers of the state of California. But now that it's law, like any other constitutional officer, we want to make sure that we, as long as it's law, we want to make sure that we do what we can to comply with it and assist the governor's office in making sure that it happens.
Thank you.
Okay, I just have a little something here that I can probably add for the record. Under SB 86 and AB 102, the statutory provisions in Government Code 15670B and 15670C grant authority to the gubernatorial appointed director of the Office of Tax Appeals. While the director's role is to run day-to-day operation within the organization, only he or she will not be involved in the adjudicatory decision-making process. So that may answer our questions up here. The administrative law judges will be hired through the normal civil service exam process, meet all the necessary requirements, including those related to ethics, conflicts of interest. The director's role will be to ensure that each region has sufficient ALJs and that the cases are heard in timely and efficient hearings. Second, Government Code Section 15672 and 15674B provide that the OTA shall take over non-constitutional related appeals from the Board of Equalization on or after January 1, 2018. In order to ensure a seamless transition, all taxpayer appeals that are set on the calendar for hearing at the BOE on or before December 31st will be heard and decided by board members. So on or after, that could be a flexible thing depending on how Mr. Ting saw this to work. Third, the legislature will work with the administration, including the California Department of Tax and Fee Administration, on the transition of the non-constitutional appeals to the OTA to ensure that the regulations for OTA allow certified public accountants to practice before the OTA's panel in the same manner under which they currently do before the BOE. So there will be some cleanup language, some other things. Like I said, we've raised a number of issues, and I think they're being taken seriously. And the reason we want to do this is we want this transition to be clear and painless for those that we used to hear appeals for, and we used to help down the district. I think it's really important for the people that pay the taxes and the people that have problems with the issues of their taxes and fees to have some kind of relief. And so we're working on that. I think we will, and I think it'll work out. over time. I think it's going to be interesting to implement in a short period of time, but I think any and all suggestions for how to make this simpler and more seamless, I think would be appreciated, I think, by the governor's office, by the members involved, and everyone else. So if anybody has suggestions, I think that's where they probably need to go. So thank you very much.
No, I've got
Yes.
a couple other comments. One of the other issues I think is going to be fundamental in here in terms of identifying role is the difference between what was contact in the bill and what was said by the authors on the floor.
Well, this was the author,
No, I'm not.
author's letter to
I'm-
the file, I
right.
believe.
I'm not talking
Okay.
about that. Because one of the issues that I'm concerned about, and that is the function and role we have to educate and advocate for taxpayers. As you know, right now, we do numerous seminars, each of us, across the state. EDD doesn't do them, FTB doesn't do them, BOE does them, and we invite then those agencies to come and participate. And so we basically train and help thousands of people each year who have to navigate through these challenges of a tough tax system here in the state of California.
They just asked me to do that.
So one of the issues that is that I'm concerned about, and that is I say, look at what was said. And let me just read some of the specific quotes that make sure we're all on the same page in regards to this. Assemblymember Ting, who authored the bill, said the 4 elected board members will remain. The Constitution is to equalize property taxes and work with counties and county assessors will continue. They will also retain their staffing, and they will also be continuing to encourage to be taxpayer advocates. Later on, he also says in a statement later on, again, this is what you do when you're trying to get votes, right? You got a bill on the floor, right? You're trying to explain what the bill does. Because you want to make sure everybody understands it. So that's how you speak on the floor, right? And just again to clarify, the 4 elected board members will continue to be there for taxpayers. They will again be taxpayer advocates. They can take meetings with constituents. And in fact, I think it frees up their ability to be a greater advocate.
Maybe.
That's pretty clear. Senator Roth who presented the bill in the Senate. His comments were the BOE will continue to have district offices and staff and constituent issues. The BOE members will continue to be able to function as taxpayer advocates for their constituents with respect to not only the issues, but frankly, the board is involved with many other tax issues, I suppose, if the board members decide to want to do that. So again, I think it's pretty clear there, and let me read the final quote, all dealing with advocacy. Again, this is from Ting, again, the elected board of Equalization stays, they get to be full-time taxpayer advocates. So I think that's important for us to shape then what we're going to be in the future. I get the idea, the concern in regards to the separation between being advocates and then being judges. I get the idea of being advocates versus the idea of how you deal with staff, but it's pretty clear through the quotes that the intention that got the votes on the legislature, the floor of the legislature, was to clarify that this board continues to be, and if maybe even can expands our role in regards to expectation, in regard to advocating for taxpayers. I say this in this context. Right now, I'm having to decide whether or not to cancel about 6 taxpayer seminars. That's about 1,500 taxpayers that aren't going to get educated. And education is real important. Let me tell you about a phone call I got 2 weeks ago from a taxpayer from Stockton. He sold live bait. He didn't know live bait was taxable. He bought a business, and the guy who bought it from said, oh, no, that's not taxable. And as a result of that, he just continued his little business and didn't charge tax. He was audited. Has a $30,000 tax bill. Now, you can imagine somebody who sells live bait probably doesn't have $30,000 on him. So basically going to close his business. California tax laws are incredibly confusing and hard to understand. If there's not an opportunity for us to educate taxpayers, there's going to be a whole lot of little business people out there who are going to be confused and are going to lose their businesses. So I believe that's the intent of what the legislature saw when they talked about us being advocates for taxpayers, to protect taxpayers and educate taxpayers in this very confusing process. So I do think we're going to go through this process of trying to see who we are in this process. And I think at times it's going to be a bit stretching and challenging. But there's no doubt in my mind, the legislature's intent was for us to be not taxpayers just for property tax. It's very clear in their language. It says for all taxes, and it also uses the word constituents, which is who we were elected by. So I think those are the kind of things that we're going to have to work through as we deal with this in the future and trying to identify and frame up who we are and what we are. And I think those are going to be the challenges over the next few months, trying to deal with that and interpret that.
Thank you. Anything else, members? No. Okay. Mr. Gao,
Thank you.
any further reports?
That does it for me today.
That does, I know. That does it for me, too.
Okay. Thank you, Board.
Thank you. CROS project update, I believe. Technology Deputy Director's report. Mr. Capelong. I'm sorry, I took your role.
That's fine. You're the chairwoman.
I'm just moving this along.
Good afternoon, honorable members. I am Scott Capelong, Acting Chief Information Officer and Deputy Director for the Technology Services Department. I appreciate the opportunity to provide this month's update on the CROS project. I am pleased to report that the project continues to remain on schedule and under budget. We continue to make great progress in our design sessions and expect this phase of the project to be completed by October 2017. As part of our efforts to ensure business requirements are being satisfied in the design, a sandbox environment has been created which allows staff to navigate through the new system and confirm business capabilities are working correctly. Our subject matter experts also get hands-on experience with the new system and an opportunity to revise and clarify business requirements when needed. We are also launching a CROS Corner where all BOE staff have an opportunity to explore the new system. Computer workstations are being set up in common areas of the agency where they will have access to a test environment. This will allow staff to familiarize themselves and become comfortable with the new solution before training and implementation. We have set up a CROS Corner at our headquarters and Sacramento district offices and will expand to other offices starting next month. Through the month of May 2017, the project budget status is as follows. For the current month, 88% expended, year-to-date 53% expended, and project-to-date 79% expended. That concludes this month's report. I'm prepared to respond to any questions that you may have.
Thank you. Commission members, Ms. Ma.
I have a question for Mr. Gao, perhaps. Since the agency is going to have a new format starting July 1st, I assume that CROS will also move over with this new CD, whatever acronym.
That's correct. And we're meeting with actually the Department of Technology tomorrow afternoon to discuss that as well. And CROS is a central part of that conversation for tomorrow.
Okay. And so I know we were going to appoint a CEA to replace Mr. Cayeti, so we no longer have to worry about doing that. Is that correct?
Yes, that's what I would believe too.
Okay.
Correct.
So I have no questions for Mr. Capelong then. Assume someone else is going to be overseeing this this very complicated process. So thank you.
Madam Chair.
Yes.
Along the same lines, as you know, I've often been supportive of CROS from the premise that I think it's an exceptional tool and will be very useful. But I've also held that it's just a tool without the training and of our employees, that I believe the revenue sources, the source of revenue is actually having the employees be well-trained, and that they in turn will actually generate additional revenue by using this tool to be more efficient, is more the philosophy that I sort of have. But this will no longer be under our jurisdiction, I believe, as the new BOE. And so how do we communicate with the new agency in order to ensure that that does take place, or any concerns that we have as relative to the contract and the revenue streams and the various different benchmark or matrix that are used to determine that. I don't think I ever really got to a point where I was actually comfortable with those. And we never really got to a point where we get a report on what they are. And so I still have concerns about whether or not those revenue streams, how we measure those revenue streams, and particularly now that you have these tri-agencies. And so the efficiency of one agency will determine the overall revenue stream. So as matters move through the appeals, theoretically, there's a revenue stream from accelerating matters through the appeals process. Theoretically, there's a revenue stream on the constitutional side as a result of that activity. And so as you begin to, I know you guys don't have the answers to this because we don't have the answers, and most of the legislature, if not all, don't have the complete answers. So if you guys can kind of get back to me and let me know. Again, we want to be compliant, but want to be able to express the concerns about assuring that, one, our staff, their professional development, their upper mobility creates, and that we don't. One of the things that elected officials sort of bring to the table is a high level of sensitivity to how it affects individual personally. And thank God for our executive team because they do the same thing. I don't know to what degree that continues on in the process. So please get back to me and let me know.
Will do.
I have one question. I'm assuming that property tax was part of CROS and that these other fees were part of other two gas areas?
The property tax
and diesel
program was not part of.
It was
CROS
not.
program.
Okay, what about the diesel and what about the insurance?
The alcohol program was, and.
I'm confused.
Right, so we believe that the alcohol and the insurance programs that would go with the Board of Equalization are part of the CROS solution, and that's one of the things that we will be looking at with the Department of Technology and the Department of Finance to see what adjustments are going to be necessary for the compensation model as well as the scope of the project.
Right, well, I think that might be one area where we might want to keep those in the CROS system because we certainly don't want to keep them in DOS.
Right, so, and that's one of the
I'm just saying, those little hand-printed notes and stuff and shoved in everybody's desk is kind of what started this down the road anyway in the SEO audit. So if we could get everything kind of up to speed, for this high-tech state.
Sure.
I kind of like that.
Yeah, absolutely.
Okay, yes.
Since we're talking about property taxes, I know I have gone around to my assessors in my districts, my 23 counties, and I don't know if there's any way that we can automate more on a statewide basis, and many of them did ask, especially the smaller counties, whether the state board could help in this. We also know auditors don't really want to go up to Del Norte and camp out for 2 weeks. It's also very labor intensive for the assessors when our auditors are in there, and there's got to be, with technology, some way for us to be able to accommodate some of these auditors, these surveys that are happening so that we don't have to physically, do what we've been doing, for 100 years. And I know some of the property tax processes are very manually intensive. I think there's one process where there's only 2 people that know how to do it. And, when one retires, there's only one person. So, I think we as a board also should really look and see how we can better automate and update our real property tax systems as well, since that is staying with the board.
Point well taken. Yes.
Okay, thank you.
Okay.
Next item, I think we're supposed to have closed session, but I would almost rather take our cases Yeah, if we could move closed session to the end of our hearing, if that would be good. I think I'd rather see our other cases go. Okay, Ms. Richmond, please introduce our next item, assuming that our section Q will be moved to the end.
So our next item is item C, Sales and Use Tax Appeals Hearings. Items C1A and C1B, Mohammed A. Ghazili and Rosina Ghazili, please come forward.
Okay, Mr. Anjija, would you introduce the items, please?
Good afternoon, Madam Chair and members. I'm Jeff Anjija on behalf of the Appeals Division. The appeals before you present 2 consecutive audits of the same business. The appeal of the first audit period involves 1 unresolved issue, which is whether additional adjustments to the understatement of reported taxable sales are warranted. The appeal of the second audit also presents 1 unresolved issue, which is whether claimant has established that he is entitled to a refund. In addition, for the first audit period, we have a revised recommendation to delete the measure of tax related to the unreported cost of self-consumed merchandise, which was discharged in bankruptcy. It's approximately a $371 reduction of tax.
Thank you. All right, welcome to State Board of Equalization. Please introduce yourself for the record. You will have 10 minutes. The department will then have 10 minutes, and you will have 5 minutes more on rebuttal.
My name is Mohammed Arshad Ghazali, and I am the taxpayer.
Okay, thank you.
Thank you.
Is this gentleman going to speak?
My name is Edward Escale. I'm his representative.
Thank you. Okay.
I just want to let you know that I am an electrical engineer who was working as a computer software engineer and was laid off in 2001. In August of 2001, I was laid off and was struggling to get back into the industry. During the time, due to the dot-com bust, there were no jobs available, and I got an opportunity to take over this business in 2002, which was 100 miles away from where I was living. And I had no choice but to uproot my family and move over closer to the business so I could manage it. Having no experience in running a business, nor any training from anyone or guidance from the Board of Equalization or any other kind of entity, I did not know what the outcome would be as far as the business went, because as soon as I took over the business, within 3 months, I was notified that the underground storage tanks that I had were not in compliance. I had to end up spending $150,000 in loans in order to take care of that requirement to be able to sell fuel again. I had to draw money many times on my credit cards to pay my bills, including the rent. There are about 15 gas stations in 2.1 mile of Oakdale, where the business was located, and in order for me to be competitive, I had no choice but to sell my gas at a loss so I could attract customers. Based on the random fuel inventory or the survey that was done by the Board of Equalization, where they took Monday, Wednesday, Friday, or Tuesday, Thursday from a random test, I have proof shows that I had done nothing but sold business gasoline at a loss. So I don't understand how I could have understated. The store is also that I had was a very small store because I had it at the gas station because it had a 3-car garage with it. So there was very limited space where I could sell any kind of inside sales. So based on the delegated Board of Equalization markup of 27.42%, my cigarette markup was 10%, beer and wine about 18%, and miscellaneous taxable was 22%. So overall markup comes out to be about 16%. And to be competitive, not 27.42% claimed, and for 2007 through 2008 was 11.9%, not what was said by the audit. I lost my business and I had to file bankruptcy in 2012 because of the Board of Equalization, claiming that I did not file a properly paperwork after the determination of 3/15/2010. for 2007-2008 audit. Where that was filed within 30 days, the board levied my account and took all the money that I held for the fuel payment that day to the supplier. The supplier stopped providing fuel to me, and I went out of business. On top of all of that, the person who did the audit, who did the levy, decided to take 2 days off and was not available to even for communication. That's all I have to say at this time.
Thank you. Does your representative wish to speak?
Actually, my statement is that this case has been going for a long time, over 10 years now, and we are here just to put an end to today. And also, I'm asking you, just if it's possible, kindly to remove all the interest or portion of interest on my client tax liability. Not more to say.
Okay, thank you. To the department, please introduce yourself. You have 10 minutes. Thank you.
Good afternoon, Chairwoman Harkey and members. My name is Scott Lambert. I'll be representing the Business Tax and Fee Department today. To my right is Andre Skitt, also with the Business Tax and Fee Department, and to Mr. Skitt's right is Stephen Smith with the Legal Department. In this particular case, there are 2 audits that were conducted back to back. In the first audit, the taxpayer had limited records. There was no detailed records other than paid bills. The markup that was shown on, they did have profit and loss statements, indicated that the fuel was sold at a minimal markup, less than 1%, actually 0.4%. And the sales from the mini mart were sold at a negative markup. So the department conducted 2 tests. One was for the fuel and one was for the mini mart. On the fuel, we did take certain days and came up with a markup. The taxpayer provided us with records as to the selling amounts in various weeks throughout the audit period. We verified those amounts and used those. The markup for gasoline was, the audited markup was just over 3%. For premium gas, it was over 5%, and diesel was about 6%. Overall, it was 3.59%. There's a little difference it shows in the audit because of taxes. I can explain that if necessary. It doesn't have any effect on the audit, though. So there was a relatively minor markup on the gasoline for audited. For the mini mart, a purchase segregation test was performed using 4 months. Came out 76.64% of purchases were of a taxable nature. A shelf test was conducted using prices from September 2006 and purchase prices from September 2006 and shelf prices from November 2006, and a markup was developed, which was 27.42%. Those figures were applied against the audited mini mart taxable purchases. They were added to the fuel purchases compared to what was reported, and there was a difference of $928,000. It should be pointed out that the taxpayer claimed over $1.3 million in food purchases during this period of time. The audited, using a 50% markup, would only put about $237,000. So it appears that food was overclaimed by $1.1 million, which is actually higher than the difference that's been found in the audit. Given that there's a low markup for fuel and for mini mart, it appears though that both fuel and mini-mart sales were understated. There was no negligence applied in the first audit. The taxpayer did file a petition timely that was accepted. In the second audit, the taxpayer sold their business in November of 2008, and a tax clearance was requested by the buyer, and an audit was selected. For there, the taxpayer had limited records for that period of time. We did use the figures that were established in the original audit to develop the tax liability in this audit. The taxpayer had filed bankruptcy in 2012, and due to that, since the taxpayer had not filed a timely petition, the bankruptcy court dismissed the liability. Now, there was an amount that was collected from the taxpayer from a levy that was about 2 months past the notice of determination, in which the board collected $45,000 from a bank account. So that is what is at issue in this case, is the claim for refund for the $45,000. That's just a fraction of the tax portion of the liability. The board is precluded from collecting any additional monies in this case because of the bankruptcy filing. And that was because they did not file a timely petition, which allowed the liability to go final, which allowed the court to essentially write off the liability. There was a penalty that was applied in the second audit, but since it's only, the liability is $45,000, essentially the liability does not include interest or penalty in the $45,000. It only includes a portion of the tax liability. In regards to the taxpayer's claim for interest, I would point out that the first case is very old. There does not appear to be a delay on the department's part in this case. It was the taxpayer had requested that the first audit be combined with the second audit, and so therefore the case was deferred for the second audit, and then there were a number of delays that were requested by the taxpayer in the hearing of this case. So accordingly, the department concurs with the appeals division revised recommendation.
Thank you. You have 5 minutes on rebuttal. If there's any points you'd like to make with regard to what they said.
The only thing I have to say is that the board had given me an administrative protest. To this day, I don't know what it means, because everything stayed the way it was. They did go through and completed the audit process for that time period of 2007 to 2008, and that was it. So right now I'm in a situation where this is going on for the last 10 years, and I want to put this behind me so that I can start building my future in this country. I don't have the energy or the time to appeal over and over again, nor the money. My life has been ruined because of the Board of Equalization, and would like to request either a pardon in this matter, or if cannot be pardoned, then cannot be granted, then please reduce or relieve the liability and waive the interest so that I can start picking up the pieces of my life together and move on. Thank you.
Thank you. Okay, any questions? I have some. Okay, this is for the department. The second audit was performed after the store was sold. And the calculation of audited fuel sales in the second doesn't use shelf test. It uses statewide average selling price for gasoline. And it did account for lower prices in Oakdale. So I'm just, the markup of the cost percentages for fuel are higher than noted in the first audit. Is there any consideration to be given there?
Right. To explain it further, as you mentioned, the liability in the second audit was calculated slightly different from the first audit. In the second one, the year 2007 sales figures were used, and it was based on the statewide average as adjusted for the taxpayer's actual selling amount based on what's a website called Opus, or a company that's named Opus. And the selling price was, I believe, 8.32 cents below what the statewide average was. So it did give the taxpayer a reduction. The markup for fuel during the second audit appears to be a little over 8%, where it was only calculated at 3% in the first audit. The taxpayer provided records after the audit to the audit supervisor that was conducting this, and the audit supervisor compared those fuel sale records to the audited records and basically came to the conclusion that the audited figures were similar to what the recorded figures were. But what I would state in this particular case is that even if you made an adjustment from 8% down to 3%, that it is not going to make a difference in the liability, because the liability for the second one is only $45,000, and you would have to go, I think it's maybe around $20,000 in tax adjustment in order to get the liability below where they would end up with a refund in this particular case. And then if you got the tax down, the $20,000, you still have the issue of interest and penalty that would need to be taken into account in this case. So the adjustments that would have to be made would have to lower the liability substantially below the cost of both fuel and for the taxable mini-mart sales.
Yeah, and so they've already written off, though. They've already written
For the
off
second
20
one.
Yeah, on the second one.
That's
So it
correct.
probably wouldn't make that much difference. It might just cause more consternation. Okay, for the taxpayer, please. Why did you report more sales to the IRS than the BOE? Comparing with your IRS,
Why did we report more sales to IRS?
I have
Why
a
did we
difference
report more
here.
sales to IRS?
2003, you reported
More sales to IRS than BOE.
I don't remember doing that.
In 2003, you reported a $79,000 difference. In 2004, there was a $54,000 difference. In 2005, there was a $185,000 difference. In 2006, there was a $14,000 difference. The IRS being reported higher than...
I was not aware of this at all.
Okay.
I just found out today.
Okay, that would be a question. The department states that your client, or that you provided actual sales prices for gasoline by month and year. Did you provide actual sales prices by month and year to the department?
Yes, I did, and here is proof that shows month after month where I have a loss of the fuel sales.
Okay, so did you use those figures for the audit?
Yes.
Okay, so why are you disputing that?
Disputing what?
Well, they used those figures for the audit. Are you disputing
Okay,
them?
what they had done is the person who did the audit for the 2007 to 2008, we provided him with the invoices and everything, and the packet was returned to us the same way that it was given to them. It was never opened and never looked at. So when I asked the person who did the audit that what was your base on the audit, they said, you know what, we used the numbers from the previous audit. That's what was told to us.
Is that what?
Well, there's two different things going on.
Okay.
There's the original audit and there's the second audit. So, in the first audit, we used the figures that the taxpayer provided us because, as I initially said, we used some random days to come up with our markup. Originally, the taxpayer was able to provide us with additional information, and that's what we used to establish the liability in the first case. In the second case, the taxpayer provided us with records for that period, and we compared it to the audited numbers, and they appeared to support each other. But the way we developed in the second audit is we did use the statewide average as adjusted for Opus, where there was the 8 cent a gallon difference or lower price that the taxpayer was charging.
Okay. Why did this audit go on so long? What was this, or why did this take so long to get here? What were the timeline?
Right. So, well, the first audit period went through December 2006. There doesn't show anything that was out of line. It went through the normal process, but after the decision and recommendation, the taxpayer did file into settlement. It was not accepted there, and then it came back into for a board hearing, and at that time, it was taken off the calendar.
What year was that?
First hearing was scheduled for March 2013, and at taxpayers' request, it got delayed 7 times over the next 4 years.
Okay.
That's for the first audit period.
Thank you.
Because, there was also a length of time where it got connected to the second audit period, and so it was held up to, before all the adjustments, before the postponements, it was linked with the second audit period, and so they were both going to be heard at the same time, and that's again, what slowed down.
That's another cause for delay, right?
Exactly.
Okay, thank you. Anyone else have questions? Any questions? No, everybody's crystal clear, huh? Okay, this is a tough deal. It's gone on for a long, long time, and so it's always hard to see these and have these drag out like this. But I'm not sure where anything stands right now. I would like to make a motion to support the staff recommendation on both cases, but maybe perhaps send this to OIC. I'm not sure that there's a lot to be had, and I want to be sure that we have the opportunity to work with them.
Second.
Okay, motion's got a motion and a second. And is there any disagreement? No. Okay, such will be the order. The department will tell you what we've decided. We've decided to rule in their favor, but to have them work with you on offers in compromise.
Okay, thank you.
Thank you very much.
Thank you.
Thank you. All right.
I have a quick question.
Yes.
Are we still waiting on an income tax? Have we heard from them at all?
No?
So is FTB still waiting here just to see if they show up?
Yes. They just like us. Oh, okay, well, we'll have to just, what's that case? If you could call that case, it's a B item, is it B1?
So that was item B1, Joseph West and Patricia A. West.
Okay, I'll move to, for the staff recommendation.
Second.
Actually, Madam Chair,
One-
there's no
one-
staff recommendation. I would amend that motion to sustain the franchise tax board.
Oh, sustain the, okay,
Members,
I'm sorry, confusing.
may I just suggest that we allow appeals to put it on the record, maybe?
They're not here either.
Or has that been done? Did I miss that?
To read the issue.
Oh, okay,
I don't have that.
I'm sorry.
And
They're not
appeals,
here.
they're in the other room. I'm sure they're on their way.
Okay, we'll just wait.
Okay.
Just give me 1 minute.
But let our acting chief counsel put it on the record. I'm sorry, I kind of got carried away.
But
I've been doing that a lot today.
board proceedings has just advised us that they're on their way.
No.
They,
They're
No,
not,
the council is,
Yeah, the
but we're gonna have Ms. Kelly.
Madam Chair, the issue in this appeal is whether the proposed assessment, which is based on a federal adjustment, is barred by the statute of limitations. And secondly, whether appellants have demonstrated error in the proposed assessment of additional tax, which was based on a federal adjustment.
Thank you.
And this is for the year 2005.
Okay, so
Okay, so now I need scratch the last motion.
I have a question first.
Yeah, I have a
Yes.
question too.
Yes.
Okay, now that she read what the issue is and they're not here to appeals to Chief Counsel, can we decide it on the record? Would the proper motion be to decide it on the record?
Yes, that would be fine.
Okay.
and also, I've just been informed that it should be sustained with concessions by FTB, which is noted in the hearing summary.
Okay, thank you.
Oh, that's correct. Let me just read that for the record, that the respondent's proposed assessment of additional tax has been reduced to $4,145.
I seem to recall that.
And further, that the accuracy-related penalty will be abated at the conclusion of the appeal.
Okay.
And Ms. Richmond, the taxpayer was notified they were supposed to be
Yes.
here today,
Yes,
This
ma'am.
morning, right?
this morning, and
yes.
they never showed up.
They never showed up.
Probably because there were many concessions made throughout the process. Actually, the FTB worked with them.
They even responded to the hearing notice that they would appear.
Yeah,
Okay.
but they have not been here. So I think there were numerous concessions made, a lot of work back and forth, and so we're down to $4,000. So is there a
I
motion?
move to sustain the franchise tax board based on FTB's noted concession to reduce the tax to $4,145 and to abate the accuracy-related penalty at the conclusion of this hearing.
Is there a second? Second by Member Runner. Any objection?
Madam Chair, if I just may ask the legal counsel a question, just want to, procedure-wise. It's been introduced, it's on the record. All parties have agreed to the stipulations that they're going to reduce at least franchise tax. You're speaking on behalf of Franchise Tax Board that the reduction,
Well, I'm speaking on behalf of the legal department, the appeals division, and I'm simply explaining the status of the case right now. So as it stands right now, FTB has made concessions, but the liability isn't entirely abated.
there's still liability there.
Yes.
I just don't know. I'm thinking maybe FTB should come forward and say that.
Excuse me.
I defer to you, Amy, but that's just, I don't know why I'm thinking that, but something in the rules seem to make me want to have that done. but-
Yeah, there's no need for FTB to reiterate
All
the
right,
amounts.
All right, you guys are good. Following your counsel.
By the way, that the FTB concessions are in FTB's opening brief and in the hearing summary.
Right there.
Yes.
Okay, so I'm going to take this as legal counsel putting it on the record on behalf of FTB and the Board of Equalization's appeal unit that FTB has offered such concessions and that the motion incorporates those concessions. With that in mind, no objection, members.
Okay. We had a motion, and then we had a second, and no objection. Some verbiage in between. Thank you. Okay.
I figured they had something else to do today.
Yeah, I think so, especially since it was down, but it was quite high and got reduced to 4,000, so that was a lot of back and forth, proving up and whatnot. Okay, the next case, Ms. Richmond.
So our next case is C3, McFlower Corporation. Please come forward. Oh, I see you are here.
We got a head start.
Here. Okay, thank you. Mr. Anjija, will you please introduce the issues in this case?
Madam Chair and members, the appeal before you presents two unresolved issues, which are whether additional adjustments to the amount of unreported taxable sales are warranted and whether petitioner was negligent.
Thank you. Welcome to the State Board of Equalization. You please introduce yourself for the record. You have 10 minutes, and then we'll defer to the department, which will also have 10 minutes. Then you have 5 minutes on rebuttal. Thank you.
Thank you, Madam Chairwoman and the members of the board. My name is Jesse McClellan on behalf of petitioner McFlower Corporation. I'm also joined by Mitchell Stratford with McClellan Davis, also on behalf of petitioner. This case involves a medical marijuana dispensary and an audit of the business for the period of first quarter of 2008 through second quarter 2011. And the time frame is important because there were some significant changes locally and within the business itself that have an impact on the audit. The audit was performed based on an observation test. There's a lot of details that go into it, which I'm going to allow Mitch to elaborate on. But in summary, the test, as we sit here today, only includes one full day, and then it includes a number of random days where there was 1 or 2 hours of observation that was performed. It's our contention, and has been our contention, that the tests should be performed by using at least one additional day, full day of observation. And the decision or recommendation actually made that directive to the audit staff. The audit staff did not follow that recommendation. There's also records that are relied upon in the audit as it pertains to credit card deposits, but only for a portion of the period for which those records are relied upon. Or I should say only for a portion for which those records are available. We think that those records, to the extent they are available, should be used in their entirety to compute the audit liability. We do concede there is a liability. We think it's lower than what's asserted. And ultimately, we've presented an alternative methodology that computes the obligation, which we are asking the board to direct staff to use. And with that, I'll turn it over to Mitch that will share some details.
Thank you, Jesse. Board members, before I get into the specifics of our alternative computation, I just kind of want to walk you through some of the procedural things that we went through with the department once the DNR was issued. So basically, a DNR was issued in November of 2014, which recommended that 2 full days be performed. I reached out to the department on 3 separate occasions in January, February, and March of 2015, and my requests were ignored. After my 3rd request, the audit supervisor contacted me and we discussed how the observation test was going to be performed. Namely, that the auditor would be out sitting in his car, he would count the number of customers that entered the dispensary, and that the taxpayer would be there and provide the individual sale receipts for that day. So after we had that conversation, I agreed I'd contact the taxpayer, see which days would be best for the department to come out and perform the observation. I think we provided 9 days to the audit staff in the coming month when the taxpayer would be available. A week went by and a few of the days had lapsed, so I reached out to the auditor on 3 separate occasions to ask him which day they would be performing the observation test, and he told me that he was going to refuse to answer my question and that they would just show up whenever they decided it was appropriate. That's pretty uncommon in my experience, so I reached out to the audit supervisor, and she basically had the same story: we're going to come out, there's no need for you to know. Finally, I contacted the district principal auditor because I figured it's really uncommon. Normally, the department does meet with the taxpayer and schedules a day, and the district principal auditor also refused to disclose which day. And it just so happened, as I was talking to her, the auditor left me a message on my voicemail and said, "I'm here." So we called the taxpayer and basically drove out to the business. They performed the full day of observation that day. A couple weeks later, I reached out to the auditor and I said, "Can you please send me the results of the first day of observation? Let's work on scheduling a second day, in accordance with the DNR."
The auditor responded by sending me re-audit working papers in which it included the full day of observation and then 21 hours of disjointed 1 to 2 hour observations that were performed actually while I was attempting to contact them regarding the observation, mainly in February and March before the full day was performed. We set up a call with the DPA to request that they perform the audit in accordance with the DNR, and the department felt that the observation they had performed was sufficient and they did not want to perform a second day. At that point, we prepared a request for reconsideration to the Appeals Division, wherein we requested that they instruct the department to perform the re-audit in accordance with the DNR. At that point, the department responded and stated that due to safety concerns, they would be unable to perform additional observation. And the supplemental decision and recommendation upheld the observation as it was performed. What's particularly concerning to us with the safety concerns is the marijuana dispensary is located on a 6-lane street. It's on Van Nuys Boulevard in Van Nuys. It's next to a furniture store. In addition, the safety concerns weren't raised when they were performing the observation undercover, and the safety concerns weren't raised when they performed the first full day. So from our perspective, it appears that the safety concerns are really just an excuse not to perform the observation in accordance with the DNR and also the board's own published procedures. That being said, we have presented an alternative computation which would preclude the need for additional observation testing. Basically, what we did is we provided, well, the taxpayer provided 5 months of sales records during the audit, which include their cash and credit card sales. So instead of using the observation test, we used the taxpayer's own records to compute the cash to credit card ratio. In order to support that approach, we verified that the credit card sales from the taxpayer's records matched the credit card deposits in the bank statements. We also took the 1 full day of observation that was performed by the department and multiplied it times 150 for this 5-month period. And it came in within 3% of the taxpayer's actual recorded sales for these 5 months. So based on those two analyses, we think that the recorded sales are a reasonable way to compute a credit card percentage. The other main difference between our alternative computation and the department's computation is the use of the taxpayer's credit card deposits for the period of January 2010 through June 2010. The way the audit's currently computed, they use the actual credit card deposits in third quarter 2010, and then they reduce it by 10% going backwards, even though the bank statements are available and they have the credit card deposits. The reason the department is, at least I speculate the reason why they're not using them, is because the credit card deposits are much lower in the first 6 months of 2010 as compared to third quarter 2010. The reason that is because on June 7th, 2010, Local Ordinance 181069 was passed, which basically forced the closure of hundreds of dispensaries within the Los Angeles area. There were only 167 collectives that were eligible to remain open when this ordinance passed, one of which is McFlower Corporation. They sent a letter out to all of the dispensaries that were operating illegally. It basically said if you continue to operate, there's going to be a $2,500 per day fine, and you could face 6 months of jail time. As a result of the local ordinance and the subsequent implementation by the city, hundreds of dispensaries closed, and as a result, McFlower Corporation sales rose dramatically. For that reason, we think that the actual credit card deposits from January to June 2010 are an accurate reflection of the business credit card sales, and in turn should be used in the audit computations. On a final note, we note that the 10% penalty for negligence was applied. This was the first audit of the taxpayer, and in general, the negligence penalty isn't applied in the first audit of a taxpayer. We request that the penalty be abated. Thank you.
Thank you. Okay. Department, please introduce yourself for the record. You have 10 minutes.
Thank you, Chairwoman Harkey. My name is Scott Lambert. To my right is Andre Skitt, and to Mr. Skitt's right is Stephen Smith, representing staff. In this particular case, the taxpayer does operate a medical marijuana dispensary. The audit period covers the 3-year period from 2008 through June of 2011. The taxpayer provided limited records at the start of the audit. There were some bank statements that were provided. There were income tax returns, P&Ls. There were 5 sales summary journals that were provided for 2011. But since the taxpayer is mainly a cash business, up until October of 2009, it is very difficult to conduct an audit on medical marijuana dispensaries when they do not retain records. So the department decided to conduct observation tests. They conducted 6 one-hour tests before the audit was completed. Based on that, it showed that there were 12 customers per hour that came in on average during those 6 hours of testing. Subsequently, it did go to an appeals conference. The conference holder directed the department to conduct 2 additional days, 1 day being a weekday and 1 day being a weekend. The department was concerned about the safety of the employees in conducting a full-day test, regardless of where the dispensary is located. Generally, you'll find with dispensaries, they have an armed guard at the door, and there's a reason why they have an armed guard. The auditors are not safety members of safety, and it's a concern to the department. Also, it's a concern regarding the fumes, and so a lot of the districts prefer to conduct the observation tests from a distance instead of being inside. And in addition to that, a lot of the taxpayers do not like the board employees being inside the business for a variety of reasons. In this particular case, the taxpayer did not want the auditor inside the business, and the department did not want to place an auditor inside the business. And so therefore, the observations were conducted from the outside. The majority of the observations were conducted unannounced. There was 21 hours after the decision and recommendation was issued that the auditor was out there over various times. I believe there was 11 times that they went out that covered 21 hours. In addition, that they did cover 1 entire day, which was April 14th of 2015. The results of adding all of those observation tests together was that the taxpayer was selling to approximately 10 customers per hour. The taxpayer also provided what they call guest, I'm going to call them sales invoices. Guest checks is what they provide, or how they show the sales. Those were provided to the department in 2 different, at basically 2 different times for that same day. Initially, they gave us 68 guest checks, and then they gave us an additional 13 at a later, they gave us a schedule that listed 13 additional ones at a later time. The results of that was the average sale was calculated at $47.99, which is somewhat below what the average dispensary in Southern California sells per transaction. The average, based on marijuana business daily for 2015, is $70 an hour. So we're at just under $48 for this audit. The credit card receipts, the taxpayer started collecting or started accepting credit cards in October of 2009. Now, this isn't something that's usually done in this particular industry just because of the banking laws that the credit card companies will not issue or allow credit cards to be used if they know that you're in the business of selling marijuana. But in this case, they did accept credit cards starting in 2009, October. It appears, based on the receipts from the credit cards, that it was ramping up and became fully implemented, I would say, in the third quarter of 2010. And that's really what a lot of the dispute comes over. Not all the dispute. There's more to how the taxpayer calculated that the department disputes. But the first quarter and second quarter 2010 credit card receipts were substantially below what it was in the rest of the audit period, the remaining audit period. The department used we used a credit card percentage using the first quarter of 2011. And so what we did is we established what the sales were for the first quarter by taking 10 sales an hour, and they're open for 10 hours a day, and they were open 89 days in the first quarter of 2011. So we took 10 times 10 times 89 to come up with the sales were for that quarter. We subtracted out what the credit card receipts were, came up with the difference, which we considered to be cash sales, and then established a credit card percentage. Now, using the first quarter, for the 4 quarters that we used, using the first quarter of 2011 to establish the percentage was in the taxpayer's favor because that was the highest amount of credit cards that they had received during that 1-year fiscal period. So to go backwards, the department did take into consideration that the business was building up. And how we did that is we took the established audited sales for the third quarter of 2010 and subtracted 10% of that and used basically 90% of those sales for the second quarter of 2010. And we kept doing that for each quarter until we got back to the first quarter of 2008. So there was a substantial reduction in sales from the first period of the audit period through the second quarter of 2011. The taxpayer uses in their analysis our sales for Tuesday to justify their sales. On these type of businesses, generally, the sales on Sunday, Monday, and Tuesday are your lower days of sales. It's somewhat similar to the restaurant industry in that, starting on Tuesday through Saturday, generally the sales are ramping up, and then they come back down after the weekend. So, in regards to the penalty, a penalty was applied. This is the taxpayer's first audit. The reason that it was applied, the understatement cannot be attributed to the taxpayer's bona fide and reasonable belief that the bookkeeping and reporting practices were sufficiently compliant with the requirements of the sales and use tax law. The percentage of error based on the department's calculation is 371%. Even using the taxpayers' or the figures that they came up with, the percentage of error is still 160%. For when the taxpayer was notified of audit, they reported in the second quarter of 2011 $304,000 in sales. Their average sales before that was $31,000, and the quarter right before the first quarter of 2011 was just $100 and something thousand. So there was a substantial increase in sales after they were notified of audit. The taxpayer had not claimed any deductions during the audit period. There was no evidence on their application that they showed that any sales would be exempt from tax. The credit card receipts for 3 quarter period was $362,000 for the third quarter 10, fourth quarter 10, and first quarter of 11. The taxpayer reported $209,000 in sales. So not only did they not report any cash sales, they didn't report all of their credit card sales. For the earlier periods of the audit, some periods they reported only $6,000 for an entire quarter. They were open essentially 900 hours. So when you do the math, it doesn't come anywhere close to what their sales would have been. Even in the earlier periods, when you have the sales reported of $38,000 for a quarter, based on being open for 900 hours during the quarter, it only comes out to an average of $40 an hour in sales. If customers are purchasing on an average of $47 a transaction or $48 a transaction, they had less than one customer an hour that they reported sales on. So accordingly, the department concurs with the Appeals Division decision and recommendation.
Thank you. You have 5 minutes for rebuttal.
Thank you. I certainly agree with the department in some respects in this case, one being auditor safety. It wouldn't be fair to force an auditor to be in a position where their safety was compromised, no matter what the liability at stake would be, in my opinion. But in this case, the department performed the 1 to 2 hour tests prior to performing the full day. So to me, if there was a concern for their safety, then they wouldn't have sat there for an entire day. Of course, it was agreed that the auditor could remain in their vehicle or somewhere else outside of the store. That wasn't disputed. So we don't really see that there was any evidence, I suppose, that supports that there was a legitimate safety risk for the auditor. Ultimately, the department published a memorandum dated October 28th, 2015 to address these very issues. A sit-in test inherently is flawed. And we concede that this business and our client concedes that it didn't do a great job maintaining records. It was a relatively new business and a relatively new industry. The ownership did change towards the end of 2009, and you can see a change in the reporting. You can see that there were, from that point forward, a better effort and better records that were maintained. But ultimately, what we're asking here in part is that the decision or recommendation be followed, which is odd because most of the times we come here and we're arguing against the DNR. And we're also asking that the procedures that are in place to try to help avoid these sorts of scenarios, there's always unique circumstances, but ultimately the way I see it is policy is established in an effort to come up with the best possible solution, maintaining some efficiency. So where that landed was a full 3 days of time that the observation be performed. And even 3 days, when you look at it in the context of a 3-year audit period, it's less than 1%, and it's typically always being performed after the fact. So a period in which the test is being performed, where the auditor is actually there, you have to think about and consider whether or not it was different before the auditor was there, during the audit period. And in this case, we have a significant change in that approximately 60% of the dispensaries closed after the time frame in which the auditor showed up. So there's much less competition. In the memorandum, what it states is that the purpose of establishing the 3-day rule and making certain that there's 3 full days is when you're avoiding the fluctuations in a single day. Of course, a business will have times where it's busy during a day and times that it's slow during a day. And we can't find any science behind or any meaning behind the random days that were selected in the short periods of time where the tests were performed. Ultimately, the purpose of the memo was to promote consistency, improve efficiency, and to involve the taxpayer in the testing process. We had discussed with the department our desire to have the taxpayer involved because we wanted to assure that it was as accurate as possible. So what we discussed was having the taxpayer present, and on what we proposed was on an hourly basis, that person take receipts that are generated as they're generated out to the auditor so the auditor could record them. With the idea that if somebody came into the location but didn't actually buy something, that would be noticed through the receipts. And that ultimately the test, in our eyes, would be more reliable for that purpose. There's no conceivable reason not to disclose in this particular case that we can think of, not to disclose the time and the date that the auditor would be there, because ultimately the test was intended to and designed to count the number of people that were coming into the store. So I don't know how you could possibly affect that as a taxpayer. Ultimately, the people that are going to come are going to show up no matter what. In the end, I think to some degree this boils down to I suppose a difference in the interpretation or the impact of the change after the ordinance. We think it had a greater impact. The department concedes there was an impact, makes an allowance for 10% each quarter going back. And we think when you look at the credit card deposits, it's not a situation where people were getting used to or ramping up their credit card sales. If you look at the credit card deposits, for example, from January 2010, March of 2010 through May of 2010, so a 3-month time frame there. They're 12,221, 12,209, 12,269. Then this ordinance takes effect. And the credit card sales are 25,210. And they go up from there. So it seems to us that it's very clear that the reduced competition coincides with the significant increase in the credit card deposits, which can't really be disturbed by the taxpayer in any known way. It's third-party information. And that it's reliable information. It should be relied upon in the audit. And we do rely upon it in the alternative approach that we made. Unless Mitch has something to add, we would ask you to grant our request to apply or establish the audit liability based on our alternative approach. Thank you.
Members, any questions?
Question.
Yes, Member Mott.
Yeah, I have a question. So in to the department, the DNR appeals conference, it says, was held on July 1st, 2014. Decision or recommendation was issued on November 21st, 2014, recommending the department prepare a re-audit to conduct an observation test that includes 2 entire days. One of it should be a weekend day, right? And then it appears that the department disregarded that and just did whatever they wanted to do. Is that correct, or?
No, I wouldn't say that's correct. Well, I would say it appears that way, yes. So I would agree with you there. But,
okay.
That's not what happened. It's not just with this taxpayer, it's with this industry overall that we have concerns about the safety of employees. And so the conference holder was contacted and was discussed this before the observation tests were conducted. So appeals was aware of us not agreeing with doing complete days. We did on the 21 hours include some weekend days during our observations that we went out there. But the whole reason we didn't do it is because of the safety, and the conference holder was made aware of that beforehand.
Okay, I know we've had cases about, consistent days and, not whatever hours during the day, the weeks. I mean, that doesn't seem that it's consistent. And then this October 28th, 2015 memo
Yes.
that was written by our department, saying that we are following, full days, right?
That's correct.
Because I think we've had a lot of issues here at the board, with partial days. And this is the first time I've actually heard just hours in a day.
Right.
That the auditors have been out there, which is a little bit, weird for me.
Okay.
Just to pick hours where they sit there for an hour and then they come back, sit for an hour, come back on another day. How is that good audit policy?
Well, here's the problem is, kind of the circumstances dictate what the problem is. And, having the situation where you can't rely upon the taxpayers' records causes us to verify the figures in some other manner. The problem is in this type of industry, because it's mainly cash that's used, the receipts are difficult to trace. There's not a name on the receipts when you purchase something from them. When the dispensary purchases their supply, it's hard to verify the purchases that are being.
No, I understand that.
Yeah.
But I'm just saying, when you sit outside for an hour
Right. And so this
at a
is the way.
time, why wouldn't we, like any business, because I know we've done that before, we've sat outside restaurants, and we've said, hey,
Not a restaurant.
are we, well, I get it's not a restaurant, but how is that?
Right.
Is this the new procedure that the auditors are?
I believe it is, and this is the way that it should go, that the department believes it should go, because of the concern, is that there should be 3 days of testing, and they should cover all hours of the day. So you would have, say you're open from 10 in the morning till 8 o'clock at night, you should have 3 hours in your testing that covers the period 10 to 11 o'clock. And the same thing with 11 to 12 o'clock. They're just going to be on different days at different times. But I don't, unfortunately, that's kind of where we are because of the safety issue that, and if you could get by the safety issue, and there are situations where the taxpayer will let us inside and the department is willing to go inside, then I think it's okay to do the 3-day test. But when you have situations where people either feel unsafe, both to their person and to their health, then you're in this situation where we're trying to make the best of what we have.
And how many people sit outside during an observation test?
As far as in terms of our auditors,
Uh-huh.
there were 2, but they switched. So one did it for a period of time, and then another one came and took over for him, at least for the full day. So
I'm just trying to verify that these numbers are right. When people are driving by, they can say, oh, yeah, 12 people went by. Or, are there 2 people, verifying how many people go in?
it's not my
And out.
understanding that during the 6 hours of testing and the 21 hours of testing, I do not believe there were 2 people there. And in fact, the 10-hour testing, it was one person at a time, but they were there at different times. Now, for the 10-hour, we did go back and take a look at the taxpayer, ultimately, the records that they gave to us, and it matched the number of people that were said to have gone in there and made purchases.
Okay.
So that verified. But from the auditor and what I discussed with him, what he told me is he takes a look, in this particular case, the people that went into the business and the ones that came out with a bag, and that he recorded that as a sale for that. And so
Okay.
that's how he did it.
Okay, I'm sure there's
Madam Chair?
questions. Yep.
Yes, Member Stowe.
Thank you. I'm glad you brought up to the department. You said something about the customers going in and coming out with the bag. And that's how it was decided, at least for the hourly test,
Right.
that it was a sale. Have you guys established that as a policy? Because I recall at least prepping for a case, and the observation test was based on customers coming in, customers coming out with the bag. And I also believe that it was not 3 full days of observation. It was somewhat sporadic, like this particular case.
Right. Well, there's a difference in when the audits took place, because actually this audit took place before the memo went out. So at that time, it was only required for 2 days was a minimum, and then it was increased to 3 days in 2015, and we've tried to change, well, we've changed our procedures, but for the ones that were the audits that started before the memo came out, you know, if we came back to that, we would try to do an additional test if that was at all possible to do. So this one took place before the 3-day memo was out, and so they only told us to do 2 days, but in effect what we've done is 3.7 days, because we've tested 6 hours, then 21 hours, and then the full day of 10 hours. So that adds up to 37 hours of testing. So 3.7.
Okay, so in my notes also indicated that when you guys did do the observation test, in addition to noting the bag, you also noted the description of the customer and whether or not, kind of to give it some accuracy, that this customer went in and had on a blue shirt, and then another customer went in and had on a purple shirt.
That's my understanding for the 10-hour day, that was written down for that period of time. I did not see that detail for the other periods.
Okay, and I understand that the DNR recommended to do the 2 days.
That's correct.
To the appeals division. Did you guys know of the department's policy of doing only hourly observation tests? Did you eventually agree with the department that what they did with the total of 37 hours was reasonable?
We did an SDNR in which we agreed with the method that they have of accumulating the proper number of hours. And as Mr. Lambert had said, the board basically established and made it the policy that we do 3 days. That was late 2015. Most of the observation tests weren't yet then compliant. They came up with this, hence our DNR that says go out and get the 2 observation days. They had this policy specific to the marijuana industry, which we understand to be their policy for the safety concerns, and appeals has adopted that. If it meets that standard, it's acceptable to us, not just for this case, but for the other DNRs. So we are consistently allowing that policy to be the matter. The board has, I can't remember names, but the board has had cases come before it where that has been the method, and at least in prior hearings, it didn't come up as an objection. So we're consistently applying that.
Madam Chair.
Yes, and Mr. Member Hood.
Yeah,
Member
just
Renner.
a quick question on regards to the safety issue. Were there notes from the auditor in regards to concern for safety in the audit?
Notes.
Any notes that said, hey, I don't want to do a whole day because I'm concerned the location is thus, it's unsafe? Any notes, contemporaneous notes at that point?
I do not believe I've saw. Well, I'll take that back.
There was a mention of the fumes.
A what?
Of the fumes and the decision to test from the outside.
Right. I believe if I go back to the 414Z, I believe there were those issues, but they were discussed internally. It was also the supervisor was in contact with the headquarters operations division chief and discussed this issue with them before the observations were conducted, and that's when it was discussed with the conference holder.
Tell me about when it is that a taxpayer says, okay, yeah, let's do it, and how much, and I'll meet you there, and we can work this out, or my representatives there. Why is it that we don't then say, okay, let's do that?
Right. And in this particular case, or cases, the department felt that the tests can be manipulated, and that's why they did not notify them in advance.
So we decide at that point, how would they could be manipulated? You mean if?
Yeah. Well, I
mean, if you're there with the taxpayer representative and doing the how does that, what is? And why wouldn't we just okay?
What?
Well, okay. Tell me how that would happen.
How it would happen. Yeah, I'm trying to decide how much I want to say as far as letting other taxpayers know. But basically, maybe the customers that show up don't end up going into the business.
But you're sitting outside the business. What do you mean, somebody waves,
Well,
waving them off?
Well, when they're inside the business, that they don't. But if you were outside.
Okay. Why wouldn't we just tell the taxpayer and the taxpayer representative that then? Just say, hey, look, thank you for your offer, but you know what? We're not comfortable doing it that way, rather than just not responding back.
Yeah, I'm not sure the answer to that question. I believe what they wanted to do was an unannounced observation, which they felt would be the true sales.
Let me go with the taxpayer representative. Did the auditors or the staff ever indicate to you, hey, we don't want you there, we'd rather do these unannounced? Did they give you what their audit plan was at that point?
So the understood agreement that was communicated with us, it sounds like the department communicated with appeals after the decision was written without our knowledge until we sit here today, which is a little frustrating. But no, we had I thought, a professional understanding that we would have the taxpayer, we didn't anticipate going down there ourselves, but have the taxpayer in the business to make certain that there was a control in place so that the taxpayer could periodically, every hour, go out and deliver the receipts that he was receiving from the customers that were walking in, so we can make certain that we weren't capturing people that weren't buying stuff. As the department notes, there are some recognition of that in the tests that it performed, that people are showing up, they're not always buying things. So Mitch called the department numerous times and emailed them. They had already performed these 1 and 2 hour tests during that period of communication. And then on one of the last calls that he had, where he took it up to the supervisor, took it up to the district principal auditor, and ultimately said, what's going on here? Are we going to carry out the directives of the DNR? It ends up the auditor is actually at the place of business performing the full day. So that's how all of this transpired. We felt like there was a significant lack of transparency, and we couldn't figure out a reason why. I don't see that there was I understand that sometimes there needs to be audit methodologies where the taxpayer isn't tied into it. I get that. This just doesn't seem like one of those cases to me. I don't understand how somebody would be waved away. I mean, if the auditor's sitting in the vehicle, it doesn't make sense.
I guess I worry, I don't know. I mean, this is going to be somebody else's problem starting the first. But I guess I worry about an attitude that says, you know what, we don't trust the taxpayer representatives. I worry about an atmosphere and an attitude of a state that has that kind of attitude. We think they're going to cheat us, so we need to not deal with them. I would hope that we have a better relationship between taxpayer reps and the state of California than assume that they're going to cheat us. And that seems to me the only reason why I guess we chose to do it that way. It just doesn't seem healthy, especially, I guess, if there's no record of any problem with that particular location and whatnot. It just doesn't seem like a very healthy relationship between the state of California and the businesses of California. I don't know.
I would just like to insert here before Member Horton goes, the taxpayer did not keep sales records, did not keep purchase records, did not report all the sales to the BOE or the IRS. Taxpayer only kept sales invoices, guest checks for one-day observation test. They run a mostly cash business, and they know they are targets for robbery, which is why they have armed guards. So just for the record, I'd like to lay that out there. And then Member Horton, would you like to?
Thank you, Madam Chair. Well, just to follow up on the records, courts have consistently held that there are no prescribed method in which the taxpayer has to keep their records. It's a prescribed method in which they have to report their information. So if they put it in a shoebox, that is sufficient if the reporting amount is correct. So the DNR that was issued, was that withdrawn?
It was not.
We issued a communication to the taxpayer as to how the agency was going to perform. We didn't withdraw that. So as far as the taxpayer is aware, that was the agreement that the agency entered into with them?
Well, what happened was there was a DNR, and then subsequently, there was an SDNR, supplemental decision and recommendation.
And the supplemental was sent to the taxpayer?
It was.
And so the taxpayer was aware that to the taxpayer, you were aware that as a result of the supplemental DNR, that the previous agreement was no longer in place, that they had a new?
It was sent to us after the fact. So we requested, so the first day was performed. We discovered that the first day was performed, and then we followed up to say, let's schedule the second day to get this done. What we got in response was a re-audit, which incorporated these 1 hour and 2 hour segments.
Not to interrupt you, but in your timeline.
And then we
the
request
supplemental-
reconsideration at that point and said, look, you didn't follow the DNR. The department should be made to follow the DNR. The supplemental then was issued to confirm or to accept the department's disregard of the DNR.
Subsequent to the action?
Subsequent to the re-audit, correct.
Question of the department, of the taxpayers indicated that they have a 5-month test that they perform. Is that correct?
What it consists of is 5 months of sales data and credit card deposits. So what we're saying is that if you use the alternative.
And how is that sales data and credit cards developed?
Bank deposits.
Bank deposits?
Yes, so bank statements.
Did the department impeach that data?
Well, the problem with it is that you can't verify what the sales are. As far
That's my
as,
question. Did the department
right. Impeach it?
the
I
data?
guess,
And tell me how they did that.
We didn't accept it, and the reason we didn't accept it was because it was inconsistent with the observations that we had conducted. That information was inconsistent with it. And to take it one step further, there was no detail on how those amounts were arrived at. There's no way to verify that all the cash sales were actually recorded as the cash sales. There were no guest checks that were provided for those periods.
What was provided?
My understanding is a
sales journal?
Sales summaries is my.
You have the guest checks to support the summary, the source data?
We don't have the individual guest checks which support the summary data. It's basically our position that even if we had all the guest checks, the department would still need to perform some sort of reasonability analysis to determine that the recorded figures are reasonable. So we provided 2 reasonability analysis. First, the recorded credit card sales in their sales journal reconciles with the actual credit card deposits in their bank. So credit card sales are fine. So then it becomes a matter of, are the cash sales accurate? So what we did is we took the 1 full day that the department performed, and we multiplied that times the 150 days for this 5-month period, and it's within 3%. So on that basis, if the credit card is good and the total is good, then the cash also would be good. So for those reasons, we felt that those recorded sales could be relied upon.
Would the department agree that the credit card sales are somewhat controlled?
Yes.
And did you compare the credit card sales in the 5-month test to the credit card sales in the observation test to see if they were consistent, relative? I mean, it would have been one way to say, okay, this data at least has some merit as it relates to the credit card sales.
Well, there's no question that we're not disputing the credit card sales.
That's not my question.
Okay.
Let me share with you what I'm trying to get a better understanding, and I'll share why. There are a number of cases that this same discussion has taken place in the courts, and the courts has kind of fell down on the side that one estimate is just as good as another estimate unless the other has been impeached. And so when there's a level of consistency in the credit card computations, that in and of itself generally would cause the agency now to have to sort of take another step, another look at the cash somehow, at least ask some questions. Otherwise, one test is just estimate is just as good as another because we're just trying to get in the ballpark.
Right.
So again, the credit cards.
Right.
Did the department take a look at the credit card computation during the 5-month test to determine if that in itself was consistent with the credit cards summaries examined during the?
Not that I'm aware of. Did we do that?
Okay. Did the department take any action to impeach the cash sales?
Yes.
And that wasn't reasonable?
Well, it showed, how they did the analysis, they used the sales from, one of the analysis, they used the sales from that test on April 14th of 2015. It was approximately $3,800. And so when they times it by 150 times for the number of days in that 5-month period, it doesn't match up to the sales that we have. In other words, well, it does match up within 3%. The problem is that it's a Tuesday, and you're using a low sales day to try to verify the recorded sales for those 150 days. So it'd be the same thing as a restaurant.
Let me understand your concern. Are you concerned with the methodology? It sounds like you're not concerned with the methodology. You're more concerned with it reconciling to the test. One test is not supposed to reconcile to the other. They generally don't. I mean, we're just trying to be reasonable.
That's right. And so what we're trying to do is take a look at the sales that were made on that one observation day that was almost $3,800. On the average for those 5 days, the sales is $3,200 for the average Tuesdays. And the overall sales are, average daily sales are significantly more than that. So when you take a look at the credit card percentage that they come up with, and then the credit card percentage that we calculated, the two don't, they're significantly different from the two. And
you attribute that to the use of a Tuesday as opposed to what day did the department use?
Well, we use a Tuesday. That's what they're using. They're using that same day to justify their figures. So we tested.
So every Tuesday, you're supposed to have the similar amount of. What's the margin of difference?
For 20% between our Tuesday and their average Tuesdays. But what they're doing is they're taking that Tuesday and they're saying that's an average sale for the entire 150 days. So they're using a low.
They're extrapolating the Tuesday.
Yeah.
Exactly.
Monday.
And
my point would be that if you look at the average of the information we have, Tuesday is right on par with 3 other days in the week. And I think it's noteworthy to point out that the department is essentially attacking the use of a Tuesday as not being representative because there's other days in the week. And perhaps we should have other full days that are being looked at. And that's our argument.
Well, I think that the department can speak for itself, but what I hear that the testimony is that they're concerned about extrapolating the other Tuesday, and I get your argument that the Tuesday reflects 3 other days, but there's 7 days in a week, and so those other 4 days may have a higher margin, which should have been some adjustment. But even in making that adjustment, we don't know what it would have been, but it seems to me that if you accept their Tuesday and accept their logic that it reflects 3 days out of the week, then we could have made an adjustment to their test for the other periods that we have test periods on and came up with another estimate that would have been, I don't know what it would have been, but it doesn't sound as if though we've done enough to actually impeach their tests. Well, strike that statement. It doesn't sound enough as if though we've done enough to, and you've impeached the methodology, but not necessarily that Tuesday as being representative of at least 3 days out of the week.
Right. So maybe it wasn't, I didn't make it clear, and I'm certain I didn't, that it's not really a test, it's their records. What they're doing is they're using their records for 5 months and trying to show that their records are accurate. And so they never tested that. That was after the fact. They're coming up with what they call their sales summaries that have cash sales, but you don't know where the cash sales came from, or if all of them are recorded. And what they're trying to do is then saying, I have all of them there. And I would point out that when we actually did the one-day test in April 14th of 2015, and this was after that one-day test, they came out and gave us 68 invoices. It wasn't until months later that they gave us additional invoices for that, which calls into question then that they would have their sales recorded properly for other periods.
It's a security issue.
Mr. Horton, if I may.
Sure.
The reason the additional guest checks weren't provided on the day of the observation is we were waiting for the re-audit to be formalized to prepare a request for reconsideration. And one of the issues in the re-audit is the DNR didn't say to change the average selling price, but they computed an average from the guest checks that were provided, and it went up. So as part of our request for reconsideration, I noticed that they didn't have all the guest checks, and at that point, that's when we provided them to the department. So it wasn't really it was just some miscommunication. I think the auditor probably left before the taxpayer came out with like the last bunch of receipts.
Okay.
Well, what I would point out when the re-audit was performed, their argument was the number of customers was lower than what we had recorded, and they believed that we were recording sales that didn't actually take place. When the 13 came in, it was basically to lower the average sales from $50 down to $47.99, and actually they wanted, I believe, $45, but appeals adjusted it.
Yeah, I mean, the department has put, in my mind, put the board at somewhat of a disadvantage. And what we may want to consider is establishing a process by which we do these types of tests. At least in my experience, when you have these kinds of discrepancies, we take it to another level, say, okay, well, let's do a cost of living analysis. Let's do another observation. There's clear discrepancies between the two, but there are discrepancies on the department side, discrepancies on the side of the taxpayer that seems to me we could have worked something out and kind of figured all that out. And so, in the security issue, is there a reason we didn't put a keeper in? And if the agency, if the taxpayer would agree to that, put a keeper in, verify the sales. Keeper generally has, we generally have the highway patrol there, plain clothes so they don't scare away all the customers, raggedy jeans and the whole bit. I don't know. We have to come up with something to be able to address this. I am concerned about the lack of records in this industry. The records don't exist. But it further concerns me that in the absence of the records, that the agency doesn't necessarily go the extra mile when there is a disputed test out there. Anyway, that's all my comments for now. I'll process.
Thank you, Madam Chair. That's interesting, the keeper. Just my thoughts. I thought a keeper was more of a collection tool, not an audit tool.
We've used it both ways. Under circumstances where there are security issues, and we've used it. Both ways. Not often because of the extra expense and the extra intimidation.
Mm-hmm. Okay.
But if there's security issues, one might think just to protect our employees, we might want to go that extra step.
I want to kind of go back to the petitioner. You said that you did a method of what the sales should be, and that's where you came up with your credit card sales to total sales ratio, and you provided your calculation to the department. Did you provide any source documents that the department could verify the amount to?
No, we didn't. The sales journals themselves were actually incorporated in the original audit working papers. So I presume that the sales journals were provided to the auditor at some point in time, but we didn't provide any additional source documentation.
To the department, were you able to verify their method to be correct? Did you have any data in your audit work papers to verify it? Did you
mean their calculation?
Their calculation.
Was it arithmetically correct?
No. Could you verify what they gave? My notes here is indicating that there was no source documents provided to back it up, and
That's-
that's why you did not accept it.
That's right. There were figures there, so you could write down a number as far as the cash sales, and we'd have no way of verifying that. Now, I will say the credit card sales, there is a way to verify that because that money's deposited into your bank account. But that's not the issue. The issue is trying to determine what the cash sales were, and there was no source documents that were provided for that, and there was no way to verify the figures that they've provided.
Okay, Okay, thank you.
Okay, I'm getting confused. You're both representatives, right?
Yes, we are.
Okay, that's what I thought. So the taxpayer is not actually here.
He's been involved in a lot of the details, so he's got a lot of the detailed answers.
Some of the answers were like we and what, and I'm going, okay, did I miss that one? Thank you. I understand this one. And I just have to remind everybody that this audit period was 1/1/08 to 6/30/11. That's quite an audit period, and I think a lot of the laws that we're kind of referring to and things that we're referring to were not the case back then. So this was a cash business and no books and records, and so I'm trying to use what the auditor actually did a total of 37 hours of observation tests, of which 10 hours were straight sit, one day. So that's over 3 days. Stores open between 10 to 8, 10 a.m. to 8. I think this is just the nature of the industry. We have to, I'm sure somewhere down the line, the BOE, the new BOE, which is formed, will make some serious decisions as to exactly how to do this, but this was a long time before we started really hearing these. I understand, that there's a discrepancy here. What I would be willing to offer, because I've read through this again and again and again, and we want to be sure we're getting the right amount of tax, that we're doing things. We had one 10-hour test, and one 10-hour test does make a reduction in the average customers per hour from 10 to 8.4. And I have her estimated that it might change the audit measure by $527,000, which is not huge, but still, I think, gives that way we can get away from circling around these observation tests. We did have one solid 10-hour test. And as I understand it, didn't the taxpayer have some input into that 10-hour test as to who was coming in and out? Were they employees? Were they not?
That's right. The auditor met with them beforehand and identified who was associated with the business. And
Right.
And they were not counted.
Okay.
That's right.
Yeah, it's just kind of inherent. It's very difficult. I'm hoping that we get a little bit more accurate. And the, sitting outside is, I would imagine lurking in a parking lot is not necessarily a safe occupation either. So, I think you have to consider all of the options. And going inside the facility, sometimes I know that the taxpayers don't want you in there. To bring in a bunch of people just to sit around might, ruin some of the business. So I am willing to, I've heard all of this, and I know we're all sympathetic trying to be sure we're doing this right, but I think that'll come after we're gone. And this is an old audit. So I would be willing to make a motion to accept the staff recommendation with the exception of using the average customer per hour as noted in the full 10-hour test. And that does reduce the liability, and I'll let staff determine by how much. But I have here roughly $527,000 of the audit measure. Is there a second for that?
Good discussion?
Well, probably need a
Go ahead, get your second first. I'll be quiet.
Okay. You can't, if we can get, is there a second for that? No, okay. That dies. Go ahead, discuss.
No, I don't have a discussion now because I was going to ask for clarification on your motion, but.
Well, members, I mean, my objective is not to lower or raise the taxes.
Well, mine is not either, and I want to clarify that. I'm trying to, the main bone of contention seems to be the observation test. So I'm trying to get one solid observation test that works, that is not split days, is actually 10 days, or 10 hours in the same day that the taxpayer was aware of, that he was able to, or she, or whoever was able to call out those persons that in fact were not customers, and it seems like a fair deal to me.
So tell me again, Madam Chairman.
Sure.
Tell me again why there's no, the security concern was there. Is that going to be consistent throughout is that now the board's policy that with these retailers, there's going to be a security concern?
That is my understanding.
Irrespective of where they're located?
Irrespective, right. It's kind of like a bank being in a good neighborhood and thinking that it won't get robbed.
They actually get robbed in the better neighborhoods, to be quite frank with you. They sort of presume there's more money there, you know?
Right. Yeah, so it's, right. So it's difficult. I mean, it's just it can, because of the cash that's involved and the product.
No, I'm not arguing. I follow the security concerns. I mean, I think the same level of concern for security at the site we should pass that on to our employees at each location and make sure that the measures are there. But if that's going to be a standard practice, then we need to have standard alternatives in order to be able to address that. So, and procedures, because we sort of made these procedures up on this audit, and that's what's concerning. And I think this may actually be an opportunity to do that. What was your credit card to cash ratio?
Ours was, they came up with the cash is 1.96 times the credit card.
And what was
receipts?
So ours was, I think, like 40.7%, which compared to theirs is about 33 or 34. So 40 to 30, theirs is 33 or 34, ours is approximately 40.
7% margin?
Yes.
Yeah. In a normal environment, you know, I would recommend a 30-30-30, and that the department establish an agreed upon method that both parties agree to, and that we just live with whatever that method is. And so it provides me a level of concern that there was an agreement, and that agreement was breached for I don't know what the reason was, but for concerns of security, concerns.
There's no reason for us not to still do that.
Of absorbing the product. All of these are going to exist in this industry, and we have got to fix this. I mean, we don't have to, but it's got to be, there has to be standard procedures, and I think the best way to do that is to establish an agreement in advance and stick to that agreement, whatever it might be. And if there's a deviation from there, that there is a legitimate, I mean, I don't want to be subjective in legitimacy, but there's a reason, and everyone sort of agrees to the reason that there's a deviation, and then they agree to the subsequent test and procedure, and then we perform it. And typically, when you have these, as I said earlier, you take it to the next level and trying to verify that the agency's test is reasonable and that the taxpayer's test is not reasonable. A 7% margin between credit card sales, I don't know. I mean, I've seen this in court, and I've seen the judge just throw the departments out and just say, well, this one estimate is just as good as another if it hasn't been impeached. And I get the argument, and I agree. When there's a lack of source documents, it calls in question whether that, but once that's called into question, then the next step is to say, accumulate the source documents, put it on a sales thing, and then we'll consider that. That there are additional work that could have been done by the agency in order to verify or give the taxpayer an opportunity to come up with the source documents and come up with a test that would have been acceptable. So I really don't know what to do with this.
Well, why don't somebody make a motion? I think there's some ideas up here.
Go through your motion again.
My motion was to accept the department's recommendation with the exception of make an adjustment to use the average customer per hour as noted in the full day 10-hour test period. Otherwise, okay, let me start this again. My motion is to use the average customer per hour as noted in the full 10-hour test period and otherwise accept the department's recommendation.
Staff's recommendation.
And staff, what's your thoughts on that?
Well, my one concern would be is you're using a Tuesday to establish the number of customers for an entire week, and that generally on a Sunday, Monday, and Tuesday, you're going to have less customers than what you would have throughout the entire week. That would be my concern.
I understand. I'm just trying to get to an end here. And so I would, I'm trying to amend this. I've also been, it's been questioned as to whether we would remove the 10% negligence penalty.
I would second that with the removal.
So use the full 10-hour test period, remove the negligence penalty, first-time audit, and otherwise go with the staff, the department's recommendation.
Yep, I'd second.
I have a second for that one. And the 10-hour test is the only day that the taxpayer knows that the results are correct, so that's kind of another reason to go there.
Madam Chair?
Yes.
So staff recommendation included reducing the measure by $651,000.
Yeah, I've got a total tax interest and penalty of $380,224.09. Is that still correct? The understated taxable sales of $2,596,125.
That's correct.
Okay, so I think I've got an updated version. So the updated version says the understated taxable sales of $2,596,125. Taxes determined $243,619.79. Interest through June of 2017 is $112,242.29. 10% negligence penalty is $24,362.01. Total tax interest and penalty is $380,224.09. I am suggesting that we reduced that we accept or that we use the average customer per hour as noted in the full 10-hour test, which reduces the liability, and we also remove the 10% negligence penalty.
Can you separate those two motions?
Sure. Okay, we can use let's go with the first motion. Motion one, we're going to bifurcate this. Motion one is to use the average customer per hour as noted in the full 10-hour test. And do I have
Second on that.
We had a second on that. Is there any objection to that? No, I don't see an objection. Okay, so the next one is the next motion is, in addition, then after motion number one, in addition to reduce the liability by the 10% negligence penalty, remove the 10% negligence penalty.
Madam Chair, I'd like to hear from the taxpayers' representatives on.
We can't go back. We've got a motion and a second. We're making motions now, so it's not time to go back to the floor.
Then let me share my objection to the first motion. This seems just to be completely arbitrary. In the methodology, I agree with the department. That methodology in itself is inconsistent. I don't know if it's higher or lower. That's not my concern. My concern is to assure that we're using an equitable policy, procedures, and methods. I actually have some concurrence with the taxpayer's method and the need to actually go back and verify that and adjust for the differentials in the days, whether slow days and fast days. Just seems to me that there could have been more work done to this. And quite frankly, I would recommend a 30-30-30, but I get, motions made and so forth.
We have a motion, a second. Sounds like we have an objection on motion number 1. Ms. Richmond, will you please call the roll?
Chairwoman Harkey.
Aye.
Mr. Renner.
Aye.
Mr. Horton.
No.
Ms. Ma.
Aye.
Ms. Dowers.
Aye.
Motion carries.
Thank you. Okay, the second item is in addition to what we just voted on, which was to use the average customer per hour as noted in the full 10-day hour test and otherwise accept the staff's recommendation or department's recommendation. We also want to include, second motion is to remove the 10% negligence tax penalty. Do I have a second for that?
Second.
I have a second for that.
Objection.
One objection. Ms. Richmond, will you please call the roll?
Chairwoman Harkey.
Aye.
Mr. Renner.
Aye. Aye.
Mr. Horton.
Aye.
Ms. Ma.
For the motion?
Yes. With the negligence.
Oh, aye.
Ms. Dowers.
No.
Okay, so
Motion carries.
both motions carried 4-1, a little division in the board, but thank you very much, and thank you, staff, for your work.
Thank you, members.
Thank you.
Thank you. Okay.
Good work.
I just got to keep it moving.
Got it there. That's the way to do it. Keep us on task.
I was just
Oh. Anyway, Ms. Richmond, introduce the next item if you wouldn't mind.
Our next item is C4. Ray Klammer, please come forward.
That's right. As they should. Nobody complains. Okay, Mr. Anjija, would you please introduce the items?
Madam Chair and members, the appeal before you presents one unresolved issue, which is whether claimant is entitled to a refund.
Thank you very much. Mr. Klammer, welcome to the State Board of Equalization. Please introduce yourself. For the record, you have 10 minutes, then we will refer to the department, who will also have 10 minutes, and then you'll be able to rebut for another 5.
My name is Ray Klammer. I'm the owner of the business in question, Box CPU.
Thank you.
Is it my time to talk right now already?
Yes.
Yeah, okay.
Thank you.
I am here today to for an issue that I think it is about me getting a refund for my accountant fees. And in this brief from Mr. Saxton, it doesn't really state the history of what was going on there. I mean, even this board has been involved about 5 years ago in this issue already. I cannot give you one reason specifically why I'm asking for that attorney fees back, but I need to get into the history of this. I need to basically tell you the entire story going 10 years back.
Now is your turn.
Okay. About 10 years ago, I used to have a business called Box CPU, LLC. And my business partner and I, we made good money, but he turned out to be a little bit crooked. So on my attorney's advice, I had to turn him in unless I wanted to go to jail with him. So I turned him in. We went to court. The business was dissolved by a judge. And my business partner went to jail. I didn't. And what happened during the closing of the business, which I was in charge of, by order of the judge, is that I encountered that we overpaid sales tax by a tremendous amount of money. It just didn't match anything on the books that we took in sales tax that what we paid out. And we then asked the board to have an audit done on us so we can see how much there is on overpayment. And we had an audit done, and I think you have all the findings.
Right, will you just tell your
Yeah.
story?
Okay, on the findings, there was a credit issue that we were allowed a sales tax credit towards future purchases, long word, of $37,818, I believe. Within the next, yeah, I think I need to go back. I apologize. There's one major thing happening here. Before the audit and during the audit, we were told we would have to go to Dell and get our paid sales tax back from Dell directly. That's on the record everywhere. And then when it was time for me to receive the refund check, it took a while. And I inquired why am I not receiving the refund? And I was told that the auditor had to go or had to come to this board here today at that time to get this approved. While it was here in front of you, the board decided that it should be converted into a sales tax credit. Even so, the statutes all say that I have to go to Dell. You decided here at this board meeting that I shall have a sales tax credit towards future taxable sales. Sorry. So now after the audit, I was holding this credit in my hand, and nobody would tell me how to apply it. I basically had a sales tax credit. I couldn't use it. Nobody at the Board of Equalization that I had to speak to in San Francisco knew how to apply it. So it was just tossed back and forth from one Board of Equalization BOE employee to the other. I never received an answer. I have everything on record on paper, how many times I have tried to get an answer of how to incorporate our sales tax credit. That kept going for the next 6-7 years. I have written several letters to the Board of Equalization saying I'm no longer paying my sales, I'm no longer filing my sales tax records. I'm no longer filing my sales tax. And until somebody tells me how to incorporate the sales tax credit into my sales tax refund. I'm sorry, I'm getting really...
Did you bring in these? Let me just help you. Did you bring these?
I have in front of me.
Well, do you want to explain what they are for us, since we're seeing these right now? This might help you focus your comments.
Okay, first of all, if I go on this paper here, I have to start with the money fact. Basically, it states that I personally swear I never owed any money to the Board of Equalization at any given time. None. Because of the sales tax credit.
Is this $6,214 the sales tax credit?
No, that's actually an overpayment. That includes 2 levies of $6,000 or $7,000. That spreadsheet here that I have lists all our sales lists all of our records, the quarterly filings, line by line. I have verified these figures with the BOE about 4 weeks ago as being correct figures. If you go from left to right, it shows our gross sales, our deductions, just like on the actual form. I can only summarize it. I'm not in the condition to get into that in detail. If you take the figures that I've been owed by the Board of Equalization that Mr. Saxon's agreed to, which is the figure starting in July of 2012, which is $35,818 as a sales tax credit, and then we have a levy of $3,347 and another levy of $3,664. And you take in consideration that most month I actually owed very little on tax because most of my taxes were paid to Dell when I purchased the products. So I had a deduction for those items. But if you combine the figures that I have actually paid, that I actually owe, I'm being owed $6,214.
Okay, I see that this kind of goes along. You're saying that these are
The right
amounts.
figures in the column M is a running total of amounts that I have paid to the Board of Equalization. Column L is my liability to the Board of Equalization. For example, in fourth quarter 12, and column L, $427. I owe $427 to the BOE. Then we have first quarter 13, column L, 150.41. What that means is that I have paid more sales tax to Dell that I took in that month, so that puts me in the minus.
Okay.
And so on, all the way down there.
So
I mean, I'm not very good verbally, but I'm very good with numbers. And sorry. And when I go down in the spreadsheet, which I prepared myself, I do understand it fully. At the end of the day, the board owes me money. Now, the board has made a decision, Mr. Saxton has made a finding that supposedly when the LLC changed over to the sole proprietorship, that any leftover deduction credit that was established no longer exists.
Okay.
I 100% disagree. So, but even so, this decision was made by Mr. Saxton in 2016. 2016, until he made the decision that there should be no sales tax credit because there was a changeover on LLC. The BOE in San Francisco and we were still working on getting the credit back. I mean, my accountant was actively involved with Mr. Alexei Begianian in how to implement our credit into the sales tax returns. And he did it. My accountant was told how to do it. He did it, 6 returns. And Mr. Begianian told him exactly how to do it. I was right there with him. And after we sent Mr. Begianian the sales tax returns, 2 days later he told us he cannot accept them. His supervisor would not let him. And when we asked him why, he sent my accountant a note saying, get it in writing. That was his answer. But we then were told how to file it in a different way, and my accountant and him really got into it in writing and in verbally conversation. That is the time when Mr. Begianian caused all the damage to me financially in regards to accounting fees. He is also the person who put the levy on me. Even so, I was actively working with a gentleman named Mr. Grisius in the BOE, trying to find out how much credit do I have left over from this initial $35,000 that Mr. Sexton mentioned.
Time's expired.
Okay.
Okay, thank you. To the department, please introduce yourself for the record. You have 10 minutes.
Good afternoon, Chairwoman Harkey, members of the board. I'm Scott Claremont from the legal department. With me are Robert Tucker and Andre Skitt, also representing staff. Claimant is a sole proprietor in the business of selling and repairing electronics and has held a seller's permit since July 1st, 2012. His claimant has explained he was previously a member of Klammer LLC, which operated a prior business under a different permit, which was closed out effective June 30th, 2012. From a field billing order in 2008, that prior business did have some carryover tax paid purchases deductions equaling approximately $37,000, to which approximately $35,000 were uncredited at the time that business was closed, or unused at the time the business was closed. But as it was explained in the DNR, since that is a deduction that can only be taken against the extent of the tax liability, it wasn't something that survived the end of that business. It's not something that could be taken by a different taxpayer. And so we do agree with that conclusion from the decision or recommendation. The issue now before the board solely relates to the liabilities of the current business. Specifically on August 22nd, 2013, staff issued claimant an NOD based on a compliance assessment for the third quarter of 2012 through the second quarter of 2013. And the department levied approximately $3,300 from claimant's bank account to apply to those liabilities. Claimant eventually filed returns for those periods, as well as non-remittance returns showing liabilities for subsequent periods. And the levy was reapplied to the periods in which claimant reported a liability, periods between the fourth quarter of 2012 through the second quarter of 2015. So in sum, the payments at issue have been applied to self-assessed liabilities reported by claimant on his non-remittance returns. As stated in the DNR, claimant has not set forth any basis for disputing the liabilities for these quarters in which the claim for refund amounts were applied. We do note we did receive claimant's submission, and in verifying some of the numbers on it, we do note that in 2 of the quarters for the claim for refund, he did show a small credit. We checked and we couldn't see that credit was applied prior to the levy funds being reapplied. And those credits you can see on are correctly reported on column J for 3Q12 and 1Q13 of his submission, totaling approximately $4,200 in measure. So if he hasn't claimed those already in subsequent periods, that would be something that he may be entitled to a refund of based on the credits that he did report in the refund period. Other than that, there's no provision of the sales and use tax law that would entitle claimant to recover from the BOE costs associated with reporting tax and filing returns, much less when those costs were incurred by the LLC, a different taxpayer. And there's no other basis upon which the issue of the LLC's tax paid purchases resold deductions would have a bearing on claimant's claim for refund. For all these reasons, with the small exception that I just mentioned, we concur with the recommendation of the Appeals Division the claim for refund be denied.
Thank you. You have 5 minutes, sir, if you'd like to.
It makes no difference what I say. I don't know what to say. I mean, if you have questions, please, I'd be happy to answer them, but I don't have the time to to tell you this entire, it's not a story about, like violin or whatever. It's really the facts. I mean, I have been levied twice for no reason whatsoever. And I stayed one more time as far as I have the paperwork in front of me from the BOE. I do not owe any money. So how can the Board of Equalization come in and levy me for something I don't even owe money? You have, the board has written me a letter. I have a credit of that money. When in July 2012, being asked by Mrs. Kowalik to change over from the LLC to the sole proprietorship. I was already a sole proprietor for 2 years before that. But I was told not to change my sole proprietorship status, so the credit will stay with me. So when Mrs. Kowalik, so the credit can stay on, because if I don't, I'm so sorry. I apologize. This is a condition. I know. I can't.
I understand.
This is not my area. The reason, actually, I need to correct this. The reason why I stayed with the LLC for so long was because I was first told, Mr. Klammer, you cannot close your account as long as you have a sales tax credit. The second you no longer file sales tax returns, the account will automatically close. And then the amount would, of course, go lost. I understand that fact. So you will see in my history, if you have I filed for like 3 years, I filed 0 sales tax returns every single quarter to keep that sales tax return available to me. Then Mrs. Kowalik sees that I'm actually a sole proprietor, but yet I am still filing as an LLC, even so the LLC no longer existed for 2 years. The LLC was shut down already. So she understood the legality about it, that, it's an obvious issue here, and I don't want to get into that right now. But when I changed the LLC to sole proprietorship, I really believe that even if you find any reason to take away that $35,000 credit from me on July 12th, the assumption was still there for everybody at the BOE, including myself, that it still existed all the way through 2016. Hence, if it's still there and it existed, why was I levied? It should have paid for all the taxes occurred for the next, 3 or 4 years, and there should have been no fines and no anything. And I also have here a form to request it's a request for relief from penalty and collection costs for all, because I was given wrongful information by the Board of Equalization as how to file my sales tax returns. And that's actually acknowledged by Mr. Saxton, the attorney, on your side, that I was given wrong information. This is why we agreed that the department gave claimant incorrect and confusing guidance regarding the tax-paid purchases resold deduction.
What page is that? What page are you reading from?
It's the second page on
In the DNR?
Appeals Division Board hearing summary.
Page 2.
It's also mentioned twice in the.
It's the first sentence of the last paragraph of the summary.
Madam Chair?
Yes, I'm sorry. Sure.
I have a couple of questions to the department. In your testimony, you indicated that based on this submission, there are some credits available?
Yeah, when we were reviewing the submission against the actual returns from that period, it did appear that two of them showed not on the total, but they showed where he was claiming a deduction that exceeded the tax liability for those 2 quarters. And so what we did was we moved the levied amounts from those quarters to other periods where he was showing a liability. Just as we did in the initial field billing order in 2008 for the LLC, what we should have done is applied those small deductions to his liabilities and then applied the levied amounts to subsequent periods. Because he did file a claim for refund for those periods.
So is this something, in simple terms for me, is this something on the books that he's entitled to, but he has to do something in order to receive it?
I think with regard to those periods, since they are within the claim for refund that he filed, I don't think there's anything else he would have to do. A caution, like any claim for refund that's granted, it could be offset against other liabilities.
So since he has a claim for refund already filed, you can look to this submission and say maybe not the entire $3,200, but whatever it is on the books he is entitled to.
The measure was $41.91 between those 2 quarters, and we estimate that to be $366 in tax.
So it's $366.
Yeah.
Okay, then my next question is to Appeals Division. Is there anything in the law that will allow this board to cancel the penalties based on bad information provided by the board? Which then, if we cancel the penalty, that penalty could be part of his refund?
As applied here, no, because 6596 would allow the board to relieve tax penalties or interest on the basis of erroneous advice. But the penalties at issue here were for his own self-reported tax, which I believe were non-remittance, and that's what the levy got applied to. So the penalty you would be looking to relieve is not the penalty as to which erroneous advice was given. The alleged erroneous advice is from all the way back in 2008 and following up to 2012 regarding the tax-paid purchases resold deduction. The penalties to which the levy got applied were 2013, or I believe it's 2013 non-remittance return, so that's apples and oranges in terms of the advice. So no, on these facts.
Okay, thank you.
Any other questions, members? Okay, so I just have, so as I understand this, there actually is a $35,000 credit that was not used due to the change in the structure?
Yeah, there was the field billing order of 2008 indicated that there was an unused deduction of $35,818 that the LLC could apply to subsequent periods, but because the LLC closed without applying it, it can't be used by a different taxpayer. We also note that in looking at the records, the LLC also has existing liabilities right now, so I don't know, even if it were a case where it could be applied, I don't know if it would get beyond those liabilities after
Do you
being
know
applied.
what the existing liabilities are, may I ask? I mean, since we're talking about a $35,000 credit to an LLC
Well,
that
it's
can't
a
be used.
35 in measure.
35 in measure, 35,000 in measure?
The current balance for the LLC predecessor, $6,069.24. And if it was possible to apply those tax-paid purchase resold carryover deductions throughout the balance of the period of the predecessor, it would reduce that tax amount to about $461.67. And there's some interest and penalty, but there would still be a balance, but.
Well, can we, I mean, why, I guess, you know, I'm not a tax attorney, but it would seem to me that if we had a credit that we could apply, why wouldn't we apply it? Yes, Mr.
Ms. Harkey, the problem is that it's not a credit, but it's a deduction, and a deduction has to be taken against the sales in that quarter. If it were a credit, we would be able to, but this is a tax-paid purchases resold deduction, and that's the complication that we're faced with.
Okay, then Mr. Tucker, explain to me why he owes tax on that same quarter or on that LLC. What's that from? It's be sales and use tax, would it not?
Yeah, those were subsequent periods in which he filed returns, non-remittance returns showing a liability.
So you can't go backwards and use that?
What should have happened is he should have gone back to his retailer, and he should have gone back to, in this
know.
case, it was Dell.
I know. But we have it still sitting there. It just seems odd that we can't facilitate it in some way to relieve this longstanding issue. Yes, sir, I'm sorry.
Can I just, one paragraph of a letter I wrote to the BOE, Mrs. Helen Jourdain. I said, Helen, I repeat, I am unable to file, not failing to file my sales tax returns. Why? I have to hold off with filing my sales tax returns till someone at the BOE finds an appropriate form that will allow me to file box CPU sales tax returns properly. Nobody. I mean, I have letters and letters. Please tell me how to do it. I have threatened not to file until somebody tells me how I can take that $35,000 and incorporate it into my sales tax returns. Nobody would tell me. I just get it in writing. 4 weeks ago, I asked them how to do it. I asked them outright, I said, how do you incorporate a sales tax credit into a sales tax return? I got a 5-page letter back from them stating me the law. But nobody will tell you how to incorporate it. They don't, there seems to be no example there for anybody at the BOE to tell me how to do that.
Yeah, I know.
Hence, I didn't file the sales tax returns. Looking back now, probably a stupid idea, but that's the reason I didn't file them, because nobody would tell me how to file them, how to incorporate the sales tax credit. And if the sales tax credit really is,
okay,
I don't know how to go. I mean, I don't see it from the legal aspect. I see it from the personal aspect. I'm very sorry. I cannot help.
I understand.
On the legal area,
It is a legal argument. Mr. Tucker, I'm just going to ask you. I personally don't see any way to refund, but I would like to ask, is there some methodology because I imagine we're still probably pursuing the LLC? Are we or are we not?
If it has, the liability hasn't been written off, so.
Okay, the liability's been written off, so it sounds like.
No, it hasn't.
Has not.
It has not been written off.
Right.
Is there any way, is there any way that we can go back and reconcile that somehow? I don't think we can grant this appeal, but I would like to ensure that if there's a credit, or not a credit, but a write-off that could be used towards some other LLC debt, that we actually implement that.
Checking with Mr. Skitt, he has spoken to the other people in the department, and they believe they could apply this amount to the existing liability in the LLC to reduce it. And I think, as Mr. Klammer pointed out, it would be a nominal amount at that point.
That would, I think, grant at least some, shall we say, some justice and some relief here, because I think there's been a lot of confusion in the file. I can tell by what I'm looking at, there's a lot of confusion in the file, and maybe a taxpayer that really didn't have a good understanding of the law, and an audit department or whatever that was a little less than helpful, probably because, who knows, they're probably switching in and out too. It's a difficult situation. So if nobody has another suggestion, I would like to, any other suggestions? I would like to make a motion that we move to adopt staff recommendation on this appeal with the caveat that the department please offset whatever they can as far as liability against the LLC that is still remaining, and get back with the taxpayer and reconcile what we can.
Second.
Okay, motion and a second. Any objection?
Yes.
Just for clarification.
You're double dipping, okay?
No,
But
excuse me.
The department says about $366 as a possible refund to,
That's my question.
but I,
What have we got here? What did you say?
there were some deductions or credits available to the petitioner here, and it result in a refund of $366 if certain forms were filed. So I would like for the department to go ahead.
You
and
want to
run the
amend my
numbers,
motion?
Amend your motion to run through the calculation for the taxpayer so that that refund of $366 is provided.
Okay, and also then to offset any LLC.
I think they're one and the same, Madam Chairman. I second that motion, too.
Okay.
But for clarification, perhaps, you guys had said there was additional liabilities against which that might need to be offset.
Pardon me, that was, for the purposes of clarification, I believe that was for the sole proprietorship, which is separate and distinct from the LLC. So
Right.
they would be able to run that calculation and determine how much of that would be able to be refunded.
Okay, and I just want to be sure I'm clear. The LLC is what had the carryover, whatever. And so we're going to look at the LLC liability, and we're going to offset whatever we can and reduce that liability.
Correct.
Separate and aside from what we're doing on this case, we are moving to adopt staff recommendation with the adjustment made for
For the individual refund of $366.
Yes.
for the individual refund of $366. And I had a second? Good. Have a second. Any objection? No. Such will be the order.
I have no idea what the order is, sorry. You lost me a long time ago.
Well, we're doing the best we can for
I
you,
understand,
given
but-
the
But you
circumstances.
understand you're deciding against each other? Mr. Saxton clearly stated in his finding that the LLC is no longer on the books.
I'm sorry.
He cannot charge it.
We tried,
Yeah, I mean,
okay, as I understand, you have an LLC liability that's still outstanding. You do not want to be pursued for all of that, too. So we're trying to at least offset that and give you what we can on this. Okay, and we apologize. We're sorry. A lot of
I don't think you are.
misunderstanding. Thank you. Okay. Yeah.
Our last hearing for today is item C6, SJCBC LLC. Please come forward.
Word. Look at this. Okay, thank you. Mr. Anjija, will you please introduce the items for this
Madam
hearing?
Chair and members, the appeal before you involves two unresolved issues, which are, one, whether the unreported taxable sales represent gross receipts subject to tax, and two, whether the 40% penalty for failing to remit collected sales tax reimbursement is supported by clear and convincing evidence.
Thank you. Welcome to State Board of Equalization. Please introduce yourself for the record, each one of you, and you will have 10 minutes. Then we will go to the department. They will have 10 minutes to present their case, and we'll be back to you for 5 more minutes on rebuttal.
Perfect. My name is Dave Hodges. I am the accused taxpayer in this issue. With me, I have my attorney, Edie Lehrman, and a witness for me, Liana Held.
Thank you.
So this is going to be kind of fun, trying to shove 8 years into 10 minutes, but I'm going to try to give you the full story. First off, this has caused major problems in my life.
The board has already put liens against me that have caused my personal bank accounts to be seized and closed, and this is all based on an unresolved issue of whether or not SJCBC was a collective or not. I know you've dealt with a lot of cannabis businesses in the past, but this is definitely a different issue. This all started in July of 2009 when myself and a small group of people formed the first cannabis collective in San Jose, the San Jose Cannabis Buyers Collective. When we opened, we were told by our attorneys at the time there was a high likelihood that we'd be raided since we were the first ones in San Jose, and that when it came to the issue of tax, it was really legally undecided, up in the air. A lot of people were paying it in good faith, but there was no law actually requiring a collective to pay sales tax. So we opened up expecting to get raided. Within the first few months, it became very clear that that wasn't going to happen. And shortly after that, we received a letter from the BOE saying marijuana businesses are taxable and that we are required to pay sales tax. So, seeing that we weren't being raided, we decided to grab the shoe boxes full of paperwork and come up with an amount that we should be paying in tax. We then paid the BOE a number I think is somewhere between $13,000 and $15,000. I can't remember exactly, but you have it. We made the payment, and this was a fairly large payment considering this is for our first quarter, and we were the first dispensary in San Jose, or first collective in San Jose. This news really picked up and the press ran with it. So the problem happened shortly after that when we received a letter from the city of San Jose saying we were an illegal for-profit business and our landlord would be fined $2,500 a day. Now, looking for where this for-profit term came from, the only financial information that was publicly available or available in any way, shape, or form was the fact that we had paid sales tax to the BOE. So I went to the local BOE office and said, hey, you guys told me I needed to do this, and now I'm being accused of being a for-profit business because I paid sales tax and therefore I must be selling weed for profit. Do you have any attorneys or anything you can do to help me? And what I was told was, no, we can't do anything like that, but we do have a program called Get It in Writing. So I did a lot of research and even found another cannabis club who had received a refund in the same sort of situation. The difference was it wasn't a collective, it was a cooperative. Cooperative law is very strong in this issue. If a cooperative isn't structured to pay sales tax, it doesn't pay sales tax. So I sent this letter asking, under this scenario, does sales tax apply? And what I got in writing from the board was, under the scenario described above, since there has been no sale of cannabis, there is no sales or use tax due. So with this information, we then filed for a refund. Well, it wasn't a refund. We filed for our first full year because we had made a prepayment on a quarterly payment. So during the first full year payment, we said, well, actually, we mistakenly paid you way too much money. This is the money that we should have paid you for the non-cannabis items that we sold, expecting a refund, like it happened in another cannabis case. Now, the auditors took this information and, based on their misunderstanding of the law, decided that we were not a collective, and therefore we owed sales tax. The main point of contention is this concept that the board made up, has no legal evidence for, which is that a collective member has to be a collective member before the cannabis was produced for it to be a collective. And actually that's completely contrary to appellate court rulings on this issue. There's a very large one called People versus Jackson that happened in 2012 that specifically said collective operations may be limited to purely financial support. So the contention that the board staff is claiming is that we are not a collective because people didn't participate before the cannabis was produced, but that exists nowhere in the law whatsoever. The other issue is when we made the payment, we also set up a register system to track sales tax because this was what we felt was the right thing to do. That system stayed in place until the collective closed in March of 2011. The registers may have been replaced before then with some other ones, but as far as we're concerned, it existed till 2011. That tax money was mistakenly collected based on the board's advice, and it was only after the collective closed that we received the get-in-writing response that said, under the scenario described, there is no sales tax due. Any money that was mistakenly collective has already been redistributed to the collective itself to ensure that we can pay for all the legal fees and everything that's happened up until this point. There's both a case against the city of San Jose that had to go to appellate court and we won it. And then there's this issue that has been going on for about 8 years. What it'll take to resolve this issue, from my perspective, is all sales tax liens that have been placed against me need to be immediately removed. Any money that's been taken out of my personal accounts needs to be returned, and the refund request needs to be granted so that we can pay our attorneys. As far as I'm concerned, this is the last step before we go to court. It would be nice to resolve this issue today, but I am actually qualified as an expert witness on this issue, and I have testified in court on this specific matter in the past. So, court doesn't scare me. In fact, I would love to see it. Go ahead.
Thank you. Good afternoon. I just wanted to bring a couple of things to the attention of the board. One is AB 567, which actually allows for an immunity, specifically addressing the cannabis-related taxes and the new laws that are now being implemented. And that law does cover the period of time for which the board is seeking punishments here in this case. So I would ask that the board take that into consideration. Additionally, I provided a 13-page brief that goes into many of the issues that we're discussing. So I hope that you all received copies of those, and it has exhibits attached. One of the most important cases that I think needs to be addressed is the Vancouver Oil Company versus Henneford, or Morrow v. Henneford case that I cite on the last page of my brief. And in that case, we address retail sales tax, which actually says that in order to be taking the tax, there needs to be a privilege of conducting the business of selling that tangible property. And very specifically, prior to the new passage of McCursa as well as Prop 64, there has never been such a privilege granted. In fact, the State Board of Equalization has been very clear in many of its publications that they're not granting any such privilege. So I think it runs contrary any fees received prior to that time. Additionally, as Mr. Hodges points out, if the court looks at People versus Jackson, there's also People versus Orlowski, which is spelled O-R-L-O-S-K-Y, as well as People versus Colvin. It is very clear that there is absolutely no expectation that a person will join a collective and the cannabis starts to get cultivated at that point in time. That runs contrary to the Compassionate Use Act. The very idea that an AIDS patient who has weeks to live is going to start cultivating cannabis runs contrary to the very reason that this law has been enacted. And so to state and to manipulate the words collective to now say that all of the collective members need to have been cultivated is an issue that's already been decided by the appellate court. And the appellate court has said absolutely not. That is not an appropriate standard to allocate. And the reason for that, I think, makes sense, and it's included in all of the compassionate acts that are seeking to be implemented or that were implemented with these laws. We are coming on a new age where there's going to be for-profit cultivation of cannabis. There's going to be large-scale cannabis production. There's going to be recreational sales of cannabis. And to continue to require collectives that were merely pooling their resources so that they can purchase cannabis is outside the scope of what an actual retail sale is. There's no retail sales happening. If you look at the collective agreement that existed here, it was a purely membership-based collective, and the board continues to harp on this concept that all of the individuals were paying and receiving finished product. That's actually not accurate. Often, most times, when a patient receives cannabis, it is not at its finished stage. They need to remove leaves from the cannabis in order to put it into a state where it can be consumed, and the removal of those leaves has been determined by courts to be part of the cultivation process. Additionally, the law actually says that it is lawful for patients, qualified patients, to associate in order to collectively cultivate cannabis. It doesn't say that all of the patients need to be collectively cultivating the cannabis, and that's never defined. And just one further note that I'd like to point out, and I think the board is aware of that because from reading the new things that have been published on the website, it's very clear that we need to know who needs to pay the tax, and it was never clearly defined. So is it the producer that's responsible for paying that tax? Is it the consumer that's responsible for paying that tax? Is it the group of people that get together and decide that they're going to share some cannabis that's now responsible for paying that tax? And while the new laws are seeking to address those issues, I think it sheds light to the fact that we didn't have answers to these questions here. Thank you.
Okay, the department, please introduce yourself. You have 10 minutes.
Thank you. Good evening, Chairwoman Harkey and members of the board. I'm Bradley Heller with the board's legal department, and to my right are Robert Tucker from the board's legal department and Andre Skitt from the business tax and fee department. The department agrees with the appeals division's conclusions and recommendations as set forth in the petitioner's decision and recommendation and supplemental decision and recommendation, and the department respectfully requests that the board vote to deny the petitioner's petition and claim for refund. The medical marijuana program, as interpreted by the California Attorney General, provides for the collective and cooperative cultivation of medical marijuana and the operation of collectives and cooperatives that distribute marijuana to their members or dispensaries. Sales tax applies to retailers' gross receipts from the retail sale of medical marijuana in California. This is because medical marijuana is tangible personal property, and sales tax applies to retailers' gross receipts from the retail sale of tangible personal property, unless an exemption or exclusion applies. Also, medical marijuana furnished to a person in accordance with the Compassionate Use Act of 1996 is medicine, and this is because the Compassionate Use Act only provides for persons to obtain and use marijuana for medical purposes where that medical use is deemed appropriate and has been recommended by a physician who has determined that the person's health would benefit from the use of marijuana in the treatment of cancer, anorexia, AIDS, chronic pain, spasticity, glaucoma, arthritis, migraine, or any other illness for which marijuana provides relief. And the Compassionate Use Act does not condone the diversion of marijuana for non-medical purposes. In addition, medical marijuana is not currently sold or furnished in a manner that qualifies for the medicine exemption provided by Revenue and Taxation Code Section 6369. No medicine can qualify as an exempt food product under the express provisions of Revenue and Taxation Code Section 6359, and neither the Compassionate Use Act nor the medical marijuana program exempt retail sales of medical marijuana from sales tax. Petitioner, SJCBC LLC, registered for a seller's permit in mid-July 2009, was placed on an annual reporting period, and it began operating a medical marijuana dispensary in San Jose on July 18, 2009. Petitioner filed a return that correctly reported tax on its taxable sales of $132,379 for its first quarter of its first fiscal year of operation. However, petitioner didn't report any other taxable sales or pay any other tax for the 3 remaining quarters for its first fiscal year of operation, and the petitioner did not file a return for its second fiscal year of operation. After reviewing petitioner's Z tapes from its cash registers and performing a site observation test from outside petitioner's San Jose location, the department determined that petitioner is liable for sales tax on an additional $2,126,585 in unreported taxable sales it made during its first and second full fiscal years. The department also determined that petitioner actually collected $89,743,000 in sales tax reimbursement on $970,195 of the unreported taxable sales. The department imposed a 40% penalty on the petitioner for knowingly collecting sales tax reimbursement and failing to timely report to the board. And both the department and the appeals division agree that there is clear and convincing evidence to support the penalty. And this is because petitioner acknowledged that the department informed petitioner that sales were taxable, and petitioner actually changed its registers so that they would start collecting sales tax reimbursement in response to the department's guidance. The sales tax reimbursement was separately stated on petitioner's receipts. The amount collected was substantial, and neither the department nor the appeals division have found any basis to attribute petitioner's failure to report and pay the tax or reimbursement to the board to a mistake or negligence. The department also agrees with the appeals division that it is appropriate to impose a 10% penalty on petitioner for failing to file a return to report its $1,753,722 in taxable sales for its second fiscal year of operation. Petitioner's primary contention is that it did not make sales of medical marijuana because it operated in accordance with the legal department's October 18th, 2010 opinion regarding a group of people who collectively cultivated medical marijuana in a communal garden and own the actual medical marijuana they harvest. However, the department and the appeals division agree that the petitioner sold harvested medical marijuana to its members, and that the petitioner has not met its burden to establish that it operated solely as a group of people who collectively cultivated marijuana and own the marijuana they harvested, as described in the legal department's opinion, and that during the entire audit period. And the main reasons for this is that in every one of the medical marijuana transactions at issue, so these all, were rung up on the petitioner's cash registers, the petitioner exchanged possession of harvested medical marijuana or product made from harvested medical marijuana for a consideration, and petitioner has not shown that each person who received medical marijuana from petitioner in the transactions at issue had participated in collectively cultivating that marijuana and actually acquired beneficial ownership of that marijuana while it was being cultivated and prior to its harvest. The board has consistently advised retailers, including petitioner, that sales tax applies to retail sales of medical marijuana, and the board's legal department has consistently advised the public that tax does not apply to the collective cultivation of marijuana if it does not involve sales of harvested marijuana, since it reached that conclusion in the October 18, 2010 opinion. Therefore, the department is not trying to unfairly change position after the petitioner relied on advice provided by the board. The department is simply requiring petitioner to demonstrate that none of its medical marijuana transactions at issue involve the sale of harvested marijuana, and estoppel does not apply to the board for that reason. Let's see here. In addition, finally, if the board finds that petitioner collected sales tax reimbursement on non-taxable transactions, petitioner must either return that excess tax reimbursement to its customers or pay it to the state under Revenue and Taxation Code Section 6901.5 and Regulation 1700 reimbursement for sales tax. Thank you.
Okay, you have 5 minutes for rebuttal.
Okay, I'm sure my lawyer wants to say a couple things, but let me just touch on a few. So, one, sales tax information from the AG guidelines actually came from the BOE. If you look at what he's referring to in the AG, it says, well, the BOE says so, so it's not actually law. The $2 million or whatever is claimed, the fact is I'm virtually bankrupt. I'm on the edge of filing bankruptcy any moment, so there wasn't a lot of money to go around to begin with, and the audit numbers are really incorrect if you know the whole history of the club. And I guess the last major one is just to point out that the way we operated before the sales tax information was given to us by the BOE was within the state law. And then we received a letter from them saying that we had to pay sales tax which was actually outside of state law, and we modified what we were doing based on their information. So we violated state law based on the board saying this is what you need to do. So we didn't actually get it. We had to shut down the collective before we got the information that said, oh, by the way, you were right to begin with. You should have never paid us. So that's really where all this comes from. Edie?
I'd like to point out to the board that under 11362.775, the law says qualified patients, persons with valid identification cards, and the designated primary caregivers or qualified patients and persons with identification cards who associate within the state of California in order collectively or cooperatively to cultivate marijuana for medical purposes. Now, it is a completely false standard to say that all of the marijuana that was consumed by a certain patient needed to be cultivated prior, or they needed to have it designated to them prior to it being harvested. It's impractical. There's not a single case that references that as a standard. And in fact, this whole concept of having the freedom to associate, if you are a patient and you are sick and you have a few weeks to live, it is unrealistic, and the law is not intended. It runs contrary to the law to take the position that it had to be cultivated prior to harvesting. Furthermore, it doesn't take into account the argument that I said, which is oftentimes patients receive cannabis in a form where they are still curing it, they're still taking parts off of it. That has been determined by the courts to be part of cultivation. So this entire concept of the cannabis having been done prior to harvesting is inaccurate. There has never been a stipulation that the amounts that have been contended here are accurate. The amounts that are being contended are not accurate. They are based entirely in a flawed analysis of a certain time frame where there was basically one facility offering cannabis to some small group of patients in San Jose that went on to be a lot of other facilities that opened to operate differently. And in fact, to extrapolate the numbers from the beginning of these operations is inaccurate. Further,
just one thing I want to throw in there. So what she's talking about, we actually were forced to close, and 70 other businesses opened up at the same time during that period, which is why there was a huge downtake in our sales. The other really important point is how close collective and cooperative law are. So in cooperative law, a cooperative does not pay sales tax. If they go buy a pallet of toothpaste for their members and bring it to distribute to their members, they don't pay sales tax. Costco technically does not need to pay sales tax. They do by choice. So when you're talking about a private group of individuals getting a product to consume and use themselves, that is a cooperative. Cooperative law is very clear. There's some exception that these guys think they have for collective law, but it doesn't exist in the law. In every case where it's been tried to be used, it's been shot down. That's why we're very confident in court.
and I just want to point out also that there are no sales happening here, and the courts have decided that these are not sales. If the board looks at how a lot of these transactions happen, there are reimbursements. Oftentimes, these growers are getting paid after the cannabis has been consumed, and another patient will consume it and they get paid later, and they're simply allowed to be reimbursed for their overhead expenses. This is about to change. This law is changing kind of as we speak. There are things changing about it. There's a bill that's right in front of the governor right now that will change the way that profitability is looked at. And we know that we're about to head into a recreational market. So those things are covered very differently than what the board would be deciding here. And here, if you look at the brief that I prepare, I cite several cases where they flat out say that marijuana transactions that occur in this way are not sales. And the standard that is attempting to be played upon you, for lack of a better term, just isn't the appropriate standard. It's not what is applied, it's not what was intended by the law, and it's not appropriate here.
Thank you. Okay, members. Member Brenner.
I guess let's start with how it is that we in the past have communicated or currently communicating in regards to the taxability of cannabis. First of all, with an issue of a cooperative.
Well, the board website has information on special notices to the industry, and if the board is aware that a business is coded as selling marijuana, I believe that they're on special mailing list to receive.
And what's our assumption on the sale of that product?
What is the assumption?
Mm-hmm.
Well, that sales of medical marijuana are subject to tax.
Okay, that's on a cooperative. Okay,
Yeah.
tell me about a collective.
It would be no different.
I'm not aware of any difference.
Okay.
It's not what they're, it isn't how the business is referred to, whether it's a collective or cooperative. It's whether or not a sale takes place.
And I guess that's where I'm trying to get to at that point. The fact is that at least what we have come to communicate to dispensaries, cooperatives, collectives, is that there is a sale that takes place.
Correct.
And we have determined that the sale of cannabis is a taxable event.
Correct.
Okay. Just a minute. So in that sense, that is how it is that we've consistently handled that since we started communicating, and there was a time that was unclear, correct?
Correct. And I'm familiar with the opinion which they're referring.
Right.
And that's a very unique circumstance in which we would regard that as no sale, but it is unique.
Okay. So in that sense, whether or not in this discussion, whether it's a collective or cooperative, is not necessarily germane to our history in regards to how we apply the tax to sale of cannabis.
That is correct.
Okay. I just want to see if I'm got my head around this correctly. Okay. So I think you're going to make a comment there, I think, at that point.
Well, I've got one for sure. There's a case I'm aware of that was the inspiration for me writing the definition of collective and submitting the argument where they actually did receive a refund from the Board of Equalization, and they were cooperative. That was Farmers Healthcare Cooperative. Because the fact is, if it's tangible personal property, whatever, it's no different, right? You can't say cannabis is different because it's cannabis. So if a co-op is exempt from sales because all their members share equally and they buy something for their members, it doesn't matter if it's cannabis or toothpaste. And that's what the board found and reissued a refund for. So whatever he's saying about the cooperative, that may be what you're communicating, but the law that you've been following, when you get somebody who actually pushes it and understands, hey, look, collective law is this gray area, cooperative law is very well defined. You can't mess with it at all. So if you're going to say you charge tax on marijuana sales in a cooperative, then you have to charge tax on every personal property sold in a cooperative. And that's not the way cooperatives are set up.
Good, let me ask you that. How do we handle, again, I'm trying to think of an example of a different kind of a cooperative, and I'm sure there's plenty up there, I just can't think of one right now. How would we, in exchange, if there was an exchange of personal property within a cooperative that was a bicycle cooperative, how would we handle the sales tax on that issue?
The one that I'm familiar with is REI. I'm a member, and it's a sale of tangible personal property that's otherwise subject to tax. They're otherwise subject to tax. I'm not familiar with the case he's talking about, but from his description, it sounds like they are purchasing tangible personal property and then distributing it. The purchase would be subject to tax. The distribution subsequent to that, it doesn't sound like there's a sale. It would be much like I buy something, I pay tax, and I were to hand it to each of you in this room. There's no sale at that point.
Right.
And there's one.
Just a minute. Okay. So is that complete on that point?
Yes.
I think REI is a good example. Thank you. I think many of us probably are, and we actually pay our due, and we're a member, and we all have our numbers. Okay. So tell me why that's different.
REI is not a California corporation, and under these circumstances, it is a ownership that is amongst everybody. So there's no exchange of the tangible property happening here. At REI, there is a consumer relationship happening, and there is sale tax being remitted, and it is a corporation that operates over multiple states. In this situation, you're talking about a much smaller operated pooling corporation where they're pooling their resources so that they can afford to buy the medicine. There is no transfer of that, and those resources are being used to purchase more medicine for the members, the membership.
So, like for REI, it's a Washington corporation that's actually organized by Washington laws, and it chooses to come into the state of California. And so and the difference between REI, my membership at REI and someone's membership at SJCBC is that when you became a member of SJCBC, the assets of SJCBC were collectively yours based on the membership. And I can't walk into REI and the items that are haven't transferred ownership to me until I actually purchase them at the cash register. So that's a clear difference as how SJCBC operated in an out-of-state cooperative doing business in California.
In addition, I think there's one more store to look at, and that's Costco. And in discussions I've had with board members over the years that I've been dealing with this, it has been told to me Costco is not required to pay sales tax. They do so by choice. So we're talking about legal
When
requirements.
you say board members, you've had that with these board members?
No, people in the board of equalization that I've been working with over the years.
I think they'd be incorrect, but that's okay.
Well,
Okay.
a private member-only organization is what the law is around.
Okay,
think-
thank you. I'm done. Thank you.
Next, anybody else have questions? Member Ma, any questions? No, I just want to clarify, I think we're getting a little bit wrapped around the collective versus whatever. I think what we're talking about here is really the taxing a tangible personal property. And what I'm trying to discern is that the reason that cultivation comes in is because there's no transfer of tangible personal property because it's grown together and together. Can you explain that or go over that with me?
Certainly, Ms. Harkey. I think really at its base, when you go back to the legal department's original October 2010 letter, it really deals with people who join together to grow a plant in a communal garden. And that when they grow it together and they harvest it together, they own what they harvest, and nobody sells anything. Nobody transfers something that's already harvested, that's tangible personal property, to someone else in return for some kind of consideration that we could use as a measure.
In essence, like having a garden in your backyard.
Right.
If
So-
you use that item, it's not a transfer of
Right, so like you and your friend decide to plant tomatoes, right? And you share the cost of the tomatoes, and then you each go home with half of the tomatoes. We wouldn't run in and suggest that you're a bunch of retailers and you've made a bunch of
But
sales
if
of
I
tomatoes.
purchase tomatoes and then I sell those tomatoes,
Right, so, and also if you've already harvested tomatoes and then you're transferring those to someone else in return for consideration, and you're doing this repeatedly for millions of dollars in transactions, those look like retail sales, and you look like a retailer whose gross receipts are subject to sales tax. And in this case, all these transactions were rung up on cash registers. We've seen the taxpayers' Z-tapes. It has the appearance that customers just came in and ordered things off of a menu, paid for what they purchased. So Without, and I would add too that the taxpayer really hasn't provided us any documentation about the sources of the marijuana or where it was grown or when it was grown, if it was purchased or grown by them or not. And we've never really been able to see inside their business model. So we really don't have any way to verify any of the statements that they've made about how they operate or whether there was a transfer for consideration or whether it was a reimbursement of expenses or something. We simply have never received that information. We've just received a lot of legal arguments.
Thank you.
Well, I mean, that's definitely untrue. The collective membership is what defines how a collective works. It's a contract between each member that says, this is how we work, this is what you're subject to. In our collective agreement, it says that you own everything equally with all, as do all members of the club. And it says that from time to time, we may ask you to contribute labor or expenses to cover what the collective needs. This is an agreement that every single person signs when they join. So what we're talking about is none of the product leaves outside the group, ever. The group gets bigger, but none of the product leaves the group.
Can I ask appeals or ask the department one more thing? Excess tax reimbursement. The taxpayer, as my information says, that they had collected sales tax from July of 2009 through March of 2011 and did not remit. Is that true?
That is statements that the taxpayer made during the appeals process.
Okay.
The department did not initially make that determination, has not assessed the taxpayer for collecting sales tax reimbursement for that entire period, and has only imposed the 40% penalty on the period that the department verified during the audit, not the period, the larger period that the taxpayer mentioned during the appeals
Okay,
process.
so that was quite a consideration.
Well, and we did pay some. We paid for our first quarter. So that's not including, we paid for our first quarter, and then the audit is for after that.
Okay,
And
thank you.
the-
Just a minute. Mr. Horton, you had some questions. Thank you.
Thank you, Madam Chair. Question of the taxpayer. Is it your, and my apologies, because this is part of a series of your testimony. I just want to sort of extract this and take a look at it. Is it your testimony that you never sold anything? You simply gave it to your customer, or gave it to your member of your cooperative, and then the member of the cooperative would periodically make donations or some sort of payment towards the cost of growth, to grow it?
They would contribute to the overhead expenses incurred in producing and providing the cannabis. This is the language that listed in our contract.
Is there like a standard amount that they contribute, or how's the amount that they contribute determined?
It's based on their usage, because everybody's going to have a different usage.
So it's based on their consumption?
Yeah, it's based on their consumption. Well, based on the expenses that are incurred by the collective to help them. Right? Any way you want to look at it. The problem with calling it a sale has legal implications, right? So nowhere in Prop 215 does it say that we can sell marijuana, right? So defining the cooperative in a way that was the most legally structured requires that you do not sell marijuana to anybody.
I understand the law.
I just wanted to clarify one thing on what you're saying, sir.
Yes.
I appreciate your comment. I think, though, that I just want to point out sales tax is being remitted at the point of the purchases on the individual levels of the collective members. So, for example, there's fertilizer being purchased at a store in order to go and get the fertilizer necessary for the plant. They're paying sales tax on that fertilizer. There are, at every step when there's a retail sale happening, there are clear designations and clear understanding of all parties participating that the sales tax, when it is a taxable incident, is getting paid. However, in the situation where a group are getting together and pooling their resources, the government wants to argue that, in fact, you can't have a new member join And the only way that that formula works, and it would not be taxable, is when all of the members join, they start pooling their resources, and at that point, once the cannabis is cultivated, they divide it up and everyone shares in that. That's not how the law actually works. If, for example, I decided to have a pizza party and I went and purchased the pizza at the pizza store, I'm going to pay sales tax on the pizza, assuming it's not already baked, and I'm going to bring it home, and Liana and I are planning on sharing the pizza. I might have her give me half of the money for it. Well, if Mr. Hodges shows up and I've already ordered the pizza, is he now responsible for paying sales tax because I take some money from him when he's just giving me the money that I've already paid the pizza parlor? The pizza parlor already has paid the taxes. That's what's happening here. They're purchasing the cannabis. The producer of that cannabis is responsible for paying that tax, and that's between the State Board of Equalization and that person that's producing the cannabis. Now, once that cannabis, and that's one thing that the State Board of Equalization is now defining in the new regulations. They're saying it was never clear who's supposed to pay the tax. It's not clear if the producer's supposed to pay it, if the distributor's supposed to pay it. We don't know who's supposed to pay it, and we need a clear definition. And that's what the State Board of Equalization wrote to the legislature when they're trying to define these new laws. So it's clear that everyone understands there's this misunderstanding, and I just want you to be clear that the sales tax is getting paid. It's just that it's unreasonable that they would have to pay it again.
Well, moving forward, I might suggest that you send a letter to the department delineating all of the different transactions and get a response. It seems to me that the distinction here is that sales tax is a transactional tax, so and you have sales and use tax. But so there are mixed questions that are in your explanation that the department might be helpful if the department can provide just some direction and sort of break it down into the various different categories. When they purchase the items that they purchase, what tax is that? When they sell it and so forth. But let me go back to my line of questions. When you have this cooperative and the individuals sign up to become members of the cooperative, is there, prior to the transaction taking place, is there an agreement that they will pay a prorated share of the cost, and that prorated share of the cost will be determined based on their consumption?
That's one of the ways. They can also work for the collective and earn cannabis that way. And there are, they can also be given cannabis for free if they can't afford it. And the collective has designated some of the cannabis for that purpose under a compassion program. And all of those are allowable under the law.
Did the department observe that to be the case?
Mr. Horton, first, can I really quickly clarify? The taxpayer provided more than one collective agreement, and the agreement that was dated within the audit period does not have any provisions that transfer ownership of the collective's property to its members. The agreement that they provided that's dated in 2012 after the audit period does provide that. So we still, as I said earlier, we don't have evidence that their collective agreement during the audit period even transferred ownership of anything to their members. Do you have, my apologies, Mr. Please continue. Oh, thank you. Just to get to your direct question, though, as I said earlier, we've really been given no records about how they specifically operated or the sources of their marijuana, and we did want to do a site observation test inside the premises in this particular case, but the taxpayer objected for various reasons, and we agreed to just observe from outside the business. So we've really never seen specifically exactly what's going on inside there, and we have no way to verify.
Yeah, based on their testimony, it appears that they, I don't know because I haven't seen any of the facts either. Do you have an agreement within the audit period that basically says that there is an ownership agreement and that the ownership is measured based on some methodology pre-established prior to the actual transaction taking place?
Yes, and then we clarified it further in the new collective. So what he's talking about is there's two different collectives.
I understand.
Which is there's two different collective agreements.
The department has asked for a copy of the agreement that exists during the audit period.
Right, and during that audit period.
Does that exist?
Yes.
And have you made it available to the department?
Yes, they have it. It's worded differently, and it's more clear in the updated version.
And it's the department's, I see them, it's the department's understanding that that's not what the agreement does.
Well, let's just say we would disagree with the way they read the 2000, or the agreement that looks like it's dated during the audit period, and that the other agreement actually contains a whole separate provision that expressly transfers ownership of marijuana to its members. The agreement dated during the audit period doesn't have any express provision like that, and it has some provisions that come out of the the medical marijuana program language, but it really doesn't say anything that specifically transfers ownership of medical marijuana, at least from the legal department's reading of it, does not do that.
Actually,
Well, this is A2C2's, not SJCBC. And we don't have it in our file.
additionally, I disagree. I think that the SJCBC collective agreement does address some of those issues, but there has also been provided to the board a sign-in or a membership sheet that was being kept by the collective that further enumerated some of those rights, and I would be happy to provide those.
Yeah, I don't know after the transaction if that would.
No,
that
that happened
every
prior
time you
to.
walked into the club.
Yeah.
Right? You acknowledged,
When I
we had
say
a
that-
sign-in sheet that every time you walked into the club, you checked a box that said, this is how I was contributing.
Yes, the objective of the question is to determine if you can distinguish the ownership interest versus the transfer of tangible personal property. The ownership interest occurs at the point in time that they become members. And so your analogy that you gave before, if you're a member and, you share with the farm and you help grow the product, and after you have ownership rights, in the absence of that, when it speaks to a transfer for consideration, it becomes a transaction. But
Well, I think I have something that'll clarify that for you, and that's what this whole misunderstanding is under, is the word collectively. In our original contract, it says this is being done collectively. And to our legal interpretation and the way the courts have interpreted that, that's everybody together. So what we did after, in the other collective, was a further page that just spelled that out even clearer, but the original one still had the original language collectively. And our understanding, and this is what this whole case is about, what is collectively? That means we all do it together equally.
Yeah, I don't think that term is a determinative factor in and of itself. And I'm going to go to the department, and thank you, Madam Chair, for your indulgence, then I'm finished.
Okay, is there any?
Well, I just want to hear from the department.
Well, thank you, Chairman Harkey and Mr. Horton. I also just wanted to add, with regard to the membership agreement itself, we're really more interested in the substance of these transactions than just solely documenting the form that there was an agreement. And so we would really the department at least believes we need more evidence just than simply boilerplate language and agreement that says that they've somehow transferred ownership of all of their property to all of their members, to substantiate that no one's shifting their ownership of anything, and that everyone's getting, that everyone who received marijuana in the transactions that were rung up on those cash registers actually owned that marijuana before it was transferred to them for that consideration shown on the register.
Thank you.
Okay, thank you. Any more questions? No, okay. Do I hear a motion? Is there any motion? Are there more questions? I'll just move to support the staff recommendation.
Second.
Any objection? No, okay, thank you.
Awesome. See you all in court.
Thank you. Okay.
I think we did great.
What have we got?
Madam Chair, if I may, let me suggest to the department that they meet with the taxpayer and still provide them with some guidance, even though they may take this matter to court. I'm not disputing that, trying to
Okay.
impede that, but
I appreciate it, Mr.
Yeah.
Horton.
Thank you.
And I'll make sure to reach out. Thank you. Thank you.
I think it'll be helpful.
Okay.
Have a great evening.
Ms. Richmond.
Our next item is an administrative matter. Item O is adoption of board committee reports and approval of committee actions. Item O1 is for the Business Taxes Committee.
Adoption.
Second.
Second.
I
Okay,
haven't
is there any-
seen it, but I just wanted to clarify, what was the motion again?
They have been passed out.
Ma'am?
Right here. The motion was to accept option number one and approve number one, and then on the second action, approve number one.
Okay, good.
Okay, we've got a motion, move to adopt, there's a second?
Second.
Second, okay, any objection? No, okay, thank you.
Our next item is O2, the Property Tax Committee report.
Move to adopt.
I'll second. Any objection? No, thank you.
Our last item on today's agenda is closed session. The members will now go into closed session to discuss settlements and personnel matters.
Okay, thank you. Goodbye. No, thank you very much, members. We are adjourned.